Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets.
Hello. Good morning, all. Good morning, Paul.
Good morning,
how's it going?
sir. Well, I don't know. It's FOMC day. It's all a bit nerve-wracking.
Yeah, sure is. Big day. Lots of things coming up this week. There's a lot to get through, folks. So, Paul, if you don't mind, I'm going to start off with a quick monologue, and then we can take it from there. So let's talk about the news. So today is a big day, FOMC day, 2 o'clock today, Eastern time, and at that time, we'll find out whether there are going to be any interest rate changes or not. Probably not, judging by poly markets and the CNN Fed Watch tool. Looks like no cuts, but there has been a lot of controversy about this meeting because of Donald Trump's intervention at the Fed. There may be some shenanigans going on after in the presser, which follows the announcement. So I'm going to be there. I hope you're going to be there. It's going to be super exciting. And I think it's going to be one of those FOMC days that I think the market leading up into today, because of the controversy and the politics involved around this, could be normally a choppy day, but maybe a lot of chop, a lot of whipsaw type stuff. Be a little bit careful leading up into the meeting. And I suggest you don't take any decisions based on the announcement, but wait for half an hour, because 30 minutes later, JP will be on the podium and we'll be taking questions from press. And that could get juicy. So that's a little bit later on today. And so that's it. And then tomorrow is the jobs report, the normal weekly jobs report, where we'll find out what the jobless claims are. And then on Friday, we've got the non-farm payrolls job report, the big job report, the one that all the markets watch, particularly Forex. So if you're a Forex trader, that's the day of the month that you need to be very careful of. This is going to affect all the markets, stocks, crypto, commodities even, things like oil and gas, and even some of the softs and grains. But our focus is going to be today on stocks, FX, and crypto. And I'm sure Paul will chime in on the drooping Bitcoin, Ethereum, and XRP prices that we're seeing on our charts right now. But that's for a little bit later on. Anything you'd like to add to that, Paul, before I rush into a 10-minute monologue on stocks, crypto, and Forex?
I just want to wish Ethereum a happy 10th birthday. That's what I want to do. And we'll talk about Ethereum a bit later. Just want to wish, and I wish I had some party poppers or something, but the reality is I had the delivery coming on the Ethereum blockchain, and we know it's very slow as it hasn't arrived yet. But nonetheless, happy birthday to Ethereum. But yes, please. We've got to get into what's going on today. So please, let's go. Let's hear it.
Yeah. All right. So let's get my charts up, folks. And then to everyone in the chat, welcome to today. It's a big one. Today and tomorrow, not so much, but Friday, really these 2 days, Friday, Wednesday, that's today. Big numbers coming out of the market. So let's have a look. Now, I put an extra 2 charts on my screen for viewers to see. It's a little bit too small, but we'll expand them. I've got 8 charts up here. Let's start with the dollar, and we'll work through some of the major markets that we're busy trading. Dollar has ticked up again, even in what you might call pre-market today. This is a 24-hour market, so that means little to the dollar. But we've poked up into this resistance level, and actually what I'm going to do is drag this line down to there, and that's where we are. It's a very, very important level on the dollar. It's the over-under flip-flop resistance level. My opinion is that the dollar is going to continue to move down and that we should find some resistance more or less where we are now. Now, we can draw a couple of Fibonacci levels on here. This is just a guideline, by the way, because we're looking at the individual major currencies against the dollar. This is a dollar index, which is an index measuring the basket, a basket of 6 currencies against the US dollar, including the top 3, the euro, the pound, and the Japanese yen. So this is measuring the strength of the dollar against all of those and a few others. So we've got a long way to get up to any sort of Fibonacci retracement in this big, very large move down. So we'd have to look a little bit closer. But in general, this red line, I think, is a good resistance level. And I'm going to draw a smaller, shorter time frame fib just from this last swing high over here to sort of zoom in to where we're currently trading. And you can see straight away that we've reached the 50% retracement of the move from that swing down to the bottom here. And the 50% retracement, although it's not a Fibonacci number, is a pretty good level to be looking at. It coincides with the under-over swing level here. And I think we'll try and find some resistance here. Now, we've got the FOMC later on today, and then we've got NFP on Friday, and other jobs numbers, including the JOLTS job numbers today. So it's all about jobs and interest rates this week, and that's going to affect the dollar. And this chart won't look anything like this in 2 or 3 days' time. It may be a lot higher, or it may be a lot lower. My bet is that we're moving lower on the dollar, and that we should see the other majors tick up. Having said that, let's have a look at the pound. Now, we looked at this yesterday, and I said that we may find support where we dip down into this level, into this conglomeration, heavily traded sort of distribution or accumulation zone. And we're right in it, right as we're speaking. Now, yesterday's candle was a spike low. That green arrow represents where we got into this trade long. That's the 100-period moving average, this white line. And we had a spike low. I'm going to move that candle out of that arrow out of the way so that you can see we've got a spike down, and today we've got a spike up. This is a one down, one up reversal pattern, which you often find at the bottom of trends or at the top of trends. And let's see how we play out today. Now, this chart also won't look anything like it does currently by the time we get to the end of today. It might be a lot higher or it might be a lot lower, but it will move, that's for sure. And this will move even more on Friday when the NFP number comes out, because that's what the Forex market tends to get very sensitive about. So I'm still long on the pound. I think we are busy trying to form a reversal pattern here at the 100-period moving average. It's also a Fibonacci level, not quite. The 786 is 786 fibs just below us, but we did try to almost touch it. So we're in support zone. That's all the best I think we can say. And we do have a nascent one down, one up reversal candle pattern right on top of the 100-period moving average. So I'm long, haven't changed my position on there. And at the same time, let's have a look at another currency pair. That's the euro yen, the tape measure trade that Paul and I have been talking about. This very long extended channel got too long, too skinny, too floppy at the end, and we flopped down through it. The first sign when you look at a channel and you want to sort of decide which way it might break out, because they don't always break out through the bottom. If it's a rising channel, most of the time it will break out through the bottom and vice versa, but not always. But there was a very good excuse me, clue or hint given on this chart that we, after reaching the sort of channel top once over there, we never managed to get back up there again. In fact, we started failing the channel center line and eventually got this tweezer top at the channel center line, failed the channel, retested from underneath. That's where we got short, right at that channel line. We've moved down significantly since then, and actually, pleasingly, broken down through this very nearby support level over here. So that all looks quite good. Whoops. And I have a feeling that we could move quite a lot lower. My general target is 144, and we're trading at 170 something now. So a very, very long way down. And that might seem unrealistic to you, but when you look at this chart, I'm just trying to get back down to here somewhere. Starting off at about 154 and then down to 144. Those are my targets. And these are the levels that Euro Yen's traded within over the last 20 or 30 years in the sort of 140s to 120s. I think we'll try and get back there. This is the weekly chart, big bearish weekly reversal candle. That's what we want to see. And today we want that candle to finish off with a shaven bottom. We don't want any wicks here, really. The smaller the wick is at the bottom here today, at the end of this week rather, because it's only Wednesday today. But if we can finish off this week with a shaven bottom and maybe even a lot lower on the euro yen, that'll set us up for a good move down to 151. Let's call it 164, 154, and then 144. That sort of general idea. So, and the same applies to all the yen crosses, including the dollar yen, and I'm short on that one too. And let me quickly just show you. This is probably the one that most people trade. Most people sort of trade the majors. Let's find a chart. So this is the dollar yen, and we did look at this yesterday. We talked about this crowning pattern. We talked about this major support level down below us. And we also talked about this potential bear flag. There's the bear move down, a flaggy type pattern. Not great, but something like that. And we can draw a parallel channel, just very roughly, something like that. So we have a flag. Are we failing at the sort of channel center line in this flag? Maybe. I'm looking for a breakdown there. And then really the only thing that really matters on this chart right now is whether we can break down and close below 140 yen to the US dollar, and probably that level just below there as well. So very, very key level. And if that does break, this is a very clear crowning head and shoulders sort of type pattern. A crown looks like a head and shoulders because it's more shoulders. It's a mutant head and shoulders, lots of shoulders, and sometimes even two heads. So that's what we've got here, and I think eventually we will break down through there. And my target, very similar to the euro yen, is 1,000 pips at a time. So we're at 148. So down to about 138, 140. That's this level here, and then down to about 128. That's this level here. So 1,000, 1,000, 1,000. Very similar to the euro yen. Sounds a lot, but remember we're trading at 150, 160 yen to the whatever. And so these pips aren't worth an awful lot of money. A pip is not what it used to be on the on the yen pairs. It's got very cheap. A pip is cheap. Now, here's a really important pattern I want to talk to you very quickly about. Let's try not to extend this monologue too long. A lot of people ask about oil. What are we doing with oil? Well, we shorted there and we shorted there. And basically at the 200-period moving average, you poke through it now. It's this yellow line. My general idea on WTI is consistently bearish. We've sold the channel top for over 2 years now. We've sold the 200-period moving average for over 2 years now. We've just done the same thing again. This yellow block here is really important, and I want to illustrate to you why. It's a fair value. You might call this a fair value gap, if you like those sorts of terms. I just call it a liquidity gap, or a space, or a thinly traded zone, or somewhere where the price just blasted through without looking back. And you can see right there, this big bearish candle after the Iran attacks when we recovered, blasted through there. There's no trading in that zone for a long time up and to the left. One candle there, which was also a liquidity gap, really. No real trading in this zone. And if we look back further, you can see we should be trading, we should be pausing, hesitating in this zone, because it's a zone that WTI likes. It's a very, very obvious, highly traded zone. So it was natural that the price got back there. And now that we're here, and we've got this Fibonacci above us as well, that's a 618, I think. We're in this thinly traded zone, cleaning out or adding to that liquidity rather, I suppose. But we are above the 200, which is a concern. I'm going to look to add another short position today at the top of this yellow zone, right at the Fibonacci level, just under $70. And I'm looking for this to move back down to the channel center line now, then the channel bottom, then down to these two arrows at the tweezer bottom, double bottom, and then eventually a breakdown through there. That'll take some time. As you can see, this channel is not a very fast moving one. It's pretty sleepy. So we could just trade all along there for another year or two, and no one would even worry about it too much. So that's oil. Sell the rallies and exit on the dips is my opinion on that. And we've been doing it for a couple of years, so it does seem to be working. And then on Bitcoin, I'll leave this to Paul mostly. Our last tranche we added there, as we talked about last week, on that dip. But most of our position is held way down here at about 85 and a bit thousand. But I have hedged 30% at the top of this breakout range. So I've got my full position there, hedged 30%, and I added another 10% there. So I'm actually only hedged 20%, I suppose. But it's not looking great, folks. And I think we're going to retest that level. I've got a plan now. I've actually got a trade strategy in mind if this does break down. I'm hoping it won't. But if it does, I know exactly where I'm going to be placing my next buy order. And I'll show that to you. Because, and have we run out of internet? No. I'm looking for, come to me. Where is it? So many Bitcoin tickers. I'm looking for. We run out of internet. I think we've got anyway, I can't find it. Internet. Yeah. So I can't find, I'm looking for the Bitcoin futures chart from the CME, but I can't find it. But anyway, this big green candle in the middle of your screen represents, most of it represents a liquidity gap or fair value gap, what we were talking about on the previous chart. The bottom of that gap is actually at the top of the previous candle. And I'm going to, let me clone this line. And I'll tell you exactly what I'm going to do. So the top of that previous candle, so there's the big candle in the middle that created the liquidity gap on the CME. There is no trading in that zone at all on the futures. No. Sure, the rest of the market's obviously busy trading through here. Futures, there's a space, there's a hole, an empty gap. So I think we're going to have to test that. In order to do that, this is going to be super interesting, and I think I've kind of got it pretty accurate. In order to do that, we've got to break down. Looks like we're going to break down, by the way. We're getting lower lows, lower highs, lower lows. Maybe not lower lows, but certainly lower highs. We're going to have to get down through this low here where my green arrow is, down to the top of that candle. The liquidity gap's at about 114,000. Yeah. Maybe it's 13.8, something like that. Yeah. Let's call it 13.8. Yeah, we'll find out sure enough. And then recover after closing that gap. But notice something very interesting. What we have to do in order to do that is clear out that previous low at the same time. And there are an awful lot of stop losses and orders and worry and hope and fear and doubt sitting right there at my green arrow. We're going to have to go through there. And that's going to cause some worries, could cause an overshoot all the way back down to where we were talking about at the breakout level. And that's the consistent story that we've been looking at. However, considering that I'm 30...
With that thing, James, sorry to interrupt you, you're quite right, because once you get down to around the area, what are buyers psychologically going to be thinking? They're going to be thinking, well, we're nearly at the floor, so I'm going to wait for the floor, right? So then you'll start to see a little bit of a cascade. So I completely agree. Yeah, for sure.
Yeah. So if we do break that level, I suppose we'll have to get down there, but don't count on it, because there's also a support level at the bottom of that liquidity gap, which is where I drew this arrow around about here. So that's a bit too slow. So we could clear out that low, not reach the breakout level, but fill the gap and then take off. So my strategy is, just to finish this off, is I've got an order right at the bottom of that liquidity gap to add back on another 10% or remove some of the hedge that I put on slightly low down. In other words, weight it to the long side a little bit more. And I think that might happen at that level, or we may have to reach the breakout level. That's where my order is, and it's in place. It's a limit buy order for another 10%. And then finally, going on to stocks, I'll give you my ideas on this. We've talked about this yesterday. I think we're in a blow-off rally on Nasdaq and the S&P until proven otherwise. And so far, we've been proven correct. I've got 2 long positions on the Nasdaq. I've now hedged those positions right at the top of yesterday's play. Not quite precisely to the penny, but pretty damn close. And I've locked in those 2 long positions fully hedged. And that's about 1,000 points of profit that I've locked in on the Nasdaq. Risk-free, locked in, and I'm pretty stoked, I have to say. I haven't done that on the S&P though. I have no hedge on this trade position, and we are in this position slightly higher up than we were in the Nasdaq. I don't have a lot of profit on here. We got in at 6,200-ish, and we're at 6,370 something. So 150, 170 points of profit on here, and I have the feeling that this is going to 7,000. Not only me, but JP Morgan and Morgan Stanley, and that we'll see an exponential rise up there, and then potentially a big pullback. So I've got my longs open, naked longs on here on the S&P, hoping for this sort of thing. And maybe this week is the week that sparks this all off because of all the data that's coming out with jobs. And whatever is going to happen at 2 o'clock this afternoon with JP and so on, and whatever the press has got to do with it. And I think, Paul, that's kind of the summary of where I stand. Oh, one more thing I have to talk about before I finish off is gold. And I feel rather proud of myself about this because I am slightly vindicated. Many people thought I was a lunatic when I said gold is not going to follow the green path, most likely, but will follow the red path, which seems to have vanished. But breaking down through that, both triangles really, and we've got targets. I've got targets down below, somewhere in the region of 3120 or 3000, and that will take me down to here, that previous swing low over there. Let's just reset the scale. Okay, that previous swing low there, and if that doesn't hold, I think we can get further down to 3000. The big round number, Fibonacci, over under support level, psychological level, etc., etc. I think this will be tough to get through, and I don't even know if we're going to get there because we've got all this data coming out and news this week, and this chart again will look very different in a few hours and days time. But so far, this path's playing out pretty well. Let's make it red, because I can gloat a little bit, because I got flamed on X for saying that this is what we're doing. And when I sold here at the top, I got flamed again, but that's worked out okay. And what I do like about the way we've broken down through there very vigorously is that the approach back up to the underside has been feeble, slow, and lacking any real gusto. And the current candle on this 4-hour chart has flopped down in this very tiny little centipede measuring tape, I suppose, similar sort of pattern. So I think that's just a retest. We haven't quite got even to the underside of that triangle. I think that might be the retest and that we're heading lower. And I will hedge some of it at 3120 and then probably reverse and go long at 3000 or 3120, one of those two levels. I'm not sure. And that's gold.
Well,
and I think I've basically covered most of the markets that might be moving.
Pat yourself on the back for that play. Always, it's a good lesson for people. You know, always chart your own path. Always have your own perspective, for sure. Right, I've got a few questions, James. I thought just before we jump in, but before we do, I just want to announce that we are again today announcing and giving away another $25,000 Forex challenge account.
Wow.
In this session. We're giving it away in about 20 minutes time at 8:15 CT time, if you can make sense of that.
Awesome.
25K Forex challenge account, and we'll be selecting the names over the next 5 minutes or so. So make sure, of course, you have your email attached to your YouTube account. That's very, very important. There's been a couple of people this week already which missed out because they did not have their email attached. And of course, make sure you subscribe to both Hola Prime TV and Hola Prime Global, both on Instagram and on YouTube. And of course, as many people are, thank you so much to everyone is commenting on this live session. I will announce that very, very shortly. A few questions, actually. James, we had a question for you very quickly. How long have you been trading? That was a question.
I started trading in, before the millennium turnover, so 1997. In fact, we were talking about this earlier in the live stream with the Forex Fire guys, and they were talking about, when Forex trading became available to retailers like us. And it was around about that time, about 1997. And there were only two brokers offering Forex trading. I remember them very clearly. One was called Money Garden, or MG Forex, and the other one was FXCM. And I think Oanda came in pretty soon after that. But for a long time, you could only trade Forex with 2 brokers anywhere in the world, with very poor and rudimentary software, huge spreads, like 7 pips on the euro, 12 pips on the dollar yen. It's now about 1 pip. The prices have come down with the competition. They're just a business. Brokers are just a business. They try and make money out of you like everyone else. But yeah, 30 years ago plus, I suppose. Not
Well,
quite.
that is
Just about 30 years. Yeah.
wow. That's fantastic. And I certainly haven't been trading as long as that. But a few questions for me before we jump into Bitcoin. And while all of you in the comments are frantically making sure you've got your email in your YouTube bio, do I trade gold? No, I don't. But digital gold, Bitcoin, I do on occasion, of course, for sure. Am I Spanish? I have strong. That's an interesting question.
Italian.
No. No, I'm not Italian either. But I have very close ties to South America, and my partner is Spanish. So yes, I'm not Spanish, but hopefully in the future. And another question about BTC: will it hit 200K this year, James? I think we're both on the same consensus here that Bitcoin will most likely hit at least 200K this year. Do you agree?
I hope so. Yeah, I hope so. I think at least 160. Paul, you'll be able to tell it. I don't know how the cycles work. I'm not really a cycle trader, so let's know about that. But I don't know if the cycle timing is quite right. I think we may have to dip off before the end of the year. I'm not sure. You can let us know.
Yeah, I mean, look, the cycles have changed, but I my targets are much higher than that for this. We say this cycle, when does that cycle end is in question, of course, but 200K for sure.
Yeah.
People are giving you a bit of shade, James, in the comments, to be honest. People are saying how 30 years is such a long time. I think that's very disrespectful. It's very disrespectful. 30 years,
Yeah.
culture really disrespects experience, right? Seriously, we need to take something from the Asian culture and really, come on, let's show 30 years.
Yeah.
Right.
Yeah. Well, I do feel rather old, but I was listening to I was listening to the chaps in the Forex Fire again this morning. Actually, no, it wasn't them. It was our psychology coaches, and they were saying in order to and I don't know if it's true. You may have heard it. If in order to master a topic or a subject or a skill, to become a real expert, a master, you have to put 10,000 hours of practice into it. Now, I try to figure that out. If you do, if you work on something 5 hours a day, and that's quite a lot. So 10,000 hours divided by 5, that's what, 2,000 days? How many years is that? It's like 8 years. Is that right? 300?
What?
Yeah, about 8 years. So about 8 years, you would have put in about 10,000 hours of learning how to trade if you do it for 5 hours every day of the week. That's a lot of time. But if you're old like me, you've had the time to do it. So that's a privilege. Yeah. And I'm not dead, so that's also a privilege.
Yes, you're not. And I just want to point out that I'm wearing a cap because my hair is grayer than James's. So, throw me some shade too, please. Thank you very much. But can we put my charts up, please? Thank you so much. And let's have a look at what is going on in crypto. Obviously, like all markets at the moment, we are pausing, we're waiting, we're hesitating to wait and see what happens with FOMC. Just waiting for my charts to come up, and hopefully we'll have a look. So it is no one suggesting you should be entering in any trades at the moment, but we may have some good opportunities if we can get through today in one piece without any drama. Just waiting for my charts to come up. Just check I'm sharing, so it's not my fault. Yes, there we go.
Because you're not allowed to say back end anymore. That scared you off, Paul.
Hey, well, you said it.
I said back end. I'm sorry. My fault.
All right, just waiting for my charts. Hopefully they'll come up in a moment and we can jump in, because we didn't get a chance to look at XRP. And of course, because it's Ethereum's birthday, I'd like to just check in and see what Ethereum is doing. Probably getting drunk.
Let's have a look at XRP too.
Yeah.
Yeah.
I'm on the wrong screen.
Yeah.
Am I on the wrong
I think
screen?
the back end may have been. I'll give you some breaking news 1 minute ago if you'd like, whilst we wait for the back end to upload the charts. Just in, President at real Donald Trump announces a 25% tariff on India. That's a big one.
That is
Just
a big
come in.
one.
Just announced.
Okay,
25%.
well,
Now, India cannot afford that. Yeah. Anyway.
yes, and I think that's a recurring story around the globe as well. But we'll look into what the details of that are, and we'll see. But fantastic, slightly sarcastic. Excuse me for that. Right, so on the back of that relatively depressing news, let's just jump straight into Bitcoin right now. We are looking at Bitcoin 15-minute chart. Now, this is the local range we've been trading in. And as you can see, we're right at the bottom of support, essentially. So if you did get a bounce from here, this would be a nice place potentially to get some confluence with your altcoins. But let's just check out another chart, which gives a slightly better perspective. So this is Bitcoin 2-hour chart, and as you can see, we still haven't quite crossed this kind of this line in the sand, which takes us, as James was saying, into this low liquidity, this transitory space, which could bring us all the way back down to 112, and we haven't broken out either. And so we still could go either direction. You could see maybe based on what we hear from FOMC today and other data points, we could see a move up from here. So it's just right now what we'd send with all the markets is they just kind of sit and dribble down a little bit, bleed a little bit while we wait to see what happens. And I think as long as everything is as expected, which is no rate cuts, then everything, of course, will continue as planned. But if we do cross this local support line, you'd expect Bitcoin to come down a little bit. But just remember, I think someone in the comments was talking about Bitcoin wanting to dump. I think the way to look at it at the moment with the amount of buying pressure we've got from Bitcoin is any dip. Nope.
System has gone down.
I'm not there. Okay.
There we go. We're back.
Can you hear me now?
Maybe.
Am I back? Okay. Let's continue. Thanks for that, James. Nothing to panic about. It's a good opportunity when Bitcoin breaks down. We start moving back below 112k, which was the previous all-time high for a few months. Then, of course, that would be concerning. But any move down here would be an opportunity to buy, and that's fantastic. But how is this going to impact altcoins? Now, we were talking yesterday about Uni, and I said that probably because Bitcoin has got a little bit of a retrace in it, that this level isn't going to hold. And look, it's retesting my little red line from yesterday.
Thanks, guys.
So
we're back.
Potentially a good opportunity. There's my little red line from yesterday.
Thanks, guys.
So
we're back.
Potentially a good opportunity. There's a pretty good opportunity with Uni from here, just like with many other assets like Peanut, I think we were looking at yesterday as well. I did say, of course, it wasn't the best trade to come in on because if we lose that moving average, we're coming down. So this is the play with altcoins. You've got to find a setup which allows Bitcoin to do what it needs to do with FOMC today and all the data points, maybe come back down a little bit of hesitation in the market, and then the altcoin then needs to be in a position to now move up. And Peanut, unfortunately, the bullish context is invalidated because now the price action has to come back up and retake the 200 MA. So it's kind of invalidated for now. But with XRP, slightly different game. So XRP is holding its own in the middle of this range at the moment, not where I was suggesting entering, but if we do get a pullback from Bitcoin, then XRP is going to come into this area, which is a brilliant place to come in and buy. So if you're thinking of altcoin longs now, you want to look at something like this, which has a little bit of room to come down, potentially to enter that ideal retracement zone. And like with Uni, it's come down a little bit. It's found it could potentially be finding its bottom here, and then you can enter at that level. So it's always going to be a nice confluence and balance between Bitcoin and what the rest of the market is doing. And also total 3, which we were talking about yesterday, has actually broken down out of this triangle with all the hesitation with regard to FOMC and all of that. So we're going to total 3, which represents the entire cryptocurrency market, minus birthday boy Ethereum and Bitcoin. So it's got a little bit of work to do as well. But all of these dips are an opportunity in a bull market. So we just need to wait and see where we are after today. And then hopefully we've got some opportunities. But remember, for every opportunity, there's a setup which is giving you an opportunity, right, which is lining up with what the market is doing. There's always one like Peanut, which is now invalidated, and you just need to throw away and live to fight another day and just make sure you're with the setup. So XRP could be in your back pocket, for example, as if we have a deeper retrace from Bitcoin, maybe down to 114, as James was saying, then XRP is exactly where you want to be. But again, ask yourself, where do you want the trade to be to enter? And then wait for it. Let the trade come to you, right? Other people are trying to take your money. You want to be, again, that lioness in the long grass, just waiting for the trade. But let's have a look at Ethereum, as it is Ethereum's birthday. And just before I do continue, remember, we are going to announce a winner of a 20K Forex challenge account in about 10 minutes time. So make sure, of course, you're commenting, make sure, of course, you're liking, and you've subscribed to all the appropriate channels, Hola Prime TV and Hola Prime Global, as well as the Instagram handles, and you've got your email in your bio. But let's have a look. So Ethereum, let's zoom in from the 2-week chart because I don't think that's particularly helpful. Let's go to the 4-hour chart and let's see. So what I look for when I'm looking at these things is the basics first. Are we still in an uptrend? Yes, we are, right? So we have a higher high and we're trying to base out. So we could see a move up from here very easily, right? There's not really a topping pattern occurring yet. So if we do get a retrace, draw your lines in the sand, this would be a nice area to potentially come in on, really straightforward, come in there and then look for hopefully a move up from here. But as you can see, like with Bitcoin, this area here where the price action moved up very quickly, if we enter this zone again, then of course the price action may come down just as quickly as it came up. So we're going to be very mindful about what lines in the sand we're looking to hold. But I think Ethereum will be a nice place to come in here for sure, because even if we do come down here, you may get that bearish retest so you can reposition things lower if need be. But looking bullish with Ethereum at the moment, it's at resistance. The sellers have yet to take control. So we could see another leg up, but a move below here to put in a lower low or a move up to put in a higher low could give you a bit of a warning sign over the next few days. But looking like it might be able to weather today quite well. And if we do have some no surprises and everything seems quite bullish for September from the Fed, then we could see a breakup from here. But of course, Ethereum will be always looking for what Bitcoin is going to do. And of course, you can see the altcoin market is a little bit hesitant right now. Question from Liquidity Labs for me, Paul, you only trade crypto? Yeah, pretty much. I only trade crypto. Yeah, crypto's my thing. Crypto's my bag. That's what I do. And there's also a question, do you need to be subscribed to Hola Prime X to win the Forex challenge account? No, you don't. But if you want to get in my good books, yes, you do. Subscribe to Hola Prime X as well, just for the sake of it. James, what's your thoughts on thoughts then on Ethereum at the moment? Just looking at this chart, I'd be very keen to hear what you've got to say about it.
Well, Ethereum, as you have said, is the queen of crypto, and it's holding up rather better than the king or the prince. I would say the prince might be XRP, but what do I know? But just looking at my charts over here, I think here's the thing. So the other two crypto pairs that I'm looking at, Bitcoin and XRP, what's nice about these headphones is I can look away at my screen and you can still hear me. Whereas when you've got a desk mic, you wouldn't be able to hear me. So looking at my screen there, I can see that Bitcoin and XRP have pulled back to the 20-period moving averages, and they've actually gone back down through them, and they're underneath them as we're speaking on the day charts. Whereas Ethereum is about $200 above its own 20-period moving average. So it's holding up really well. And if you look at that chart that you've got on there, Paul, okay, there you go. I don't know if you got, unless I got the wrong, no, I think it's correct. The 20-period moving average should be somewhere below there.
I'm using the 20. Let me change it for you.
Oh, okay.
Change it to the 20. I use the 20.
No, all right. Doesn't matter.
20. Here we go.
Which color is it? Which?
It's white. White.
Oh.
But what time frame are you looking
Ethereum. But that's a 4-hour chart. I'm looking at the day chart.
Day chart. Let's go. Daily chart.
Yeah.
Yeah, there you go. See, there it is. There's the 20.
Yeah. So right here, look how far above the 20-period moving average we are. Yeah. And it's right at that support zone. Whereas Bitcoin is below its 20-period, and so is XRP. Ethereum's holding up rather well. And I do really like that rejection of support off that red block of yours, Paul. Yeah. Where it dipped down and bounced off quite rapidly.
This is the golden zone from this move. So there will always be a lot of people coming in here for sure. But yeah, I mean, it's looking pretty good. And Ethereum, as of course queens in a monarchy do, they tend to, the king is always like, do this, do that. The queen is always the one who's sitting with the people, talking with the people, trying to make sure everything's okay. And if the Queen is making moves, really that's what you want to be paying attention to, because what will happen is Ethereum will make the moves, the rest of the top 10 will move, and then people will start taking profits, and then it'll all cascade down to the top 100. Then it'll start, all the low caps and the mid caps will start moving. So that's essentially how it goes. But for the birthday girl, it's looking pretty good right now. Although just please be mindful, people, that we are right below resistance, right? Significant resistance on higher time frames, right? So if you zoom back out, go like it was, I don't want to be like, Ethereum to the moon, right? It's the birthday, everything's cool. But the reality is that we are, and just get rid of those fibs because they're a bit distracting. We are at the top of this range, but we've moved up so quickly, a little bit of a pullback, and then up we go. Seems quite likely at the moment, as long as nothing terrible happens in the market or today. So yeah, looking pretty good.
We don't want that to happen again, Paul. What happened? Back to that chart on the left-hand side there, sort of 3/4 of the, well, actually the very first rally that took us up to the current level, the very, very first time it occurred, that massive green candle on the left, followed immediately by about a $5,000 drop. We don't want that to happen.
Nearly.
Yeah.
No, we don't. And I think, no, we don't. And I think, but we just look, the reality is that I expected Ethereum to be much higher than this at this point. We've just had risk assets have just had a really terrible time. But you see that the second we get better conditions, maybe with cuts coming around September, everything starts to front run it. So I do want to see Ethereum up here, and it looks poised to make a move as well. And really, we do want to see a bit of a decoupling from Bitcoin as well. If Ethereum can start pacing itself, then that's typically another sign of altcoin season is taking hold, because Bitcoin, the king, starts to lose its power as everyone falls in love with the Queen and the rest of the market.
And the target for Ethereum, Paul, will be double the height of the launch section. From the bottom of the triangle on the left to the top of the triangle. That's the target from the breakout level.
And for me, 10K, this sort of area for a bull cycle altcoin season for Ethereum, that makes about sense. It's very big, of course, but you can see with the measured move that is principally where we could go, 3x, 4x, 5x, something like that. And again, with XRP, this is XRP versus Bitcoin. It's retracing a little bit because it has retraced a little bit, so therefore it's not, but it's still outpacing Bitcoin, principally speaking. And again, the fact that it's just sitting pretty at what isn't particularly strong support, right? Historically, there's not, there's a top there and there's a little bit here, but this is a stronger range to come into. And the fact that it's just sitting there, it's kind of like, come on, Fed, come on, everybody, I'm ready to go, right? Just come on, lower the rates and I'm ready to go. It's kind of that kind of posture, which we need to see. It's had about 50% retrace, 40% retrace, which is pretty much what you want to see from a bullish move. So yeah, but wait for this unless it heads higher.
I think what's going to happen, Paul, today with the Fed is that they're going to say we're not going to change the overnight rate right now, but we'll seriously consider looking at it in September, in the presser after the numbers come out. And I think that might just be enough to spark this market a little higher again.
Yeah, you say that. But it was when you were talking about the Fed meeting to check out the refurbishment last week, you did suggest that there may have been some kind of deal or conversation had as well. And I'm not suggesting Powell seems to be the sort of person who would relent to political pressure, but I don't know. Sometimes you get a sense something we might get a surprise. But again, what we do want to see is stability. September looks like this is where we're going to probably change our minds, because we've already got a couple of people, I think, in the meeting which are very, very keen to drop rates as well. A couple of governors want to drop the rates. So it's going to be a very interesting day. But for your traders, all the traders here, especially those of you who have won some challenge accounts this week and last, be very cautious about making your first trade and make sure you see where the dust settles for this week. And of course, we've got more data points coming later in the week. So, just be very cautious and make sure you have a firm footing on what the news is doing to make sure that there's not a little bit more of a retrace for the market to come before we head higher. But James, do you want to make the announcement today? Do you want to announce the winner? Do you want to have the privilege of doing that?
Sure. Do we have a name yet?
If you
Oh,
check
we
the
do.
comments, you will.
Is that the name?
Yeah. If you, yes, the one which yeah,
Okay.
you'll see it. Yeah, just above. Yeah. So
All right.
yeah, just waiting for.
So
Just
let
want
us
to wait
know
for
when
you to
we've
check.
got to let it roll.
Yeah, we'll just
We'll get ready to announce the winner.
graphic. Yeah, just wait for the graphic. I think that'd be a good idea. Just make sure we've got that.
Cool.
Just see if we've got any questions while we're waiting, just to check
Yeah.
that our good friends are all ready for us to announce, because he's so exciting. Yes, drum roll indeed. Right, we are ready. This is so exciting. All right, James, it's all you. It's all you. Here we go.
All right, fantastic. Well, the winner today of the $25,000 account is Lucky G. Well done, Lucky.
Lucky indeed.
Congratulations. $25,000 trading account for Lucky G. And well done, mate. And Lucky's in the house. There you go, Lucky. It's all yours, mate.
What is?
He says, let's
the
win,
G
but he's won.
Yeah, you have
Yeah,
one.
what does the
Yes,
G
and
stand for?
That's what the G stands for. We don't want to make assumptions, but what does the G stand for? Congratulations. No luck involved at all. We always pay attention to what people are doing.
Well done. Well done.
Fantastic.
We have to
really,
do the
really
Red
good.
Bull. Well done, Lucky.
What have I
Awesome
got?
stuff,
I've
man. Awesome.
Some weird colored lemonade. You know, I definitely should have got some coffee.
Awesome.
Yeah, that's not a bad idea.
So
actually.
we've
Let's
been
get some
giving
coffee.
out winning. Yeah, so there have been winners every day, every single day. We've been giving out trading accounts. So well done, all of those who have won. And just to remind you, if you'd like to be in the draw next week, which we're carrying on with this, you can get into the draw. And all you've got to do is put your name, your email address in your YouTube bio, and just make sure you subscribe to this channel and to the Hola Prime Global channel. Just subscribe to those two channels and you can enter the draw. Just make sure your email address is in the bio. What else do you have to do? And make a few comments and say hi. Tell us who you are, what you're up to, and ask your questions, and you'll be entered into the draw. 25,000 just given away, and there'll be some more next week.
Yeah, absolutely. And this is not a requirement, but like with Emily yesterday, we're really keen to hear how you're getting on. So please, even if it's not this session, and it's some of the later sessions with some of our wonderful colleagues who are doing all this amazing trading stuff throughout the day, of course, let us know how you're getting on. Any obstacles you're facing as well. We're here to support you. We have Discord channels, everything there. So don't just feel like you're on your own. You've won this account, and we are here as a team to support you through whatever means you feel comfortable, either asking us a question on here or trying to get some support on Discord. And you have a wonderful selection of coaches to choose from as well. So if you're not particularly keen to hear from me, or you're not particularly keen to hear from James, for whatever terrible reason, you've got loads of other coaches, of course, you can go to. So you've got your pick. But congratulations, Lucky G. And please let us know, what does the G stand for? I'm really keen to know before we move on. So we've only got a couple of minutes. If you're not drinking and celebrating right now and jumping up and down on the sofa, please let us know what the G stands for. I'm honestly very keen. I'm a little bit obsessive compulsive as well. So don't leave me hanging with that question mark until tomorrow.
Yeah. Liquidation Lab saying, James, 30 years. All right, Liquidation Lab. I know I'm old, but you don't have to go on about it.
What is that?
30 years, long
30
time.
years.
But, I can't help being old. It just happens. It's not something that you try and do. It just happens. You can't avoid it. So, yeah. But well done to Lucky G. I'm super excited. There's so many winning traders this week. I don't know quite how to sort of process it. I think we may have given away like $300,000 worth of trading accounts. So it's unbelievable. Absolutely fantastic.
It is.
Yeah.
It is unbelievable. And we do have a slight answer to what the G stands for. It does stand for, thanks for letting us know. And don't worry if you don't want to tell us, of course, that's for privacy is very important on the internet. But G is obviously the second name, and that's fine. So we'll just leave that there. And Liquidation Labs, I'm pretty sure that's not what the second name is. And I'm not going to read that out live, but thank you for your comments nonetheless. So yeah. Right.
There we go.
Lots happening, and I think if you hang around for the rest of the sessions, there's going to be a lot more information about what's happening with FOMC. But James, final thoughts for the day before we sign off?
Yeah, well, gold's tanking as we speak. Stock market's on the move up, dollar's moving up, gold's moving down, and stocks are moving sideways, so to up, really. Energy is moving up. Natural gas has just collapsed. We're going to have a look at that because we're trading that, not here at Hola. But it's all about the FOMC today and not even really about the number, because I think we all know that it's probably not going to change. So it's all about what Jerome Powell says 30 minutes later, and the questions that he gets asked and how he answers them. And beyond that, how the market and the press and us perceive what he's got to say. I think it'd be super interesting. I'm going to be watching it very closely. But I wouldn't take any large positions right now in preemptive strategy of any sort, because we just don't know what's going to happen. It's literally impossible to gauge. So be careful. Yeah. That's all I've got to say.
Yes. Careful day. But next up is Futures Takeoff. So please stick around for that and keep your comments coming, as the team next are absolutely amazing. Don't miss out. But we'll be back. Me and James will be back tomorrow, as always. And thanks for your support in the comments. And congratulations again to the very lucky G. That's it for now. Take care.
Lucky G. Cheerio. Bye-bye, everyone. Take care.
Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets are...
Hi, I'm Sam, one of the coaches here at Hola Prime. And in this video, I'm going to give you a short glimpse into my life beyond the charts. Outside of the charts, I love to cook. Anything with fresh local ingredients has a thumbs up for me. And when the weather's good, I like to go out, have a quick jog, keep myself healthy. I started trading almost 15 years ago, and believe me when I say, it wasn't an easy journey. There was a lot of ups and downs, mostly downs at the beginning, and it took me, I would say, almost 10 years before I could actually call myself a trader. Personally, I like to travel. I like to go to different places, see different cultures, meet new people. I also like a good spa day, you know, just sit there by a pool, relax, get a massage. You know, you can see from the screens behind me, it's just a lot of stress, a lot of digits, a lot of moving, a lot of fast moving markets. You can't spend your whole day in front of a screen. You will burn out, and sadly, you probably won't be as successful as if you just relaxed a bit more.
Hola Prime, trade with transparency.
Hey, I'm Troy Epperson. I'm one of the coaches at Hola Prime, and this is a little glimpse of me outside or beyond the charts. Outside of trading, I play golf with my son. As you can see, I have a laptop and multiple screens. I've been trading for about 15 years on my own, and about 25 years before that, even, with a lot of interest in the market. I've realized over time that it's not about the strategy or the method, it's about implementing whatever that strategy or method is, which is super, super important to become consistent as a trader. Everybody wants to get profitable and make thousands of dollars a day, literally overnight, but it's about taking those small incremental trades just over time, taking the same boring pattern over and over again that creates that consistency and develops discipline to make money trading currencies, futures, or stocks, or whatever you're trading. Golf is great because the parallels with trading are immense. Discipline, doing the same thing over and over again, getting your setup correct, knowing when to do a layup and when to actually go for it. All of those things apply to trading. Balance is super important and is the edge when it comes to trading. We want to be consistent, but at the same time, you've got to be patient, and you need to be able to reach out and ask a coach a question and never feel guilty about doing that. And there's no bad question. Every question is a great question because it helps you enhance your intelligence and your knowledge of the market. Well, that's a bit about me. I hope to see you soon in a live trading session. And remember, we're just looking for one good trade. And once we find that one good trade, we're going to do it again and again and again. I'll see you then.
Hola Prime. Trade with transparency.
Hi there, my name is Paul, trading coach at Hola Prime, and this is a peek behind the scenes of who I am beyond the screens. I've been a trader for 6 years now, spanning from agricultural commodities to equity indices. My philosophy in life is to keep things simple but not simplistic, and to seek clarity, not certainty. In the trading world, these concepts help me embrace a mindset of valuing action over doubt, staying disciplined, evolving with the markets, and maintaining self-awareness. The road to becoming a successful trader is a winding one, but with each twist is an opportunity to reflect and grow. There are no shortcuts in trading, and as a coach, it is my mission to help guide traders down a clearer path to sustainable trading. As a new trader, sometimes the thought of earnings potential can outweigh focus on what truly matters. Long-term success stems from a system of patience, resiliency, and consistency. Two books I highly recommend that profoundly display these qualities are Mind Over Markets and Reminiscence of a Stock Operator. Outside of trading, I love going to the local beaches and golfing. They allow me to clear my head and have some fun too. Golf is a funny parallel to trade. It requires total concentration, adaptability to changing environments, and the majority of the battle is between your ears. You must have a plan to tackle each hole of the course, combined with sound mechanics to execute each shot. Comparably in trading, plans and strategies are important to build and refine, but precise execution matters equally. That's a brief bit about me. I look forward to seeing you in a live trading session soon and expanding our trading horizons together.
Hola Prime. Trade with transparency.
Unpredictable, volatile, complex. But your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts, we crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
Good morning, everybody. Coach Troy, Coach Tony, and Coach Paul. Hope you're all doing great today. I want to say special welcome to Tony, new coach of ours.
Yes.
So can we get some love in the chat for Coach Tony? We'll go easy on him.
Yeah, thank you. Hopefully we'll bring some more followers over to the platform.
Yes.
Absolutely. Absolutely. That's what we want to hear.
Yeah. How you guys doing this morning? Everything okay?
Markets have just kicked off. All good.
Yeah,
all good.
Everything's great. Good.
Yeah, no, things are good here. Obviously, FOMC, the big thing that everybody's sitting around and waiting for. We'll see if we can't find some, key levels, maybe scalp a little bit, probably expect some chop going into the entire morning. But we'll see if we can't find some good trades.
Absolutely.
Almost on the nose, right in Boston. I'm not going to give out my specific address. I don't want to get swatted. But New England, Boston guy.
Yeah, that's awesome. It's been a year since I visited Boston, but when I was there, I went to the North End and had some of the best Italian food I think I've ever had in my life. On the North End there.
Yeah, they do it right around here. They do a couple things right. They don't do everything right, like the driving and the traffic and the taxes are head for the hills.
What do they call it? The big dig?
Yeah, big dig. 15 years, what was it? 15 years late and probably $15 billion over budget. So, like I said, we do some things right.
Nice. Well, good to have you. Welcome.
Yeah, I appreciate that.
All right. So, just opening. There's very little volume entering the market, I've got to say, for a US Open.
Yeah.
But we are getting a bit of sell aggression now coming in. But again, that's to be expected.
Yeah. We are opening in, just to quickly state, we're opening in yesterday's range on the ES here, literally almost at point of control. Point of control yesterday was 64.07. Value area high is 64.19. Value area low roughly around 6,400. So this is a perfect example of just be patient, let the markets play out a little bit in the morning here, and let's see if we can't see something set up for us maybe after the first hour of the day. But obviously, if something appears on the Nasdaq, we can definitely try and make some trades there. Tony, what do you prefer to trade usually? Are you specific on anything, or do you trade a few things?
Yeah. I mean, I think if you're good at something, right? It's the old adage of if you're good at it, stick to it. Predominantly, pretty much the only financial index that I look at is the Nasdaq. Honestly, guys, I have to say, because watching the stream, I'm like a habitual stream watcher, especially on Hola Prime. I feel like I know you guys already. Paul, I've never ever traded Russell futures. That is something that you'll definitely have to teach me. I don't really know how the market operates. I've never actually met anyone that trades Russell futures, so I'm actually very interested in understanding how you guys kind of look at that. But predominantly, Nasdaq, and then I found over the last 2 years a home in precious metals. So specifically gold and silver. It seems like every single day, especially in the silver market, there's either a push up or a push down, good trend following. And then it generally, the silver market tends to respect well Fibonacci levels, intraday levels, support and resistance. So I've actually, kind of really taking a liking to some of the precious metals trades. Just to kind of go off what you guys are saying, it looks like right at the 9:30 open, Nasdaq pushed right back down to the previous day's close at 23,452 level. Respected it, bounced right off. So we'll see if we can't, figure out where this 15-minute opening range kind of puts the levels for the rest of the day. Obviously, there's lower than expected volume. Everybody's sitting on their hands waiting for the FOMC at 2 o'clock Eastern time. But there should be a couple of good trades this morning. So we'll see. Long-winded way of saying, I trade Nasdaq just like everybody else.
No, that's
Join the
okay,
club.
man. That's great.
Yeah.
And looking at the Nasdaq market profile, also like actually right where we are at the moment was yesterday's point of control. So makes sense that we would trade right up to here. Good catch, bounced right off the close and went right up to point of control. So nothing too crazy at the moment in the Nasdaq, that's for sure. And by the way, I've been looking at the futures on the Russell, but I haven't been trading them yet. So I'm going to be learning how to trade them essentially, but I'm no expert, Tony. But I am learning. I've been looking at them over the last like week or so. And it's been pretty funny actually, because I'm right there with you. It's like, man, I've never traded these before, but sometimes the Russell just gives you opportunity when the Nasdaq and the ES and the Dow aren't giving it to you. So definitely got to keep an eye on it.
Yeah. No, like with anything, when you're trading anything, you got to wait for your trades. Trading with no plan is a recipe for disaster. So that's good.
Exactly.
That's good.
Can we also screen up as well? Anyone who's sharing their screen, just so we can get some charts up. That'd be great. So the back end, just pull up any of our screens. That'll be great. I'm potentially looking at getting into a long. All right, I'm in. All right, I just got into a long. And
all right,
holding it. Yeah, it's a bit of absorption. I'm out. All right, I just took like a 10-second scalp again.
Sam,
I love it.
You got to sit on your hands. You were doing the same thing yesterday, man. Come on.
I know. It's been working out. I mean, the Nasdaq lately, it scares me, this market. So I'm being super cautious. The moment I see one sign, I'm just looking for trapped sellers or buyers. The moment I see them trapped and a bit of aggression comes in from the other side, I'm in. The moment I see a bit of absorption, and it's good that I did because now it's coming back down again. I should have really shared my screen actually, but it happened so quick. I mean,
I tried. I tried to message, but I figured that we were going to be too late by the time you were out. So.
I don't normally scalp that quickly. I mean, back in the days, I would have been stopped out if I didn't get out. So the moment I saw that absorption, I'm out. I'm not taking any chances in this market at this moment in time. It's too
and look at you.
It's
and
just,
you're right.
Yeah. Sure, I'm missing out technically on better trades. I'm missing out on more profit, but if I can, bag $300-400 a day in these kind of conditions, I'm more than happy. And once it calms down, the market gets a bit more directional, and we're out of this long-term range essentially at the highs. Then I can hold a bit more and just do a little bit better. But
yeah, definitely.
I need to calm down.
I'm waiting for that day where Sam moves back to the ES and rejoins me and Daryl sometime. But
I hate to say it, but I think I'm falling in love with the NQ.
Oh boy!
I hate to say it. Like the equivalent trade on the ES would take 2-3 times as long, and there's something. Yeah, you can kind of get a bit of slippage because it moves so fast at NQ, and you have to be really quick to get in and get out. But I don't know. I kind of love how quick it moves. I'm not gonna lie. I used to be very ES, a bit more stable. The order flow was a bit better. There's a lot more volume in the ES, so generally you get a bit more stability. But yeah, scalping the footprint on NQ is actually, I have to say, it's actually quite a beautiful footprint to scalp. I've gotten used to the amount of contracts that are average, and it's nice.
I use the ES footprint to trade the Nasdaq. I've been doing that for a long time. I think the Nasdaq, the footprint is so chaotic because the volume is so small. You know, you're lucky if you get 50 or 60, you know, executions at one price level. It's 3s and 2s and 1s and 5s and all over the place. I mean, that's really hard to follow that order flow. So I don't even look at the order flow on the NASDAQ. I have an order flow set up on the ES, and I literally follow the flow on the ES, but I trade the NASDAQ. So I don't know if anybody else does that, but they're so highly correlated, and if momentum comes into one, it usually spills over to the other.
Yeah. Well, I see in the chat someone asked what trade I was in. I'm already out of it. It only lasted about 10 seconds. But if the back end want to pull up my charts, I'll just go over what I essentially saw.
Yeah.
All right, cool. So let me just double check this. Yeah. Okay, cool. So it was on this candle. I don't know if everyone can see my pointer. But this candle, the 236 my time candle, it's a little bearish one here. As we kind of dip down right on this area of the candle, right at the lower wick, we had a lovely cluster of sellers who just were really failing to kind of get the market any lower. They were trying it. There was a lot of volume coming in, relative to the overall volume. And it just wasn't really going down. And then I just saw a few buyers coming in, so I jumped in and I pretty much got out at the top of the candle around here. And my stop was literally right below, my entry. I'm talking a few ticks is my stop, just where those sellers are. Because if the sellers do manage to push it down, then I was wrong. It's probably not going to go up. It might go up in 5-10 minutes time, but in that immediate few seconds, it's not going to happen. So you might as well get out, like a $30 loss or something. Not a big deal, right? So obviously I was aiming for the high, didn't quite get there, because as we got again around this area here, the reason I got out, same thing happened to the buyers. Large amount of contracts. I've seen 65 on the price level, 50 right above it, 39, 52, all just stacked up here, and they just weren't doing anything. Sorry, I'm going to full screen this. They just weren't doing anything. And also looking at the actual contracts, the executed contracts on the footprint, I saw it go up to 100 and then it dropped down all the way down to 65, indicating absorption basically. And the market just wasn't really pushing through quick enough for that kind of amount of volume that was coming in. So got out instantly. So yeah, really quick 10-second scalp. And yeah, now we're pretty much in a range, really tiny little compact range. And the same thing's happening over and over again. Buyers are getting trapped at the top, sellers at the bottom. You could theoretically do the same thing up and down, but I don't like to push my luck. I kind of wait for a new opportunity to arise. That's a bit different. Because this is a build-up of contracts. There's accumulation going on. And if it wants to break out, it can whip out very quickly. Just like one big candle, boom, all of a sudden up or down. And I don't really want to be stuck in that. So the moment I start seeing it's a range, I generally stop trading and I wait for something else to happen.
Looks like Troy, a bull flag a little bit.
You have any? Yesterday I was saying, Troy. Yesterday was your was like, I feel like a gold mine for you in terms of a short day. How was trading for you yesterday?
Loved it. I had a good day yesterday. been waiting for
Awesome.
that. I wanted to talk about that. Yesterday, I mean, obviously, I've been waiting for this to happen, to have some sort of pullback. And just to give Tony some context, I will short. Usually when Sam says I'm going short, I've already gone click short. I don't need anybody to kind of prompt me to short. I just love the short side. So yesterday, I mean, I've been looking for a pullback, and I think the pullback is not even getting going here. But yesterday we felt there was that feeling of some fear coming into the market. Maybe I better take my profits and get out. And I think we'll continue to see little glimpses of that at the top of this market, because we're kind of topping out. Today, I don't really expect too much because of the Fed, FOMC. Usually, if there's going to be any kind of money to be made, it's going to be in the next hour or so, and then we're going to flatten out and do nothing till the Fed comes out at 2 o'clock. At least that's usually kind of the pattern. But yeah, yesterday, man, I was enjoying myself yesterday. So,
I figured.
Obviously days like
Potentially
today.
shorting.
Yeah, I was just going to say, yeah, definitely.
It's just moved a bit too much. Between those two blue lines, I really would like to short there. It's just moved up a little bit. Didn't quite get there, but I'm seeing a lot of trap buyers. I kind of want a little bit push up, and then I can jump in. I don't want to jump in right now as we already moved down, because that would probably be my TP already. So, that's annoying. It got so... Come on. Just get to those two blue lines. That is the exact gap I want to trade. Nah, I think they're trapped now, these buyers. Oh, that's annoying. Just about missed it. It's not gonna come back up. The problem is, if I get in now, my stop would have to be all the way up here. That's way too big of a stop for the type of trades I'm doing. So I really want it to come back up and really reject back in this area again. Why? Damn it! Damn it! It's just flooded down. Why? Damn, I missed that by what, a tick? Literally a tick, guys. How much is that? 4 ticks away from my entry.
Did I hear this story on Monday?
Joke. I'm going back to ES now. This. I hate the NQ. The NQ falling out.
Can't win them all.
That is annoying.
I'm looking.
I was really
at the
debating
Dow right
it,
now.
just going short. I should have done it. Never mind. Sorry, guys. Carry on. Sorry.
Yeah, actually, you want to here? I'll pull up my charts so you kind of show you guys what I'm looking at. Let me see here.
Yeah.
Let's go out, share this screen. Here we go. All right, can everyone see my screen? I got like 3 charts up here.
We can. Yes.
You can,
Yes.
okay. So obviously on the left, I'm kind of just, macro NQ. And then, like I said, I kind of drill down into whatever I might see just from a high level, right? So I got silver up here in the top quadrant, and then CL down here, looking for a break of structure there. It might be ensuing, but we just want to see a little bit more of a push down there in crude oil. Kind of right now, what I'm looking at is NQ more specifically. That 15-minute opening range was established from 23,452, the low, up to about 23,510. So that's your 15-minute opening range. I actually took a trade, while you guys were talking, kind of just looking for that 15-minute opening range breakout, either to the upside or to the downside. And as you guys kind of saw, Sam was kind of getting caught up in a flush. And it's just kind of one of those things that today it's going to be with light volume. Maybe certain levels aren't respected. It's not going to be, the markets aren't going to behave the exact way that you want. So yeah, you got to keep tight stop losses, tight risk management. And maybe when you're looking for a take profit area, maybe you give yourself, bring it down a couple of ticks. You don't want to be greedy on a day like today. You're kind of just looking for quick get in, get out. So what I did was, like I said, we were kind of coming out of this, these are 15-minute bars. So I'll go into the 5-minute. Again, kind of just like Sam, this trade lasted a minute, maybe less. Just looking, we were approaching that 15-minute upper range towards that 23,510 level, pushed through it, and then kind of topped out. I was actually looking for the take profit to go up, the 23,550s, because that would be about a 50%. It's like a 50% standard deviation from the 15-minute opening range, almost kind of like pivot points on the Nasdaq. And we didn't even get up there. I mean, it kind of just came back in and got squashed. Now we're actually headed lower. So we'll see kind of how things shake out in the next, 5 to 10 minutes. I kind of want a couple more bars to be painted here. Maybe we go back down to that, again, the low of the 15-minute opening range, the 452 area. But obviously that also coincides with the previous day's close, which is that 23,451. So, you're talking a couple ticks away. So probably if we get down there, it's going to be do or die for the Bulls and Bears. So they're probably going to be fighting over that level. Might not be something that you want to step into because it's going one way or the other, just like anything. But that'll be definitely key to kind of see where we end up going, at least for the next hour or so. So that's kind of all I did. My P&L, $270. And take over if anybody else wants to, but I'm in a 50K account and I do not recommend trading minis or, the full scale contract in a 50K account. So stick to micros, and especially on a day like today, like that's the beauty of like trading, is that on days like today, you don't really know what's going to happen. Like I said, maybe certain levels are not going to be respected. So parse back the risk. All you need is a green day. You don't need to make $5,000 or $10,000 today. And if you do, I'd clap my hands and say, great. But I'd also maybe question some of the trades that you took and some of the risk profile that you had on a day like today, especially with, like I said, FOMC at 2:00 Eastern. So that's kind of my thought process just going into this morning. Get in quick. Keep the stops tight, especially if you're scalping, and just see how the market plays out for the morning. So that's kind of just what we're looking at. And then even this candle right here. Yeah, even this candle right here. It's like it's doing nothing. Yeah. Let's double, triple down on this position.
No.
So.
I just want to read out a few comments. We've had a lot of comments since we started, and we haven't really put much weight on them. Robert's back, so good to see you, Robert. We also have Elmer FX. He goes, "Let's go, Coach Tony Montana." So there you go. We have Daryl
if I'm ever down in
Tony,
Miami, then I'll don that. Yeah,
you're Scarface now. So
yeah, sure, yeah. Sorry. All right, let's see.
Everyone is some movie character. It's great. Liquidation Lab has quite a few questions. Okay, let's read out a few of the questions from Liquidation Lab. You've asked many questions, so we might have to skip a few of them. Futures need to get an entry, and it can be cool. I like project. How many contracts I can do in a 25K account? It says on the website how many contracts. If you go to the actual, where you can pick your account and stuff, it tells you the max contracts you can do. I don't know off the top of my head, so I don't want to say a number that's false. But if you go on the Hola Prime website, go to the futures or go to holaprime.com/futures, and where you have the different challenges, it will tell you there. What else have we got here? What's the best time to trade futures? Generally speaking, US market open, from basically 9:30 ET to, I would say, probably 3 hours after that, 3-4 hours. You've got a good kind of window of trading. You can trade the pre-market as well. Just expect lower volume. The market's not going to move as much, generally speaking. Might not be as clear as when the volume is coming in the market. You can kind of make better. I wouldn't say predictions, but kind of you have better confluences. But yeah, generally after US Open, I would say it's the best time to trade the futures. Yeah. It depends what futures you're trading. I mean, I'm talking strictly here NQ, ES, the Dow. Also, you're trading something like gold. Gold moves quite nice in the Asian sessions. I mean, it depends on the pair. It depends on the asset you're actually trading. What else? One mini makes you sweat. Yeah. Mini. If a mini is just a little bit too much, like what Coach Tony said on a 50K account, probably not a good idea to be trading minis. Definitely go more micros. And remember, 10 micros is basically a mini, right? So you can. It doesn't have to be one micro. You can enter with 5 or something or whatever, right? So you can kind of have a bit more flexibility because mini is quite a bit. It's quite a bit.
Yeah. And by the way, for the account challenge question on how many contracts, I went on the website to be able to just pull that up real quick. It's 3 contracts on a 25K, 5 contracts on a 50K, and 10 on a 100K, 15 on a 150. So
beautiful. There we are. Thank you for that, Paul.
Yeah.
Just remember that leverage is a two-edged sword. Leverage helps you when you're making money, and it hurts you bad when you're losing money. So leverage, you better use it be very discretionary and be very careful. I try really hard to only add to winning positions, even though I want to do the DCA. You want a dollar cost average, but that's really not the best way to do it, because when you lose, that leverage really hurts you. If you're winning, have a winning trade and you add to it and it continues to go in your way, obviously that's the better choice. But leverage,
Yep.
Yeah.
It's a necessary evil in the market.
Yeah.
But it could be your best friend and your worst enemy, like Troy said.
That's why we preach the risk management, especially with these accounts. No worries. What you got going?
Yeah, no. So no, obviously, no, exactly what you guys are saying. Troy, Sam, Paul. Risk management is key, especially on days like today. And of course, it's not even that. You don't want to blow up your account with Hola Prime by doing, you can only do 3 and you do 4. Or, you get up to 3, which is the maximum contracts you can hold in a 25K account. And you have something stupid happen, like a fat finger, where it's like, oh my God, I didn't want to buy another contract. So then you just blew yourself up. So, stay away from the edge, So kind of just jump back into some of these charts. I was just, going through a couple more things, kind of looking still. Nasdaq, we're still within that 15-minute opening range, which is these 2 kind of pale white lines. High, low, we're in no man's land. Great. As we start to trend in the next 15, 20 minutes, we'll see kind of hopefully where things are going. Hopefully we get a breakout. Obviously, everyone knows, or anyone who doesn't know, when you're looking for a breakout, especially towards, an upper resistance line or a support line, one of the key things that you want to look at is volume. Volume tells a story, right? So if you see we're trending, say, downward towards this 15-minute opening range low, and we see volume start to pick up, well, it's a good indicator that we're probably going to blow through or punch through that support level and head lower. So, that's a potential trade. If you miss that trade and you want to be a little bit more conservative, just wait. Not taking a position and losing money is a lot better than, not taking a position and losing money is a lot better than, losing money. So just wait. There's always another trade. So yeah, these are kind of just some of the things that I'm looking at, either a break to the upside or a break to the downside. If we do break to the downside and we blow through previous day's close, which, like I said, it's at 451 level, then I'm probably going to be looking for some sort of trend down to this 23,420 area. So that's about 30 points in that trade. So we'll see. Kind of moving on, for anyone that's kind of tired of hearing the Nasdaq talked about so much, crude oil was the other one that I was looking at. Crude has obviously been in an uptrend. There's a lot of headline risk associated with trading crude oil, so you definitely want to make sure your news subscription is paid up for the month. But we kind of broke through this support line that's been ensuing since about 7 o'clock Eastern time. We broke through. Probably what I'm going to look for is potentially this old support level becoming new resistance. And if we do end up rejecting off of this support level, then we'll probably, this is just intraday fib or daily fib, and we'll probably go down to that 38.2 fib level. So I'll look for a trade there. And then what was the other one I was looking at? I was looking at silver again. Oh, terrible chart. Yeah, I know. I got to figure out a good way of explaining this to everyone and what I would have done or wouldn't have done. We had a big flush in silver, precious metals earlier this morning. Again, this is a perfect example of you have key levels identified, you draw some Fibonacci levels, you're looking potentially for that rejection off of your first statistically significant Fibonacci level, and it doesn't happen. You got short here, set a stop loss a couple pennies higher, you would have got wicked. But then, you wait 10 minutes and you would have been right. So you're ripping your hair out left and right. I'm going to stay away from silver today. Like, honestly, it's one of those markets that maybe it's the FOMC, maybe it's some sort of, third-party data, supply and demand metrics. I don't know. Or maybe there's something crazy happening at a COMEX gold warehouse. It's just not behaving the way that I would like to see it behave. So I'm going to stay away. There's always another trade. There's always another market. So we'll go back to NQ and we'll lose our ass. Okay? So. All right. I'm
Man,
done.
I'll tell you what, though.
Silver.
I've said it here on stream before. That is a market that I am not too excited to trade ever. So I have some grudges with silver from the past. So I usually stay away from silver. It's an interesting market for sure. A little bit more whippy. But yeah, and also everybody should be looking at the specs of whatever futures contracts they're trading. So guys, like if silver sounds interesting to you, that's great, but just make sure you look at the specs of silver, because just trading micro silver is a relatively leveraged product, let alone the normal silver's future contract. So at the same time, I was talking about in terms of like a super leveraged or not super leveraged product, relatively speaking. I mean, gold is, has its whips as well, but I think might be a little bit more volume, so it doesn't feel as bad. But yeah, I'm definitely really excited to see some silver trades over the coming weeks from you. You'll see some good ones. Yeah,
I'll get you back in the
exciting.
green. I'll make up your entire year on silver. Don't worry.
Looking forward to it for sure.
Yeah.
And did you see the
Boston,
liquidation lab?
Love that
Liquidation lab was asking, does win ratio matter for profitability? Yeah, I mean, to a degree, of course it does, but basically any sort of win ratio, there's a possibility to be profitable regardless of your win ratio. It just depends on the risk to reward that you have. It's extremely simple and a generic thing to say. I've mentioned it on stream before. There are hedge funds that have employed strategies where they have like between a 15 and a 20% win rate, and they are making boatloads of money. It's just how much can your brain accept being wrong to have the one or two right trades that make it all back and a lot more. So a lot of people's brains, rightfully so, have a hard time dealing with loss. So if you are able to get closer to, like, let's say a 60-40, win to loss ratio or something, maybe you'll be able to handle it better. And assuming that you have better than a 1-to-1 risk to reward, you'd be profitable, relatively speaking. So, but everybody's different. So I'm not going to tell anybody what's win ratio based on their risk to reward that they should have for their respective win ratio and everything. So, but yeah, you just have to know your own brain and emotionally what you are capable of handling. So
yeah, you see that a lot in like the algorithmic trading side. There's like, they always say, like, there's two different types of trading strategies you can have. One that wins a lot, and obviously the wins outweigh the losses, or one that only wins a couple of times. So you have like a 30% win rate, but those wins totally outweigh, the multiple losses that you end up having. So yeah, I mean, exactly what Paul was saying. It's kind of all up to you. Yeah. But of course, like, again, the psychology of trading, and, Hola Prime has done pretty well. I would say it's probably one of the top firms, especially amongst up and coming firms, that actually values the mental aspect of trading, be it mental acuity or, your personal relationship with yourself, and obviously the terrible relationship that every trader develops with the market. Like if you're in a bad headspace and you go in trading, like, I can't even tell you how many times, like, I'm in a bad headspace, go into trading, and you end up losing that day. And it's not funny, but like, it's funny how those types of things play out in the market, right? So,
yeah,
I mean, it's all encompassing.
I think the issue a lot of people have with having like a negative win rate, anything below 50%, I think is like what Paul mentioned as well. Your brain has a hard time accepting it. And then you end up changing your strategy, right, to try and up the win rate. But then you kind of mess up your edge, or you jump to a new strategy, and you never really kind of let your edge play out over enough trades. So it depends on you. Like, it's really hard. I personally prefer to have a higher win rate and a smaller, risk reward. Like, my average win, it's almost 1-to-1. It's a little bit higher than my average loss, but for the most part, you could say it's 1-to-1. But then my win rate's obviously a lot higher than 50%, and that I prefer. That it just feels better to me. But some people, they're happy having a lower win rate but a bigger risk reward. Entirely up to you. Just don't change your strategy when you get on a losing streak, because that will happen. Like, a losing streak is inevitable for every trader. Just do not start changing your strategy, changing the formula. If you've identified an edge, stick to it no matter what. Let the math play out. That's the most important thing.
Indeed.
No, that's good. So yeah, still in no man's land on NQ.
Yeah, I was about to say the same thing, Tony. I was like going to say, like, it's funny, you look at the Dow, the Nasdaq, and the S&P 500 right now. and you look at VWAP, and it's almost like a horizontal line. It's hilarious looking at all three of those markets and their VWAPs. It's just essentially saying everybody's chilling around point of control. Nobody feels like they want to make any moves anywhere necessarily. And it's exactly like you said earlier, Tony. It's just, and we've kind of been harping on it, relatively speaking, the last like day or two. There's probably going to be some just chop before FOMC. People don't, who wants to make huge bets or anything, or who wants to make big trades, add new positions or whatever before a big major news announcement like the Fed rate decision. So it's going to be, it could be, but it'll be boring, but maybe later today after, you know, when we're back here at 2:30 p.m. for that, especially for the power hour, I'm expecting a lot of excitement, a lot of volatility. So I'm sure we'll get to see that later, but hopefully at least we're all in the green this morning. We all have had a decent day this morning, and maybe something will pop up over the next hour. We got a good hour and 40 minutes still. So
yeah, we got.
So for anyone that's looking at crude oil, I mean, when worse comes to worse, just start drawing lines on the chart and maybe hope for something to happen, right? So that's kind of what we'll do here. Maybe we have a rising wedge? Right, sloping upper line and then like a support level below. Is that a rising wedge or falling wedge? Let me know in the chat, and then maybe you too can become a trading coach. Rising wedge or falling wedge. Correct me in the chat. Like I said, sloping upper line. Oh, descending. Okay, all right. So yeah, we came in. Okay, yeah, descending. We came in from the left. We came in rising. Now we have, you know, this pattern emerging. So we should see a break to the upside as we continue on here. This is on the 2-minute crude oil chart. So we'll see. Maybe I'll take a trade in crude oil. I haven't done it in a couple months, actually, because of obviously all the stuff that's been going on in crude and the risk premiums and whatnot. Didn't want to get caught off sides. But we'll see. We'll see if we can't find a trade maybe in crude here.
Yeah.
Sounds good.
I see a question that they actually asked me. The question is from Liquidation Lab. Why do you prefer so many screens? So, first of all, you think of the screens as real estate, and the more real estate you own, the better you are. It's about being able to, like, as an example, Tony's got 3 charts on his screen that we're looking at right now, and they are small. And if you have more monitors, they can be bigger, right? He can have multiple windows open. I think what happens is that over time, you get very accustomed to seeing, like right now, the Nasdaq's going nowhere. So what do? I can sit here and look at the Nasdaq and look at the Nasdaq and look at the Nasdaq, or I can just glance up and see silver, copper, gold, silver again. You then you kind of expand your horizons by having more monitors. Also, I like to have multiple time frames up, so I like to have like a daily chart where I can see the big picture of where the ES is going. And I have another chart that's got the Nasdaq big picture. What's the story there on a daily? And then maybe I'll drop down to a 30 or a 15. My main screens that are directly in front of me are the ones I trade off of, and they're going to be 1-minute charts. But I can instantly glance, here, there, and then see the higher time frames to see if there's confluence with the higher time frame trend versus the 1-minute trend. So more, in my opinion, more is better. That's not necessarily you obviously have to weigh that with too much information, right? We want to keep our charts as simple as possible. We don't want to have 5,000 different lines on each chart. You want to sort of find that happy medium between too much information and not enough information. But for me, particularly on a day like today, You know, I can just glance up and look at the news. I can glance over and look at the YouTube feed. You know, I can glance over and see what Tony's doing on his chart, because I've got lots of screens and can be able to do that. So the other thing is that for, you know, screens used to be expensive. Now you can get a 35-inch curved screen for $180. You know, Costco special, right? And so it's not like it used to be where, you know, you were spending $500 per screen. You know, now you can spend $500 and you get 3 monitors for $500. You know, so it's not nearly as cost prohibitive as it used to be. That's kind of my 2 cents. Anybody else want to jump in on how many monitors you have or use and why?
I think, yeah, I agree with that. I mean, if the back end want to switch to my screen, I'll show you the kind of setup that you would want as a trader. Hopefully it appears. I should be sharing the whole screen.
Don't tell me there's some emojis.
No, there's no emojis.
Oh, okay.
This is the ultimate, you know, if you want to become the best of the best traders, you're going to need a setup like this.
Here we go.
Can you switch to my screen, please? Yeah, so what you want is basically the smallest possible device. Right? What's like that fits in your pocket. You can analyze everything perfectly on this tiny little device here. That's what you want for the trader who trades on the beach and places where you wouldn't normally be trading.
You know, I'll tell you. I kind of I literally share exactly what Coach Troy was saying. If it just depends if too many, like, analysis paralysis can happen if you have too many screens, but basically find the amount of screens to where you're efficient, but at the same time you have the data that you need to be looking at to be able to quickly make a decision, you know, or call an audible or what have you. So, for me, I mean, I have 5 screens, but I generally use 4 of the 5 for like chart related stuff. And I just kind of have them in a square of sorts. So I basically have the Dow, Nasdaq, S&P 500, and like, a third party software for the dome and stuff, or the DOM. And yeah, that's really it. And then I'll flip through like gold and crude and whatnot intermittently, but
yeah, that's it. Oh, come on, Nasdaq, wake up.
I know.
But generally I mean, screen real estate is the more information you can get that's easily like within eye level and you can kind of see it all, is obviously going to be the most beneficial. Do you need 4 or 5 screens to trade? Technically, no.
No.
You could do it with,
No.
I mean, one decent screen, you can technically do it, but it will help you out massively if you just at least have 2 screens, I would say.
Yeah, I use 2 screens.
And a proper,
and I'm sure that you could have.
Yeah, and a proper mouse as well.
Yeah.
Yeah, absolutely. You know, you don't want to be messing around with these little touch pads and stuff. You want a proper mouse. Something nice and ergonomic, you know, so your hand doesn't become completely crippled by the end of the trading day. And
very true.
And also, full disclosure, I am in a crude oil long. We don't have to show my screen, but I am long crude. What was my price? Let's see.
No, go for it.
69.54. I actually lost $40 because I accidentally got short and did not want to do that. So exactly what I said earlier, fat finger, right?
I've done that so many times.
Yeah. So now I'm actually looking to.
It does not matter how long you've been doing this. It's so easy to hit the wrong button, you know?
It is.
It's just
It
part
really
of the
is.
it's part of the game. You can't even sweat it. You know, whoop-de-doo. $40. You get that back in 5 seconds.
Yep.
Can't beat
True.
There should
yourself
be a
up.
warning message every time you hit buy or sell as a market order.
Yeah.
It should be a
Click
warning.
to
Are you
confirm.
sure?
Are you sure?
Please enter your
Are you
full
sure
name.
you want to lose money on this trade?
And you're like, oh my god! Like, hurry up! I just want to get in.
Are you sure you want to lose money? God, that's funny.
That would be the most frustrating thing ever. If a platform introduced that, I would tear my hair out every time.
Yeah, there are certain brokerages that do have that feature where you have to like turn it off because there's like 2 confirmations you have to go through, and I'll tell you what, nothing's
really?
slower than not turning that feature off. So I've been there.
Oh wow. Yeah, no, that's no fun. That's a scalper's nightmare.
Yeah.
I mean, anything longer than like a quarter of a second to execute is already frustrating as a scalper. So imagine.
Yeah.
Imagine having to click a confirm button. Oh dear.
Now I'm interested in crude.
Tony, you said you were in a trade, Tony?
Yeah, still
by
in.
all means. Yeah, back end.
I should
Can
be.
we get
the screen
Tony's...
should be shared here.
Oh,
Yeah.
here we go. Oh, there we go. It's up. Cool.
So I mean, it's like I said, you start drawing lines on a chart. That's what kind of what you get yourself into. So we're down $60 in this one. Let's see. Let me make this full screen for you guys. Minor, yeah. Well, we'll see. I mean, I don't like it, obviously, especially that previous candle. But at this point, maybe you get lucky, right? That's what you hope for. Break even. But yeah, this is kind of still what we're looking at. Let's see how the other markets are behaving. Just go back to NQ.
Also, Tony, when you do get a second, have a look at the Zoom chat when you do get a second.
Oh, sure, yeah.
You'd have to do it now, but whenever you got time.
No, yeah, absolutely. So it looks like NQ is, going up to that 15-minute opening range high. We got there pretty quickly here. See if we can't bust through. And then obviously if we do, then the level that I'm looking for is up there, the 538 level, as long as we can stay above these 510s. And, kind of like what people have talked about, cycling through the different minutes on the chart, whether it's like 15-minute or like 10-minute, kind of just paints you a little bit more of a granular view of what's actually, going on here. So looks like we're breaking to the upside.
We are. I'm keeping my eye on it now.
Maybe let's see, NQ. I think I'll look to get long. Set my stop for just below.
Classic conundrum.
Conflicting, right? We'll see here.
That level you mentioned, Tony, on the Nasdaq, the 23,538 is literally right in line with the value area high that I have on the TPO charts from yesterday.
Gotcha.
So that is a relatively, I would say, relatively important level. I agree with 100% looking at the TPOs.
Yeah. We'll see if we can't just continue to push up to that level, though. Hopefully we don't get squashed here. Oh.
Yeah, like a little
Got
double
stopped
top
out.
occurring at the moment.
I jumped in for a
Damn,
short,
stopped out.
and I'm already out.
Here we go.
Whew, another 10-second trade. Insane.
See, and like that's what you end up kind of going through on a day like this, where it's like, you know, you see some sell volume come in, and those institutions just want to push things back down, and you know, not let any key areas play out in the market really.
Yeah,
and you end up, you know, being back, you know, flat on the day, down $16 after being up 270. So, all we're looking for on a day like this is a green day. All right. Whether it's $10 or it's 10,000, a green day.
That's right.
Still got the whole day ahead of us.
Yeah.
So again,
green is good.
Yeah, exactly. I mean, we got many hours left, and I can imagine there'll be a lot more opportunity. So it's no big deal. But yeah, what I saw. I mean, back end can pull up my charts again. I'll explain what I saw and why I shorted the market for 10 seconds again.
Sam entered the quantum realm, and then he took a trade in the quantum realm, actually, and immediately got out.
Literally, honestly, it's just ridiculous at this point. So exactly at price level 51850, I'll draw a line actually, 51850. So yeah, in this box here, on this bullish candle, we had 274 buy contracts executed right then. And the market went a bit crazy. Kind of went pushed up and then in down. We started breaking below those 274 buy contracts. And then I just saw 90 sellers just come in as soon as we got a bit below it. Mm-hmm. And that indicated those buyers might be getting nervous. They might have got out quickly. I don't think it could be fresh sell pressure, but either way, those buyers are going to be in a very difficult position. They've just opened themselves up for not a lot of risk, but they've basically got themselves trapped at the top. So I jumped in really quick and got out like around here somewhere. I got out when 66 sellers in at 507.50, which is 50. Oh, is that? Where is 507.50? No, that can't be right. Oh, I'm looking at the 5 minute. My bad. No, I got out 511. I was going to say, I was way too high up, too low down. Here it is. Yeah, 61 contracts got in there. It did push down a bit, but it was just a bit up and down, bit wicky. I just, again, grab what you can take in this market because it can flip on you so quickly. Essentially, if you see big numbers in this market, there's a good chance it will do the opposite. So if you see a lot of buyers come in, it's a good chance it's going to reverse on them. And if you see a lot of sellers come in, it's a good chance it will reverse on them. So I'm kind of playing... obviously, I'm still looking, are they effective? If I see a lot of buyers come in, but they're not effective, like right here, what we just saw, 30, 60, 70, 80, 90, or 100 buy contracts entered right from 12.50 all the way up to 17. 100 buy contracts entered at 12.50 all the way to 17. So yeah, in this box area, there's now 100 buy contracts, and look what happens. They got trapped, it rejected, could have jumped in for a quick short, got out again. Do you see what I mean? Mm-hmm. They're trapping volume left, right, and center today. Nice. Yeah, we could flip to your screen. Damn it, I should have taken that. That was brilliant. I was live on stream as well. But never mind. But it's happening all the time. Do you know what I mean? It's happening a lot today. Mm-hmm. So yeah, if you see heavy volume, almost do the opposite within reason. Honestly. Basically. If it starts pushing up and there's heavy volume, then naturally, okay, that volume's actually holding. But if it's doing like those buyers who got in there, lots of buyers got in, you don't even have to look at the footprint. You can just see from the wick alone, they got rejected very quickly. Short all day, jump in for a short really quick. Don't get greedy. Grab $100, $150, get out, done, and wait for the next one because it will instantly again. But yeah,
Yeah.
back end. If
It
you want to get
looks
Paul's screen up.
It looks like I might get stopped out right here on the Dow, honestly. I was looking for a reversal down into the value, like the current value area high of the day. But it's kind of struggling at the moment. I mean, we did have a little bit of an uptrend here, so I am kind of doing some sort of like reversal trade. It's counter trend of sorts. So I have a small stop loss set, nothing crazy. But yeah, we'll see here. I would like to see it pierce through the value area high area of 44,860 if it can, and then once that would happen, I'd be looking to get out at roughly the point of control of the day, which would be 44,815. So I have it at 44,818 at the moment. That's, but you know, within a few ticks of point of control, essentially. We will see, though. Looks like buyers tried just pushing up there on decent volume on the Dow, and they did not succeed that time around, but they might now. They might now. And I think that's, yep, we're going. All right. All right, small little cut there. Take it, no worries. That would have been a beautiful return to POC if that occurred. That was looking juicy for a second there. So was happy to take that trade.
Very nice. Ooh, I just had a alert go off. Back to my charts.
We got the police sirens going on. We got, I was going to say, we got alerts going on all over the place between us.
That was the crude oil inventories at 10:30. I wonder how that affected your trade there, Tony.
Yeah, I actually closed that out, break even. A little bit of deterioration there. After taking that NQ loss, I can't have two positions going against me, so.
All right. I jumped in for another 10 seconds short. I'm already out.
There you go.
Same playbook as I explained before, but this time it went into that exact area. I mean, if the back end want to pull up my charts, I'm more than happy to show it. So those two blue lines, which I was complaining about earlier that we got very close to, and where was it? Yeah, here. And I was like, we're only a tick away. This is what I wanted to short it. We finally got there, which is nice. And 249 buyers were trapped exactly right here. Couldn't push the market up. Exact same playbook as I've been explaining. Pretty much one candle. I got in a little bit later. I did get a bit of slippage. I did click it while we were in there, but I wasn't actually executed until about down here. So that kind of sucked a little bit, but what can you do? And then literally got out at the wick of the last candle. And now buyers are coming in, 112 contracts traded right here. And they seem to be struggling a little bit, but it's not worth a short, in my opinion. They are still above. So they're still in profit, technically, those buyers. So I wouldn't constitute that as a failure just yet. But yeah, just really small shorts or longs. I mean, it can happen both sides of the market. But yeah, just looking for someone trapped, take advantage of their pain, get in, get out, done. So.
Not bad, Sam. Not bad for. I mean, your three. You have three trades on the day, totaling less than a minute, and you're up $400. So, good on you, man. Good on you. I love it. I'd love to be in the market for only 30 seconds and be up $400. So I might need to switch some things around.
The funny thing is, like, most people would be up that amount. It's just most people try and hold Do you know what I mean? Which is
Sure.
good. Like holding, don't get me
can't do
wrong,
it
is
today.
ultimately, but on a day like this, probably best to be really quick out. Grab your money off the table, get out, because it's just so quick to change on you. But most people, I mean, if they've traded, I mean, that's one mini, right? Most people who trade a 1 mini on Nasdaq, they're going to be up $100 at some point. It's almost not guaranteed, but there's a high probability you are. The thing is, they're targeting $1,000 or trying to hold for something bigger, right? So if H has always got out around $100 mark, it's not too bad. And of course, you have to have the same with your exit as well. You can't get out at $100 profit, but then hold $700 drawdown. That doesn't work, right? Like you gotta be as strict on the opposite side too. So
Yeah. Well, it looks like we are consolidating towards the top of the range in both the ES and the Dow, and I have not taken a look at the NQ and the NQ, I guess. So we're at the top of the range, consolidating in all three. That is a weird situation for me. I'm gonna let this play out and see. Maybe I'll be able to take a trade on the Dow again or something soon, once like a direction is picked.
that's one I actually want to try. I haven't tried the Dow ever. Like I've just never traded the Dow. I would might actually go.
I like it.
Sorry, guys, I didn't hear. If anyone said anything, I couldn't hear anything there. It just kind of cut out.
Yeah, I got a little feedback as well there. Not just you.
Yeah.
Yeah. What were you saying though, Sam?
Yeah, I was just saying the Dow is something I actually want to try and trade one day. I've never traded the Dow, and I don't know. I might be pleasantly surprised, because I'm pleasantly surprised with NQ, and I used to be like Robert, who's an all-time viewer of ours when we used to do the streams. I mean, he even said in a comment, "I love it. See how quick you can get in and out of NQ at Sam." Hence why in the early streams, you guys thought I was over trading for the wrong reasons. And I totally get it, like 100% get it. I used to be a die-hard defender of the ES. And don't get me wrong, I still like the ES. But the last couple of weeks since I've been trading the NQ, and kind of, yeah, I get it. It has something about it.
Yeah.
I do get it.
You just like the risk. You like the feeling.
The degenerate inside me. Do you know what I mean?
You're going off the rails.
It's hitting a spot.
Well, it's all about percentages, right? You're trading indexes trading at 23,000 versus one that's at 6,400. A same 1% move in either one. On the Nasdaq, a 1% move is hundreds of points, where a 1% move in the ES is not nearly as many points. So you're getting that leverage of the bigger the index. And so you might actually like the Dow because it's at 44,000. So a small 0.5% move is a giant number of points. So there's just, as traders, we want to go where there is the most opportunity, and obviously the bigger the movement, the greater the opportunity. Dow is only $5 a tick, but so is Nasdaq. But you got to remember that if you go to the Dow, the index is twice as high as the NQ. So the same exact percentage move, you get twice as many points on the Dow as you do on the Nasdaq. And the Nasdaq, you get 4 times as many points as you do on the ES, just from a pure math percentage move. So, you're always going to gravitate towards the movement because that's where we make money.
Yeah.
No,
that's
100%.
that's funny, Troy, that you mentioned that because I was literally going to say to Sam, I think Sam would generally enjoy the Dow because of the seemingly quick moves, because of the amount of points that are being gained or lost, relatively speaking. It's kind of funny, and the spreads are usually 2 or 3 ticks wide. So when it moves, it'll definitely move. It'll gap, 5 to 10 ticks, within 5 seconds. And then all of a sudden you really just start seeing it move up. So I could see Sam liking it.
I can imagine. All right, I'll give it a go one day on stream. First time ever trading.
Yeah, one day.
And might be a disaster, but I'll give it a go. Why not?
Yeah, keep it small and, give it a test ride,
Yeah, exactly. How many dollars per point is on one contract, 1 mini on the Dow? 5. Oh, okay, so same as NQ. Well, that's all right then. Okay, so per ticks, 5. Cool. All right, yeah, I like that. Yeah. Should be good.
Yeah.
I want to get long NQ.
The comments are saying.
I really do. I think everybody else does too. Let's get the whole chat in, see if we can't move the market.
Yeah.
Liquidation Lab says what? NQ is going to take off in the next 20 minutes. Okay, we'll see. Put a timestamp on that. 11 o'clock the hour. We'll take a look, see if it's higher or lower. Nasdaq,
do a little bit of market manipulation.
Very technical. Yeah. Hola Prime entering the chat or entering the market. Let's see. Yeah, we can all do it together. What are we trading? NQ. Yes, we are trading NQ. The agitation. Yes, every day is the agitation, but that's life of a trader.
Yes.
Let's see here. Yeah, for anyone watching the live stream. For anyone watching the live stream, you can get the chat on YouTube, live on YouTube at Hola Prime. So definitely, depending on where you're watching it, whether it's Twitter or however you're streaming it, the chat is in YouTube. We'll respond there.
Bravo
I could
Zulu
tell a little.
Is here.
I could tell a little stock story if you want to hear a throwback to the old days in the '90s. When I used to work for a private equity firm, we had like 20 traders, and we were all in this giant warehouse room. And this is so old that I had a 24-inch tube. The tube monitors, giant, they weighed like 300 pounds each. But what would happen is I'd get into a stock and that was fairly thinly traded, and it would go nowhere. I get real frustrated, and I'd say, I need some help, and I'd shout out the stock symbol. I go, come on, boys, help me out here. And so the rest of the room would put offers to sell. If I was short, they put offers to make it look like there was a whole bunch of sellers. And you'd end up suddenly on the level 2, you'd go from 500 for sale to 500,000 for sale, and it would spook the market or spook the stock, and it would drop down. I'd get out and go, I'm out, and they'd all cancel their sell orders.
Wow.
And we would bully. It was very common to quote bully a stock. Now,
it's like
being
spoofing.
said, but it was spoofing with real orders. Okay, that was the difference.
Yeah.
But one of
the
other things we used to do is when we would see someone else doing that, we would route our order directly to them and hit them. So if they put 15,000 shares and it was on off, they're trying to bully the stock down, we would hit them long, and they would panic because suddenly they're short 15,000 shares, and they'd panic out, and it would actually roll. The market would then roll 50 cents up, and you'd get out with a really quick, easy scalp, taking advantage of that poor guy that was trying to spoof. But that was, like I say, this was very common in the old days. This was in the late '90s. before they really started getting snotty about that kind of activity.
Yeah.
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 The Wild West.
It is funny. It is funny how that works. How like, you know, depending on the decades in which you've traded, how like things have changed. And that's why before we've talked about this on stream too. If you are very interested in like the history of trading, you know, and learning through like people that have traded in, you know, earlier decades and whatnot, reading like Market Wizard books or like Reminiscence of a Stock Operator, getting to see what it was like to trade in the early 1900s or late 1800s. There's even stories from the early 1800s. It's just like some of this stuff is wild to just read about, and then you compare it to modern day trading. It's pretty cool. So
just got into a little long position.
Sam jumped in
really tight. This is lasting longer than 10 seconds, this one. Let's see. Yep, I just see a bit of trapped sellers at the bottom. Just looking for the reaction. Come on, buyers, push it up a bit more. Come on, up. Come on, up you go. Now getting absorbed. I'm out. Long is a bit, short moves a bit nicer, but didn't like that one. They got absorbed instantly up there. I was expecting a bit more of a push up, but it was fine. They didn't really come in with that much conviction. They do now, but yeah, now come in. That's great. Thank you, buddy. It's a bit late, but that's great. Well done. But that was the longest trade I've taken. I think that lasted.
I know you doubled your time.
Oh, this market is disgusting, I'm telling you. It is a filthy market, that's what I like to call it. Filth. Pure filth.
See, and that's the thing, is that, you know, if it wasn't FOMC today, you know, obviously chat, we're talking about Nasdaq here. If you're not in the chat, we're not trading anything else. Let's see. NQ. I would like to get long, of course, but it's just one of those things where it's like, depending on the time frame that you're looking at, whether it's like, you know, a couple minutes, a couple seconds in Sam's case, and you're okay with losing a couple bucks, just, get long, set a wide enough stop loss. But on a day like today, it's just one of those things where it's like, you don't know if it's actually going to play out or not because of the lack of liquidity, because of the gaps. It just makes for choppy trading where you just might see it, you know, a green bar gets squashed down, and then maybe you get a doji, and then it's just the opposite way for the next one. And it's like, great. Had I stayed in or had I not stayed in for 30 seconds, I would have been right. You know, it's just, it's all over the place. So it's frustrating, yes, but understand, chat, it's not like this all the time. Okay. It's not like this all the time. It was kind of a slow week. There were a lot of opportunities Monday, Tuesday. Now on Wednesday, a lot of people are sitting on their hands. Rightly so. So you have like a lack of institutional order flow to come in and kind of fill in some of the gaps that exist in the market. But we'll see. I mean, I'd like to get long here, you know, 23,520 on the NQ, and then see it push up to the 530s. That'd be great. Will it happen? I don't know. Let's just get the magic 8 ball and shake it up. See if we can make a couple dollars.
Oh, I completely forgot to mention to everyone, we are giving away a $25,000 challenge account in this session. So really quick, I'll walk you guys through the rules on how you could potentially win. All you need to do is obviously make sure you're subscribed to this channel, Hola Prime TV, and our main channel, Hola Prime, on YouTube. And also follow us on Instagram. That's Hola Prime TV Instagram and Hola Prime Global Instagram. Leave a comment in the chat. And also, very importantly, guys, make sure your email address is in your YouTube bio. Okay, it has to be in your YouTube bio in order to even enter the competition. All right. So If it's not, and you would like to potentially win a 25K challenge account in this session, which we will be announcing a little later, make sure your email's in your bio. But apart from that, good luck, everyone. Someone is winning a 25K account in this session. Good luck.
Someone's going to go home with the potential to make wealth. Just know that. After that, it's up to you.
Beautifully said.
Yeah.
Yes.
Yeah. Whether or not you blow it up, it's your fault. All right.
Yeah, that's right.
But if you watch a live stream, we'll at least help you make a couple bucks on the market. Come on.
Exactly. Ooh, here we go.
See,
now
exactly.
It's
Look at NQ. Like, unbelievable. And I got this 50K account. So, like, exactly. That's the other thing. Is that, like, you know, you got a 50K account. You got a 50K account, like, you're, like, trading scared. You know, you can't trade scared. Biggest thing.
Yeah.
Okay? Because then you get into a winning trade and you constrict it. You don't make as much profit. Oh, Sam's tracking it.
You can always trade the micro like you're a millionaire. There's no reason why you can't do that.
Yeah.
Right?
Micros. The problem with micros is that they don't adjust for inflation. I need to make more money.
Yes.
Okay.
Yeah.
NQ.
I didn't say trade them forever. I just said trade them while you're doing the 25,000. Right?
Exactly.
It's a means to an end.
Yes. Let's see here.
There's a lot of buyers coming in. If they look like they're trapped and it goes against them and sellers going, you know what I'm doing. All right, so let's buy.
See, I'd like it for NQ to get to that like 538 level. Maybe look for a short, you know, kind of rejection off of there. But once again, like on a day like today, are we going to see that? Is it actually going to push all the way up to the 538s? We'll see.
Sellers are getting absorbed. They're trying it, but they're getting absorbed. So it's not timed just yet. No, it looks like the buyers might actually have this one. This might be a real breakout.
Yeah.
Just keeping my eye on it. Still not confirmed yet, but there's something there. I've got my finger on the sell button just in case. Still getting absorbed.
See if
sellers.
there's any other levels out there.
Still trying to push.
Actually, it looks like that 538, 537. That looks like, what is it? Intraday. Is that the 60? No, it's a 50% intraday fib level is at 537. So, I mean, we might see a little resistance. But like I said, you want it to like push up and actually achieve that level first before we look to get short. But of course, like I say, on a day like today, it's just one of those things where it's like you want it to push up to that level. It should push up to that level. Maybe if there was a little bit more institutional order flow, it would. But we don't.
Mm-hmm.
Maybe we slightly reject off of the approximate level. But that's, once again, it's not a high conviction trade. It's not a trade that I would enter in with a mini. You know, maybe I do like two or three or two micros and then maybe leg in if it was going my way. But again, like on a day like today, it's not something that you should be really doing, legging into a trade, because it could switch on you in 10 seconds. So
yeah,
this is a tough one.
There's liquidity kind of pulled up at the 23,550 area right now on
oh sure,
on the heat map here, like somewhere about like 80-ish contracts in that area, and then above that at 23,560 we've got another 70 or so pulled up there. So I do see that, you know, over the last 40 or 30 minutes or so, we've had offers, like pooled offers, essentially just constantly being taken away and then added at a higher price. So sellers might be getting a little bit wary and thinking, hey, we can get a better price here. It looks like the buyers are stepping into control a slight bit.
Yeah.
So definitely can see a push up here.
The buyers, look, there's a lot of buy volume that came in on that candle, but they haven't exited the market, and they're also defending it very well. So the sellers are trying hard to sell. I can see the sellers coming in, constantly taking a stab at it, but they're getting absorbed very quickly, and they're getting trapped near the bottom. So I wanted to see like a clean kind of. I think the buyers have got this one actually. I think.
Yeah,
they seem to be quite effective at defending that area. So I don't think it's a good time to short, sadly.
The Dow just officially smacked me across the face, flicked me in the forehead. When I got stopped out earlier. It just like went up, 10 to 15 ticks once I got stopped out, and then immediately for the last 25 minutes proceeded down exactly to my take profit. So love to see that. Absolutely love to see it, but obviously kidding. That would have been a great trade for sure. But the Dow is very divergent from the Nasdaq right at the moment.
Oh, really? Nice.
Yeah. The Dow is downward, like big downward pressure, and while I think money's flowing out of the Dow essentially and jumping into the Nasdaq. So even though the biggest components of the Dow are like Microsoft and Nvidia and Apple, but
yeah, I don't like this area anymore.
Yeah, I got short 2 MNQ.
Are still trying. Nice.
Hopefully we get a little push now. I mean, I'm up $32. Taking a page out of Robert's book. Robert in the chat, we see you. I mean, taking multiple MNQ contracts. Yeah, so.
Back end, do you want to pull up Tony's screen?
Ooh, some selling pressure.
Alrighty here. Yeah, so let's see. Everyone sees my screen, right? Or no, not yet.
Yeah.
Yes, we do. Yeah.
Yeah? Okay.
Oh, have you got out the trade already?
I did. I kind of just closed for
okay. Yeah.
What?
Nice.
10 points on NQ. It was one of those things where, again, and this is the other thing about having multiple traders in the chat is that, you hear from Sam, you hear from Paul, and you get their input on your thesis. It can help build conviction, or it can help kind of like, parse things back. That's kind of why I went to MNQ. Okay, so risking down a little bit. Trading those micro contracts. So I short one, like the 539. I short another 540. Set a stop for the highest high. So it was like, 545. And then I hear Sam, chirp up, and we getting some selling pressure, buyers stepping back a little bit. And then obviously, had I stayed in, it would have been a little bit better, maybe $60. But I think I netted $35. Total P&L in the day back to $239. Taking a couple trades, more than I would have liked, but that's how it is today. And if you look at NQ, it's pulling back to the 9 EMA. Not that really means much, but still, if you're trying to identify levels and where it's going to stop and potentially bounce off, we are just about at that 9 EMA. So that's kind of one of the things that I'm also looking at. But again, if you look at my chart here, this is that 15-minute opening range. And, it's 11 a.m. on the dot Eastern time. So we're about an hour and a half in. We've barely done anything. This is kind of just how it is on days like, and then you make a couple dollars, but that's just how things go today. You got to play it safe. You got to look for your spots, look for kind of those A1 setups, and see what opportunities you can find. So let me see. So now my P&L in a day, $239. To kind of go back and look at some of the other markets. Any other commentary, please feel free.
Tony, I must say, actually, it's nice. It's nice to hear somebody, a fellow 9 EMA user. Don't run into them. Don't run into them too often.
I think a lot more people do look at it and they just don't admit it.
Yes. That's so true. I'm a 9. I use like the 921 and the 50 mainly.
I got on the NQ MA9 and then there's a 21 50. I mean, it depends on what I'm doing, what strategy I'm employing on the day, whether it's more of a swing trade, then I'd obviously overlay like the 50 and kind of look for some long-term support resistance levels. But nope, not today. I want to be churning the account here. I want to see if the Hola Prime account can handle all the trades that I have going through the pipe. And then, of course,
guys,
I also want to make some content here. Go ahead.
Just want to mention there's Investi Genix asks, quick question, please. Is there a way I can reduce my contract size below 1 on Project X, trading gold and NQ? Just lost my second 25K account again. So Investi Genix, you want to be trading the micros. So it's a separate symbol, right? So on NQ, it's M. If you just type in M and Q, all right? So M and Q. Mike, November, Quebec. What is Q in the phonetic alphabet? I don't even know.
Queen.
Queen? Is it Queen?
Quebec.
Oh.
Yeah.
Is it? I thought it was Quebec. I don't know. But micro and then micro NQ. Now every one contract is basically a tenth of a standard contract, of a standard mini contract, right? So when you type in, so basically 10 micros is one mini. Okay, so that's how you do it.
Yeah, here, I'm going to get into it. I just got into an MNQ.
Symbol. Yeah. You guys show it, yeah. If you got the screen up.
I mentioned it in the chat as well for him to make sure, because,
lovely.
M and N, the letters, sound so similar.
So, we're in an MNQ contract. So that's a micro. So there's mini, there's micro, at least for the future side. So we're in an MNQ / Mary Nancy Queen. And then the letter U is for the month of the contract, right? So I think U is September. So we're trading the September contract, not to get too technical. We're in an MNQ, and it's great. The Project X, like you kind of just trade from the chart. I'm long, kind of at a statistically significant level. It's the opening range high. That's kind of where I got in. But I set a pretty tight stop loss just for the lowest low of the previous candle, just in case that this is like a new pattern that's ensuing and the sellers continue to push us down. So that's kind of where I'm at right now. So I'm long a statistically significant level, but we'll see if it holds. Let me just switch back here and I'll let you guys know if it stops me out. But this is what we're looking at, chat. This, 23,510 level. We kind of busted through it, which gives me less confidence in this trade playing out. I might set the stop for just to be a little bit tighter. But that's kind of my thinking behind it. So I'm actually set it really tight, because now if we're going with Sam's strategy, we are we're holding for too long. We've been in for a minute and a half, so we're holding for too long. Okay, so I just got stopped out, slight loss, and then look, boom, look at the chart. It's just not working out. So good thing that we set that tighter stop loss, because it looks like things are kind of just going down for the Nasdaq. That level turned out to be not significant. Oh, sorry. Hang on here. /NQ. So this is the mini contract. And again, like these wicks, you know, like every single one has a pretty long wick, which just stops people out left and right. So, you know, you couldn't be right even if you wanted to.
Guys, I'm just going to quickly pop to the toilet.
Okay, yeah.
Got a full bladder.
So again, like
I'll be back in a few minutes.
We'll quickly just kind of see if this level is identified as significant going forward. We'll give it a little bit more time, 5-10 more minutes, and just kind of let this play out here. Okay. Again, we're sitting and waiting.
Yep. I think that is, I mean, as we can tell, that's definitely the name of the game today. It's just like mean reversion. If range trading was a thing, this is essentially what you're looking at. Undoubtedly, got to be patient for the lower and higher ends of the range, it seems. But it is pretty amazing how the ES respected point of control early in the morning and then came up to the value area high and then respected that, and now we're reversing back down into point of control. So the auction process is definitely behaving relatively well. It's just you either have to be sitting in trades for 25 to 30 minutes for them to play out, and be patient, or or be someone like Sam and just quickly get into a trade and let it get you 5 to 10 points or something and be done. So gold right now is gold is just consolidating at the low end of the range today. We saw that it had like a bit of a dive in the morning and in the relative pre-market session dove down, and now it's just consolidating. I'm wondering whether it wants to kind of maybe it'll bounce a little bit before trying to break down a little bit further, but yeah, this is a situation in gold where I would also feel like I need to be patient. I need to wait, or if I'm going to take a trade, I would take a small stab long with my stop below the low a day somewhere. Give me some ticks of room to then maybe mean revert back to the point of control on the day, which would be 33.60 in this session. So
yeah, I hear you. I mean, already you're back to July 8th, July 9th kind of support. So beginning of the month, that 33.54 level, you're 70 cents away. So I mean, if you're looking for some sort of entry into this, it's tough to try to catch the falling knife, as they always say. But what was the news headline? Because obviously it's news driven, right?
Yeah, so let's look real quick. I'm giving it a little scroll through. There's a lot of headlines coming out. Honestly, every minute there's a headline that I see on my news feed. So this might take a while, but a ton about Bank of Canada is going on at the moment, and then Secretary Bessent regarding China.
Okay. What is the micro gold MGC? Yeah, micro gold.
Yeah, you got it.
Yeah. I don't know. It's not a terrible level. What do you think, chat? Should we get long micro gold right now? I mean, it looks like it's an okay level. Even if I got long right here, the 33.54, I'd probably want to see it to go to 33.56, which is that 9 EMA or anywhere close to. What do you think? Should we get long micro gold? We'll be trading like 4 different futures contracts today.
Yeah, I and with this, I'm going to be focusing on gold at the moment right now. What I would prefer to see one of my favorite things to trade is seeing something like a relative pattern of volume play out like this, and then see price on higher volume kind of wick through the bottom on like a 5-minute, we'll say, and then just retrace upwards and close above the previous low and then get long. That's like my favorite, one of my favorite plays to make. And so that's what I would prefer to see at the moment before getting long, but it's moving pretty slow at the moment. So it's
I know.
It's
okay. So you're bearish. I appreciate that. Liquidation Labs. I know that you're seeing me operate here. We're long one micro gold contract down $4. Terrible. But come on, everyone likes an underdog. Like, let's see if it bounces here, let's see. I mean, I set the stop loss, we'll lose $24 on this trade, which is, you don't want to be long a full gold futures contract or a mini contract, because then that would be like $1,500 or something. Or no, maybe 10. It'd be like 250 or something. So we're in the minis. Don't worry. We're in the minis, so we're playing it safe. Just looking for a couple of bucks here. But they're warning me. If I get long, I'm going to get burned. And he's like, yeah, your stop loss is going to hit. Oh my gosh. He's pushing it down. He's trading live. He's trading the live contract, trying to stop me out. Come on, we got the P&L to do it.
Who's trading against you, Tony?
Yeah, I know. We got the whole chat trading against me. They told me not to. But Liquidation Lab, we'll give you some sort of props eventually.
Yeah. He called it.
Come on. See though? It's just one of those.
He's a secret market maker, Liquidation Labs.
Yeah, I know, right? He's doing what Coach Troy
he's
used
Jerome
to do.
Powell's
He's
cousin.
The futures market. Yeah. All right. Let's see. I mean, just looking at some of the other, the other contracts, kind of just see, oof. God, NQ. Bust down.
I'm long with you on the micro gold, by the way, now.
Oh, that's good. There you go. Take a little risk. Come on.
Yeah, no, I'm definitely... I was just waiting for this 5-minute candle to develop a little bit more. We did see a dip, and then buyers stepped in and bought up a decent bit. Not like nothing crazy, but enough for me to, take a little stab at it. And let's just give it a go. And I'm only long one micro right now. If it dips down a little bit more, closer to 33.52, I will probably get long another one as well. So another one or two, actually. Three micros. The chat might know from past sessions, but 3 micros on my 100K Prime challenge account is roughly my full position that I'm capping myself at to have some sort of consistency here on the position sizing. So we'll see. It looks okay right now. It's not too bad.
I'm seeing a potential long on NQ. So Tony, I'm
you're not joking.
The sellers came in just as I said that.
All right, okay. All right.
Wait, the sellers are still coming in. No, it could potentially happen. I'm not seeing buyers come in, that's the only thing, but sellers are definitely trapped. So there is a potential.
I was going to say, I mean, they're trapped no man's land right there. It's like, come on. Keep doing what you want to do. Push it down.
I'm going to hold off on this one.
Again, I would just let it play out. Just let it play out. Let them fight over it. Again, chat, this, if you're trading the 15-minute opening range, 10 minutes ago, this is a 5-minute chart. Here, I'll drill down a little bit more, kind of show you a 2-minute chart. Having the price action hover around the opening range high, some people would have probably been stacking up longs here. But again, with it kind of not respecting that key level and trading below it often, you probably could have gotten a short. We were busy trading or assessing the gold chart, so that would have been a good short. And then of course, there's no way to really. Well, you could have predicted with high certainty that it would have pushed down, but not by that much. Like that would have been a great trade. And then it gets pushed down to pretty much like no man's land. And then you got Sam that comes in, looks at. Are you looking at like level 2 orders coming through? Do you have like an order book that you're looking at?
No, I'm just looking at the executed one. I do have the depth of market open, but I'm purely looking at the delta. Yeah, the footprint delta.
Yeah, I kind of used to look at stuff like that, and then I decided to take a step back because looking at the charts and looking at the screens is detrimental on your eyes for anyone that knows. Blue light blocking glasses. That's a good thing to invest in.
Migraines.
I mean, I think that
honestly, if I trade too much, migraines, man, migraines.
Yeah. Here, Liquidation Labs. I'm down $6. I know it's kind of small on the screen, but in the bottom right, you can see my open positions there. So down $7. We have a stop loss. Remind me if it gets green, because then I'll go out and harvest some of that gain on that 1 micro gold. Actually, let's go back and just take a double take at the chart. MGC. Let's see. Yeah, I don't know. I don't know if
now
I like
I'm looking
that.
potentially short.
Yeah, I know, right? Okay, I'm setting a little bit of a tighter stop loss on that. And of course, I don't like my entry, so I should probably average down, get long another contract. What do you think, chat? Should we get long another MGC gold contract right here? Average our cost down a little bit, or do we think it's breaking down? We got the P&L to do it, so let us know.
Let's get to 33.52.5, and I'm going to add to my position, and it's small risk.
That's my stop. I can't wait for that. That's exactly my stop.
That's funny. That's funny.
Yeah. Yeah, I don't know. My stop loss might get hit. Yeah, I'll make it a little wider. Okay. I don't know, Liquidation Labs. Is it a translation error? He says, Tony, you gonna burn. My account's gonna burn, or I'm gonna burn in hell.
He's
yeah.
You're battling out my Liquidations Lab, so he's just giving you a little bit of friendly banter.
Yeah, there we go. Okay. Chat, we got long another. Okay, this is it. We've made our bed. This is it for MGC. If we get stopped out, it'll be a $32 loss on 2 micro gold contracts.
Come on now. Oh, okay, big. All right. Well,
there it is.
Didn't even get the chance to add there.
Done. Liquidation Labs.
Now.
Round of
applause. Liquidated us.
Yeah. Yeah, gotta stay true to the name. All right, so
wow, look
we're
at
done
that.
with that. Oof. That's why you trade with stops. There you go.
Yes. My gosh.
Making new lows. Okay, won't even bother to look at it because now, zoom out, go to the 1 hour chart on the gold chart. Now we're breaking down early July lows, okay, which were supposed to be support. Those support aren't holding in. So, I mean, it's got room to go lower. I mean, you can look at taking a short. I'm good. Like I said, I'm only looking for, kind of key levels, support resistance areas on stuff like that. So I'm out. Trade at your own risk in that gold contract.
Yeah, I'm going to step away from gold for now. That's for sure.
Yep. All right here.
Yeah, gold is the one instrument that genuinely scares me. I don't know why. I think it's like deep-rooted trauma from when I was a beginner, and gold just completely annihilated me. I don't know. Like, if I have to trade gold, I'll be like shaking and it's the Freddy Krueger of all the instruments for me.
All right, let's see. Check out crude oil.
Man,
looks like it's going to be making new highs here. Oh, go ahead, Paul. Sorry.
Oh no, you're good. I was looking at. I was just like kind of saying. I was like to myself because the the S&P, the ES it ticked at the value area low of 6402, and it bounced up, and the volume is kind of weak though, relatively speaking. So I was looking at possibly getting long, but the volume looks a little shaky. It doesn't look very promising. So I gotta hold back for now.
Nice. All right, guys, the time has come where we announce the winner of the $25,000 challenge account. I hope everyone's listening, because let's get a drum roll. In fact, the winner of today's $25,000 challenge account goes to Liquidation Lab.
Hey,
Liquidation Lab. Congratulations.
Liquidation Lab. Wow.
$25,000 challenge account.
Now you can liquidate our gold trades on a 25K account, man. Congrats.
It's true. Here we go. Good job, Liquidation Labs. I can't believe we're rewarding someone that was trading against me. Unbelievable. No, it's all love. Good job, Liquidation Labs. You deserve it. And for everybody else in the chat, like, come on. Like, these giveaways are happening all the time. All the time. Get active in the chat. Like, let's see some of these trading ideas. If anyone's trading any, like, crazy products, like, some people might want to trade corn today for whatever reason. If it's on the list of tradable products, we'll take a look at it.
Yes.
The only thing that we care about is money.
Love myself some corn.
If the corn futures are paying green money, then we're down. We're down for it.
Money, 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 money.
So in the next session, it'll be like, all right, Paul is long soybeans, Tony's long wheat, and Troy is short corn. Awesome.
Pork bellies.
Pay homage to the global farmers that are watching.
Yeah.
I guess that'll bring a new meaning to betting the farm, right?
Oh,
exactly.
Get long 15 lean hog contracts.
Good old lean hogs.
Yeah. So I mean, with that move down in gold, looks like it's weighing on precious metals. Like you guys see it on the screen here. I'm always looking at silver. I thought silver was kind of going to make a new lower or higher low around that 37.70 level, and it kind of just broke through with that move down in gold. So again, kind of going to stay away from it. Going to stay away from the precious metals at least until after 12 p.m. Eastern time. Then precious metals, they kind of go into the close, and the volume profile changes significantly like after 12. But then, of course, can't forget, right, the main event of the day, 2 p.m. Eastern time, FOMC. And then, of course, followed by the 2:30 Eastern time Powell press conference, which it's like, you get a big move at 2 p.m. with the initial release. All the algos start, buying and selling whatever the hell they might buy and sell. And then it's like, one of those things where you could easily get caught off sides. First move is always the wrong move. That's what they always used to say on the institutional desk. First move is always the wrong move. So you move up, then you move down, and then Powell starts talking and you move up again. And it's like, holy crap, you could have been caught off sides 3 times. So you just got to be careful. So we'll take it slow, as we've been doing all day today, just looking to identify key levels, looking for opportunities, but it's slow, and it's just a slow Wednesday. So doesn't mean that there's no opportunities to be had. There are, but you just got to be at your desk watching for them, because you got to be ready when it happens. So
damn right.
Yep.
I'm just happy to basically be flat today at this point. I'm cool to be flat, and on the P&L here, I'm gonna be very picky on my trades going through this next half an hour, and I'll likely be on the sidelines until the 2:30 press conference, and then we'll take it from there. But man, the Dow is just I want to trade this Dow so badly. I want to trade it so bad, but I just can't find a good opportunity after that last one 30 minutes ago.
No, you can't force it.
Nope. And we were talking about this yesterday, I believe. I was talking about this that I'm going to be getting into. I used to trade the 10-year note a decent bit on the futures, and I kind of got out of it in the last 6 months to a year or so. But I used to trade them pretty frequently, and I think I'm going to get back into that as well. So I'm sure we'll see bonds move at some point today after the press conference.
Of course, right?
To some degree.
It's like the only thing that moves them, right?
Yeah, right. Yeah, right. Either that, or if all of a sudden there's some sort of worry about the dollar, or there's some sort of economic news that comes out. But yeah. Definitely will be looking into that. If anybody is interested in fixed income futures trading, let us know in the chat as well. It's definitely not the sexiest one to trade, but yeah.
Isn't one tick like $32?
It's for the 10-year. It's $15.25, I believe, is the tick. But yeah, I think the 30-year might be what you're saying, Troy.
All right, so I'm getting long. I'm getting long some silver right here. Oh wait, did I just get long? Oh God! All right, I got long the mini contract. I wanted to do the micro, but I'm long silver. Just off of hopefully a bounce off of the intraday low. Oh man, I'm gonna lose here. Come on.
Might be a blessing in disguise. No, I think.
Yeah, well, we'll see. Yeah.
There's a lot of trapped sellers. Buyers are starting to come in, but I would be like grab what you get type thing.
Yeah, I know. I hear you. I mean, like I said, I wanted to do SIL, which is the micro contract for silver. Kind of just testing the waters.
Okay.
Don't want to rely on that. Oh, God, here we go. Hang on here.
Getting absorbed.
Not good. There we go. Stopped out. No, they're going lower. Yep.
That is all right.
Yep. All right. Anyone else have anything that they want to touch upon? Any markets that they're taking a look at?
Yeah. We can share my screen, and I can kind of go over the ES for a second. So here we go. Awesome. All right. So this is kind of what I was talking about earlier, where I would like to take a trade in the ES, but I am sitting on my hands because it is obviously, I have marked out here these 3 blue lines: yesterday's value area high, yesterday's point of control, yesterday's value area low. Coincidentally, what would you, or who would have thought the auction process actually does give you decent information? And every single one of those levels has been relatively important today, and this is just super rangy. The thought I was having was possibly getting low here, or long here on a retest of this value area low, depending on the volume that comes in. But that's the thing. It's like you got to constantly be watching the order flow at these sort of like inflection levels and see if essentially the order flow confirms, hey, buyers are just massively coming in here and defending this area, or the bids are just retracting and nobody is lifting the offers essentially. So this next 5 minutes or so is going to be very telling, I think, on the ES. As far as what the NQ is doing, kind of the same situation where we're not testing the lows of the day, but we're testing these, like this swing low of sorts, or not even swing low, but retesting this low from about 10 to 15 minutes ago. So yeah, very interesting. The Dow looks a little bit more similar to what the ES is looking like right now. It's essentially just hanging out at the lows of the day, trying to retest. But look at that volume. It's so low on this current candle at the moment, and we're 3 minutes in. So yeah, I'm not going to take a stab long like I did with gold at the lows. I'm going to wait for volume confirmation of some sort at these inflection levels. Maybe take a long on the Dow, maybe take a long on the ES. But I think those are the two that I'm most interested in at the moment, the Dow and the ES. And if you guys want to see real quick, the 10-year note, this is what the 10-year note looks like today. It's obviously not, if you look from 9:30 a.m. Eastern time to now, my goodness, is it slow. So usually with the treasury notes, there's usually a move to catch in the morning, in the early part of the session, and the open, I believe, is at 8:20 a.m. Eastern time on the treasuries. So yeah, you really want to more so be paying attention to these futures early in the morning when a move is likely to happen, and then if you're on the right side of it, you can usually hold it for a relatively longer period of time. It's definitely not a scalpy, too much of a scalpy market like we see Sam getting in and out quickly. It's not as much of a thing, I think, on the treasury notes, unless you're like an institutional trader trading on very large size, where they're trading thousands of these contracts at a time, and they're looking for maybe a few ticks or something. It's a completely different strategy, obviously. So yeah,
definitely. We have a comment. Someone asked, Elmer FX asked when the 50K account giveaway is happening. So that's happening in the next session. It's 1:30 p.m. Central Time or 2:30 p.m. Eastern Time. So convert that to whatever time zone you're in. So yeah, we'll be back then. We're ending this session in about 20 minutes or so. And then we have like 2 hours, and then the next session starts. And that's where we're giving away a $50,000 challenge account. So do tune in for that. And fingers crossed, Elmer FX, you could be the winner.
Yes. Tony, I've got a very off-topic question here. I need to know.
Yeah.
I think you get this all the time, probably. Has anybody told you look relatively like you look like a relative of like Cillian Murphy? Have you ever heard that before? The actor.
I have not heard that. You know who I have heard?
Oh man.
Yeah.
Yeah, actually, a young girl told me this in a bar here in Boston. She walked up to me. I was sitting alone with a buddy of mine, and she walks up to me. She obviously inebriated, intoxicated, and she says, "You look like William Dafoe." And I looked at her, and I said to her, I don't know why I said it like this, but I said, "William Dafoe is effing ugly," but I said the whole swear. And I was just like, what is this interaction? First of all, like, what empowered you to like come up to me and like say that? Number one. And like number two, do I really look like that? Like, oh my gosh.
I mean, Willem Dafoe.
Cillian Murphy.
Maybe take 50 years off of Willem Dafoe. I don't know what he even looked like when he was young, to be quite honest. I've only known him as an old guy, so I couldn't even tell you what he looked like as a young guy.
Yeah, I think she's only known him as an old guy too. And I'm just like, okay, this is great. And this is like 8 o'clock in the evening, and I'm like, okay, I'm going home. Like I'm going home.
But genuinely, when I saw you, I was like, dude, this guy looks like Cillian Murphy. This is pretty cool, actually. I don't think I've ever seen anybody that resembles him. So.
Get the Peaky Blinder hat, the whole gear. You're going to have to do it one day. Maybe for Halloween, you can dress up as Cillian Murphy.
Is Peaky Blinders Yeah. Is that British show?
Yeah. He's the main guy in it.
Oh, okay. I gotcha. Yeah,
I've actually watched it.
I'm like terrible with like shows and stuff. Like, it's unbelievable. I need to watch more.
I think he won an Oscar for that, didn't he? I think he won an Oscar for that show.
For Oppenheimer, I think he won it. He definitely won something. Yeah. Liquidation Lab asks if there's a activation fee for the account you win. Nope, it's completely. You don't pay a penny towards the account you win. No activation fee, nothing. It's a completely free challenge account. Sorry, guys, I have a delivery just at my door. I'll be back in 2 seconds.
Yeah, no worries. No worries.
Yeah, actually, I got to step off for 1 second and hit the restroom. I know, of course, we're only like 20 minutes. I couldn't even go the full duration. Like, unbelievable. But I've been drinking water and this coffee. All right, I'll be right back.
That'll do it. Yeah, no worries.
Right,
no worries. Coach Troy, are you? I feel like you're somewhat similar to me right now. We're just kind of sitting on our hands at the moment because.
Oh, this is the worst. I mean, sitting on your hands, waiting till 2 o'clock, for the FOMC, and I can't even tell you. I probably could count 10 different times I've tried to trade like a monkey the 2 hours before, and you're like getting chopped to death. It's just horrible, right? So I've learned over the years that about 11 o'clock, 11:30 on Fed day, you just you do a long lunch, you do something else because. As Coach Tony was saying, there's always opportunity. The question is the opportunity high probability? Is it guesstimate and you hope you're right? What's the probabilities here of doing anything? Is it going to break out? Probably not. Is it going to break down? Probably not. But as soon as I go long at the bottom, thinking it's going to go back into the middle of the range, it'll break down, right? And there's some rumor that the Fed is going to cut rates or they're going to raise rates, and then you get this little pew, and it just destroys your stop loss, right? I feel like I'm sitting on the sidelines here, listening to you guys talk about gold, and which is great, but yeah, there's just nothing. There's nothing to do. I mean, this is where your professionals, even your big boys, are literally stepping aside. This is why we see the volume contract so dramatically in the last 2 hours before the Fed, is because, you know, anybody who's anybody's taking a long lunch. You know, they're not going to hang around and look for a potential breakout or breakdown. You know, it's just garbage trading. You know, and I know nobody wants to hear it's garbage trading, but it is, okay? You know, real life here, reality check. You're going to get garbage trading 2 hours before the Fed. And I at least personally have not done well during that 2 hours. So, you know, sitting on my hands is the smartest thing to do in my case. I don't know how you feel about it, but you know, I want to feel conviction when I take a trade. And even and you can see even Tony was not having conviction on his silver trade there. He did not want the full contract. You know, I'm happy to take a gold trade, happy to take a silver trade, but I'm not doing it on the full size contract, right? Because it's a crapshoot, right? I mean, this is just a bad time of, you know, the conditions of the market are not good for, you know, at least for me. So, right. You know, I hate sitting on the sidelines because I want to jump in and have some smart comment. But and I'll just tell you the smartest comment I had today. You'll appreciate this, Paul. This is a reference to one of Adam Sandler's movies. Remember 10-Second Dave? I was going to make a comment about 10-Second Sam being like 10-Second Dave. If it was what was it? 50 First Dates was the movie where they've got this guy who has a 10-second memory, and they call him 10-Second Dave. So after 10 seconds, he goes, "Hello, my name is Dave." Right? every 10 seconds, it starts over again. So anyway, that was my big comedic contribution to the 10-second Sam trades. But you know, it's like, what do you do? There's really nothing to do here. We're sort of twiddling our thumbs. And unfortunately, Tony is the new guy, so we just keep piling on him. You know, he's doing gold trades, silver trades, a micro Nasdaq trades, and you know, it's great. Yeah. It's great. It's all good.
Yeah,
I think
that is such
James,
a good reference.
Sorry, Coach James in the chat called me a minute man, a 1 minute man, which I don't know if it's my trading is the only time where I'm a scalper. Anyway,
you're lucky Daryl isn't here because he would totally.
I'm a swing trader in every other aspect of life, you know. Positions trader. Oh dear.
Oh, Sam, dude. Yeah, you are lucky that Coach Daryl is not here. You are very lucky. That would be the next topic of conversation for 10 minutes.
that would. Oh, gosh. But I gotta say, Tony, you've been fantastic in this session, man. You've really, you know, opened up, spoke, took control. Absolutely fantastic.
Yes.
Yeah, I know it can be daunting, especially first time on live stream. I don't know if you've done this stuff before or not, but yeah, no, you handled it like a true boss. So I gotta say, you know, hats off to you. And I can't wait to do more sessions in the future with you as well.
For sure.
Oh, your mic is off. Oh, we can't hear you, Tony.
Okay, you hear me now. Yeah. That's my
mic. There we go. Yeah.
Okay. Yeah. That's funny because I've actually been saying, oh, yeah. Agreeing with everybody. Sorry about that. Yeah, no, I appreciate it, guys, honestly. And yeah, it's nothing. I mean, it's nothing for me, right? When you're good at something, all right, I'm not saying I'm good at it, but you know, it's easy to talk about something that you know, of course. And I look forward to, like, you know, getting in one-on-one with all you guys and kind of learning a little bit more about your trading styles. And because that's the thing, is like, you're only as good as what you don't know, right? So Like you got to keep on learning. That's the trading journey for everyone in the chat. Like you just got to you learn something new every day. You learn something new about the market, new strategy. Maybe you tweak your old one, but I don't really think that that's a great idea. But no, you learn something new every day, and then obviously you learn something new about yourself every day, about how you respond to the changing market environment, and that's really important. Bring it back to that trading psychology, especially when you're doing this type of stuff. Like it's all like ad hoc, whether you're a swing trader, scalper, day trader, whatever you want to call it. You still have to deal with yourself. You got to deal with the changing market, but also, yourself as a person changes all the time. So you got to be in tune with it, unless you're going like the algorithmic route where it's like you just blindly follow whatever your indicator says,
Right.
And
right.
that's even better too, because some people it's like, yeah, I'm getting long here. It's like, well, why? Well, because my algo said so. It's like, okay, all right, if that works for you. Like,
I mean, that would be the dream, right?
But
if you just had an algo that just kind of did it all for you. You could sleep, just trades every session. That would be amazing.
Yeah.
But unfortunately, money does not grow
let's get to talking. No, let's get to talking offline. I think I can find a couple of money printers.
If it does exist, let's just say if you're we're not the ones who it won't be sold to us. Let's just put it that way.
Yeah. It's one thing. It's one thing to like write your own algorithms with variables and whatnot that you understand and why it's getting into the trade. But it's another thing to just be a part of one of those, things where it's like, hey, buy mine, and just turn it on. Just that's kind of wild. I could.
That's really blindly following. Yeah.
Yeah.
Yep. Oh, I'll say for an FOMC day, the fact that we're all green, I think we all deserve a pat on the back for that. I mean, it could have been a hell of a lot worse. And if you look at the 15-minute chart for NQ, and I'm assuming ES will look the same, it just looks horrific.
Sure.
It looks disgusting, the chart. The 15-minute candlestick chart just looks like a bomb went off in the middle. I mean, it's just... It's one of the wings I've ever seen in my life, to be honest.
Come on,
So
Sam. You got to say my favorite. Say my favorite word. Rubbish. It's a rubbish.
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 What do you guys say? You guys say garbage, don't you? That's the American version.
Trash.
Yeah.
Garbage. Trash.
Garbage. Yeah.
See, that's the hard thing about English, and for anyone else where like English is not your native language, it's a very tough language because there's so much slang. There's so many different words that mean the same thing. So yeah, hats off to anyone that took up English as a second language. You're definitely smarter than any of us.
Oh, yeah.
So.
Yeah, I'm always blown away when people can just speak English like incredibly well, and it's the second language. Because English is actually quite a hard language. Let's be honest. I mean, we've got silent letters, and half the stuff doesn't make any sense. The rules, like why is sugar not sugar? It should be sugar, right? There's no H in like all this, silly stuff. Basically, it's actually quite a difficult language.
You're still saying it. It's sugar.
Sugar.
That's what sugar.
Kind of funny. There's a comedian that has a skit on that, and he has like a 4-word. It's like a 4-word like setup where each letter is a page you can flip over, and he's constantly going through words in English that are pronounced differently, but like have the same relative like consonant rules and stuff. So like. Yeah, one of the examples was tomb and bomb, just like you were saying. It's still a consonant in front of O, and they're both spelled with OMB at the end, but you pronounce the O differently in each of them, and it's just super confusing for sure for non-native speakers.
It really is. It really is. So Yeah, no, fair play to anyone who's fluent as well in English, and it's not their first language. If you're born in English speaking language, and I mean, you should be fluent, but
at this point, right?
Hardly an achievement.
If not, you can pack it in.
Hardly an achievement.
So when I got my whole Hola Prime, goodie box with the T-shirts and everything on it, this is really funny because Mega was asking me if I had gotten the package, but she said, "Did you get your courier? Did the courier?"
Mm-hmm.
And
the courier come.
For me, when you say the word courier, it's a person who is giving you your package. And she was saying the courier is the package, right? So it was like, did you get the courier? And I'm like, I don't know. I don't have a courier. That's a person. It was really funny, but it was so off the cuff. She said it so naturally. Did you get the courier? And I'm like, what are you talking about? No. I mean, I'm waiting for a package from the courier. It sort of went back and forth, and then she starts laughing because she realizes that that we're completely off. We're saying the right word, but we're completely in different places, right? And it was very funny. I thought it was very funny. And
funny.
I laughed her. She laughed at me, and I laughed at her, and we lived to survive another day. But
I love translations as well. I remember when I went to China and I was sitting on the airplane, and after the food, they gave us, like what KFC have, those little wet wipe type things that you can kind of clean your fingers and hands with after. And they had it translated. Obviously, it had the Chinese text, and it had it translated in English. And this made my whole flight. I couldn't stop laughing because they translated the wet wipe as wet turban. The best thing ever. You can tell it just went into Google Translate and cloth turban. It's just brilliant. So yeah, wet turban.
That's funny. Would never even think of that possible translation. I could have never even guessed that as a possible translation, honestly.
It's so good.
That's why you can't trust Google Translate sometimes. It does well. When you take pictures of stuff and for example, when I used it for Japanese, it worked really well a lot of the time. But there were some times where you're like, oh, that's definitely wrong. There's no way that makes any sense. So.
Yeah. But I guess with AI now, that and all the language models, that's a thing of the past, sadly. They're all smart enough to figure out the correct term to use and whatnot. So, such a shame.
Yeah.
Yeah, Joel. Just like in New England with Tony, do you call a soda a pop, or do you call it a soda?
Oh no, they just
call it. You call it Coke.
Well, up here, because everyone's a freaking degenerate, they just call it water.
Water.
Cavity,
I'll have a water.
Cavity Central, the Northeast. Yeah, no, yeah. People they don't use pop. No, it's a little outdated, but no, everyone just calls it soda. Come on. But now, speaking of soda, is Coca-Cola actually just going the sugarcane route? Because I know that was in the news, right? They were just saying we're getting rid of the high fructose corn syrup, going the sugarcane route.
I heard the same thing. I mean, we'll see. We'll see. Yeah. Maybe they'll try and go down the route, and then depending on what the margins look like, their shareholders will dictate.
Oh yeah,
to stay or otherwise. But yeah. Wouldn't be surprised if we weren't able. I wouldn't be surprised if they made that a separate product. like if they made just like a Coke, like a natural, or as natural as you can get in terms of Coke, but like a natural or a more natural Coke product with sugarcane, and then they just sold the regular Coke as well, and the natural one would be a little bit more expensive. I would not be surprised by that at all.
Yeah.
I saw Pepsi release.
Well, they already do that
as well. They released some kind of vitamin Pepsi or something like that, or full of minerals and vitamins, and trying to almost put a health kick towards Pepsi. I don't know if it was legit or not. I just saw it on X one day scrolling. It might have been a joke. I don't know, but it seemed legit at the time.
Yeah,
I don't know.
That would be pretty funny.
Get your health kick from a can of Pepsi.
Were you saying, Troy, were you, was I on the right train of thought here when you were saying that Coke already has that product? They just sell it. Were you going to say they just sell it in Mexico? Is that what you're going to say?
Yeah, they have Mexican Coke. Mexican Coke is cane sugar. Yeah.
I knew you were going to say that. Yep, for sure.
Yeah, well,
agreed.
I went to Portugal in January of this last year, and one of the things that just flipped me out was, you guys know I'm a Mountain Dew guy, and there was no Mountain Dew in the entire country of Portugal. Okay, it's Coke Zero or Coke. That's it. There's no Dr. Pepper. There's no Mountain Dew. There's no ginger ale. I mean, it's like, it was a shock to me to be like, what do you mean I can't get Diet Mountain Dew? What? What do you what? You know, like, I remember when we flew back, and we flew into LaGuardia in New York airport, and the first thing I did was I ran and got me a Diet Mountain Dew. Just because I was having withdrawals. I was having withdrawals from only being able to drink either Coke Zero or regular Coke. And sometimes you could find a Pepsi, but you that was it. And it was funny. I don't think you think in your mind when you go somewhere to another country that suddenly all the things that you're used to having is different. And there's nothing wrong with that. It's great. I mean, we actually went over to the Azores, and the Azores had their own brand of soft drinks. They were flavored. They had orange and I don't know what, grape and some other types of sodas. And it was fun to try those, but and obviously expand your palate for all kinds of foods. But I guess, I don't know, it never really went, you're outside of the United States, it's going to be different. It just didn't, I don't know, it just didn't dawn on me, that it was going to be that way. But I will say that when we were in Portugal and the Azores, the bread was just like to die for. I could just sit down with a loaf of bread and just sit there and eat bread. The bread was so good compared to the crap we eat here in the U.S. And the butter, I guess the Azores is famous for butter, and we had butter and bread, and then my wife is like, well, I don't need anything else. We could just eat bread and butter and cheese. Of course, cheese was a big thing. In the U.S., man, the bread's garbage, and the cheese is but it's nothing like the cheese you guys have in Europe. So anyway, that was quite an experience to have a week where I had no Mountain Dew and was like, oh no. Right. It's kind of fun.
Yeah, there you go. All right. Now it's lunchtime. You're getting everybody hungry. I think it's time to break.
Yeah. We have hit time. But we will be back. So thanks everyone for watching. Do stay tuned, because up next we have Mind Over Markets with our performance coaches, Lara Leon and Stanislava Puach. Well worth watching. But apart from that, we'll see you guys in about 2 hours or so. Coaches, it's been good. Take care, everyone.
Take care. We'll see you soon.
Yep.
Hi, my name's Lara, psychologist, performance coach, and for the past few years, trader, a journey that's taught me as much about myself as it has about the markets. My philosophy in life generally is that once we know ourselves, truly know ourselves, the whole world opens up to us. And nowhere is that more true than in trading.
Outside of trading, I love to travel, exercise, and spend time in nature. Nature has an incredible ability to reset our minds and bodies, and that's an edge in itself when you return to the markets.
Patience, persistence, the willingness to do the work every single day. This is the foundation of success in trading and in life.
Most traders think success is all about strategy and setups, but actually it's about mindset and discipline. Trading success is about mastering your mind.
For those new to this journey, I always recommend 2 books, One Good Trade and Trading in the Zone. They will teach you the mindset and discipline required to thrive in this business.
As Roosevelt said, a smooth sea never made a skilled sailor. And as we know, the markets are never smooth. Every loss, every challenge, it's an opportunity to lean in and grow stronger.
That's a little insight into me and how I approach trading and performance coaching. I really hope to see you on a session soon. And remember, once we know ourselves, the whole world opens up. So let's trade with that mindset.
Hola Prime. Trade with transparency.
Hi everyone, I'm Stanislava, one of the coaches here at Hola Prime, and this is a little sneak peek into how my life looks like beyond coaching. I like to start my day with kombucha and the radio. As a psychologist, I believe that how you begin your day shapes how you feel, and how you feel shapes everything else. My journey as a psychologist started 20 years ago. Over those 2 decades, I've always worked to broaden and deepen my expertise. As a performance coach, I try to help clients understand how their mindset and emotions affect how they trade. Everybody would like a quick win. Hello, everyone. Hello, Lara.
Hi, everyone.
Nice to see you here.
Nice to see you
And
all.
I hope you're having a great day. And this is a little break from trading so we can explore ourselves. I'm Stanislava, psychologist and performance coach here at Hola Prime. And I'm here with my colleague, Lara, who is both a trader and a coach. So you get best of both worlds today. We are going to dive into a fascinating but often overlooked mental pattern called cognitive rigidity, which is the tendency to get stuck in fixed ways of thinking versus its counterpart, cognitive flexibility, which is the ability to adapt your thinking in response to changing conditions. This is a concept that often gets forgotten in our aspiration to advance, to grow as individuals and as professionals, but it actually is, as we will talk about a bit later, central to resilience, creativity, emotion regulation, adaptive behavior, and in therapy, especially cognitive behavioral therapy, acceptance, commitment therapy, and other approaches, enhancing cognitive flexibility is often a key target. And in trading, these patterns are not just academic ideas. They directly affect your ability to respond to that unpredictable movement in markets, to manage risk, avoid costly mistakes. Because when markets shift, being rigid can mean missing the moment when you need to change something in your strategy. And this is where flexibility could actually be your secret power. So today we're going to unpack what these terms really mean psychologically, how they show up in trading, and we will give you some practical ways to develop flexibility without losing discipline. So Lara, you work with traders every day, you trade yourself. Could you introduce yourself and share a quick story about maybe cognitive rigidity in action? Did this happen to you, or did you have a client who experienced negative consequences of being rigid? Mm-hmm.
Yeah, it's very it's really common. Thanks, Stanislava. So hi everyone, I'm Lara. I'm a performance coach here at Hola Prime, and I work with people on an individual basis, and I also do trade myself. So I have got some insight into how the markets affect us, and how they affect our psychology in particular, and how important it is to have a really good insight into what your mind is doing as often as you can. To be honest, with that insight, it gives you so much more power and control over your emotions, because the goal is never to suppress them, it's to understand them so that we can harness them and use that to improve our performance. My work really focuses on helping traders understand their inner game, their thoughts, their patterns, emotional responses, and the way all of those things shape how they perform under pressure. And under pressure, which trading is always under pressure because of just the nature of the charts and the nature of the market. One of the things that we do see quite often is this concept that Stanislava introduced, the idea of being cognitively rigid versus cognitively flexible. And I think if we can be cognitively flexible in life and in trading, it gives us a huge advantage. And this rigidity doesn't come about because people aren't intelligent or capable, but because trading activates some of our deepest needs for certainty, control, and safety. So I'll give you an example. Sometimes traders, there was one in particular that I'm thinking about, has a very fixed idea of how that strategy should play out. This trader was particularly disciplined, methodical, had done all their back testing, knew their strategy inside out. But if they entered a trade and the market deviated even slightly from what they had anticipated, let's say they had a choppy retracement or a key level that they hadn't recognized and marked out wasn't holding, this trader would freeze in the markets. They literally could not adjust, and suddenly everything kind of just went out the window for them, because they were no longer able to pivot and respond to that situation. So they'd sit there just watching the market move without them, and then beat themselves up. And I think, as we say quite a lot, Stanislava and I, is that people beat themselves up. It digs into their confidence. And one thing that we know that traders do need is to have an inner confidence in their performance when they're trading. So cognitive rigidity can erode that self-confidence. So when this trader and I began to unpack what was going on, what we discovered wasn't a lack of skill, as I mentioned. It was actually a fear. It was based on a fear of being wrong. So if they found that they had to adapt in that moment, what that actually meant to them was that they hadn't planned their trade out well enough, and that they saw that if they had to be flexible, it meant that they felt like they didn't know the market as well as they thought they'd like to. So they saw that flexibility and that having to pivot as a failure, actually, because they saw that going against their ability to do their technical analysis. And so that's a really common mindset in trading, especially for people who are used to high achievement, being sort of set on your goals, being set on your outcome without deviating from your plan. In some arenas, actually gets people to success really quick, but not in trading. We actually do need that element of flexibility. So we cling to control because the market is so unpredictable, and that unpredictability does feel threatening. So over time, we could work together to reframe this. And flexibility didn't mean abandoning their structure. It just meant building trust in their ability to respond, in their ability to pivot in the moment when it was needed. And so the way that we approached that was sort of practicing some scenario planning, rehearsing uncertainty, and just really focusing on reducing the load, the emotional load of being wrong. Eventually, they were able to make those decisions in the moment, make those adjustments in the moment, without feeling so threatened in terms of their ability, and that being wrong, they had managed to overcome that. Over time, the equity curve smoothed out, but actually more importantly, what happened was that they felt calmer and more present in their process, less conceded to be right, more able to pivot in the moment. So this is a really clear example of the difference between being rigid and being flexible. One locks you into a single outcome, whereas the other just allows you to evolve as the markets evolve. Because we can do our technical analysis hours and hours and hours, and still the market will do what the market wants to do. So we have to learn to adjust and be flexible. So yeah, it can change everything. Moving from being rigid to being flexible helps everything in your trading, but it also helps in terms of how you can relate to yourself.
Thank you, Lara. That story really sets the stage and showcases how a theoretical concept actually looks like in practice. Because at its core, cognitive rigidity reflects our brain's natural desire for certainty and control, as you said. So when we face ambiguity, oh, I didn't pronounce that well, but you know what I mean. When we are ambiguous about something, the brain can react like a survival mechanism, clinging tightly to those known patterns or beliefs because that feels safe. But trading is high uncertainty environment, so it's no surprise we see rigidity show up strongly here. Psychologically, it actually limits your ability to update beliefs or strategies based on new information. It's like wearing blinders. I would say you focus only on what fits your existing view. And interestingly, research shows that of course in trading, but in general in life, cognitive rigidity is closely tied to actually have reactions like agitation, even self-injury, depression, anxiety, even suicidal thoughts were correlated to cognitive rigidity, which is quite a statement. But imagine what it does to your trading. It's also connected to a strong need for cognitive closure. Those people who have high rigidity strongly avoid feeling things were not brought to their end, and they can actually seek for too long some closure, emotional, cognitive, whatever. An interesting point for traders also is that research showed that a connection between problem solving and cognitive rigidity. When you are cognitively rigid, you actually have problems in social settings and in problem solving situations in general. And a lot of other things were shown also. But on the other hand, cognitive flexibility is a mental skill to hold multiple possibilities, to entertain uncertainty and adjust your approach as data evolves or as you receive new information. Neuroscience research, for example, shows that higher flexibility correlates with better emotional regulation and decision making under stress, all of which are very, very important in trading. A bunch of studies show that cognitive flexibility is closely connected to better mental health outcomes, emotional resilience. It can lower depression, lower stress, lower anxiety. All of this is very important in life, but also if you want to be a top trader, because all of these, as you mentioned, Lara, questioning of yourself, of your skills, of your identity will come up when you face loss. And if you stick too rigidly to your set plan, you might risk slipping into these emotionally negative states. Also importantly, research showed that cognitive flexibility is tied to better workplace performance and creativity. So if you want to, added to that is executive function. And this is a mix of benefits that come along with cognitive flexibility. It's not that there is necessarily that connection that this causes that, but this comes together. So in trading, to come to the top and actually grow beyond your basic skills or the things you learned in school, you should work on developing that flexible approach and think. And this is not sign of weakness or sign of not knowing or not sticking to your strategy or not having a good enough skill set. This is actually a superpower and a skill you want to have. It's not just like I abandoned my strategy because I didn't know what to do. This is actually a sign of strength and cognitive superiority, I'd say. And for traders, this, as you will explain better, translates to cutting losses early, pivoting strategies when conditions change, or staying calm amidst volatility, because this also happens. And when you have trust in your ability to respond and adapt as information flow changes, you will actually manage stress better. And with this understanding, Lara, how does this when traders confuse adaptability with indecisiveness, does that happen? What do you see, or maybe have in your own trading experience?
Yeah, I've got a few more examples, but just to pick up from what you just said, I think it's very sad to hear that how people who are cognitively inflexible or rigid do actually tend to do worse in life more generally. And, we've all come across people like that who don't like change, who are unable to adapt to changing circumstances. But life is so unpredictable in the same way that the markets are so unpredictable. So as you said, Stanislava, being able to develop the skill of being flexible puts you in such a strong position, both in life and in front of your market, in front of your screen. And so it really is a strength, and sometimes it just needs to be reframed as such. So let's just look a little bit deeper into how rigidity and flexibility could show up in real trading behavior. This idea about being rigid does, to go back to what we've both just mentioned earlier, it feels like needing to be in control, and especially under pressure, because the environment is so chaotic sometimes and so unpredictable. This sense of needing to be in control can make us feel temporarily better. And I use the word temporarily. It isn't the problem, it's the attachment to the plan. So it's less about the strategy, it's more about how willing to pivot, how willing to be flexible are you as a trader. There's one trader who never wanted to close the trade earlier. They were so proud of their discipline. They just felt, yeah, I'm so disciplined. But actually, we talk about discipline a lot as a strength in trading. But what was happening over time was that rule was costing them. They weren't evaluating risk in real time. They were following their rules so rigidly that even when the market shifted, when the context of their trade shifted, they carried on just holding, and actually this was really starting to affect them. It became clear that the rule was about, they were trying to avoid regret, and if they followed their rule exactly, then they had no way of blaming themselves. But actually flexibility requires us to tolerate a little bit of discomfort and trust ourselves enough to make new decisions when the environment and the stimulus that we're receiving is changing. Another one that I see quite a lot is what I called post-trade analysis. And it's suddenly when, you take a loss and suddenly it's like, I can't get involved anymore. They pull back completely. They hesitate to get back involved in the market. They overanalyze everything. And then they just cannot seem to move past the loss. So they just keep replaying it over in their mind, mentally getting really, really stuck on it, trying to extract the perfect lesson. What did they do wrong? But actually, all they're trying to do is protect themselves from future pain. They're not adapting. And so flexibility is never about not losing it ever again. It's about learning how to lose differently, or taking those losses differently with more self-awareness and less judgment. But if you develop the flexibility, it's going to work out in your favor. You also see sometimes rigidity in how our self-talk. As psychologists and people working with people on a daily basis as we do, our self-talk is so crucial. The voices that we have, sometimes people talk outwardly negatively about themselves, but very frequently think negatively about themselves. And it's something that I like to really work with people. But one trader had a very black and white mindset. It's either I follow the rules and I succeed, or I mess up and I'm a failure. So it's this kind of real stuck thinking where there's no room for growth, there's no room for movement, no space for reflection, just pressure to follow the rules. And so when you can start to develop that internal dialogue, that self-talk, make that self-talk less critical, one that sounds a little bit more open to change, then you can start to allow in some experimentation, a little bit more nuance, and just start to forget about perfection and just start to relax into it a little bit more. So adapting mid-trade and reviewing your journal with curiosity instead of blame is a really helpful kind of way to start thinking about changing this if this is something that you suffer with. Flexibility doesn't mean that you're being chaotic. It doesn't mean that you're breaking your rules every time something feels off. It just means that you're developing the range, the mental range, to be able to respond to what's actually happening in the markets in the moment when you're in your trade. So yeah, if you find yourself getting stuck or hesitating or over controlling, those are signals of cognitive rigidity. And it's the idea is not to, the way to get away from that is not to force it more. The way to deal with that is to be a little bit softer, allow a bit of space in that, and then the willingness to learn as you go forward. So I've got a few tips that I'll come back to give you at the end, but yeah, just hand back to you with the next section for you to discuss, which is always your insights, which are so insightful.
Oh, thank you. Hopefully I can help now with a bit of practical tools and tips. These are actually based on what is normally done in psychotherapy, because as I said earlier, in some schools of thought in psychotherapy, changing cognitive rigidity into more flexible thinking is the key goal. So, but here we will adapt that to trading and what viewers can actually do to become more cognitively flexible in trading. First off, as you set the stage, Lara, start catching yourself in the act when you are clinging to a plan that's clearly expired, or importantly, when your brain is stuck in that prove I was right mode. That's clearly a red flag. So ask yourself, when you notice this, be honest to yourself and ask yourself, am I truly responding to the market, or am I responding to my ego? Even just pausing to name that moment can actually break that autopilot mode, and you can actually regain control over what you're doing. Another powerful trick is deliberate mental flips. So take a trade idea you are really attached to, or start small, something that's moderately important to you, and force yourself to argue the opposite, like you would in a school debate. So take the opposite stance and ask yourself, what would someone with the exact opposite position say? And could they have a point there? Is it that black and white, or maybe there is something to it? You are not betraying your plan, as you said, Lara. It's not about being indecisive or not knowing what to do. You're actually training intentionally to be more adaptable, which is crucial skill in life and in trading. Next tip would be that if discomfort shows up when you pivot, understand that this is not a bug, it's training. So get used to that wobbly in the stomach feeling when you make a flexible move in real time. It's normal, it comes with it, and this is you actually rewiring your system. It's going to get easier with time, but get used to that. It's like when you're driving and you do something sudden, you feel it in your body. You will feel it here as well, but that doesn't mean that's wrong. It's actually training, part of the training. And as we always say, journaling, but not just about results. After a session, ask yourself, did I adapt today? Where did I ignore fresh signals? I bet there is some situation like that. Was I trading my strategy or my story? And over time, you will start seeing patterns in your rigidity, and then you can address those. And ideally so with a performance coach who will get that personalized approach and see why you actually do that. We mentioned a lot of notions here, identity, ego, habits, and things like that. All of that can actually be worked on in one-on-one sessions. And finally, build some space in your brain with mindfulness. Even a few moments a day of watching your thoughts, like passing clouds, that usual exercise, or just focusing on an object, all of that can loosen that grip of rigid thinking. You don't need any particular setup, just focus on one thing that's not your thought cycle and get out of your head. So as we wrap up, think about this. Where in your trading are you most stubborn? And what would happen if you loosen that grip just a little? Again, it's not sign of weakness, it's a safety reflex, it's normal, but markets reward flexibility and not just your confidence. So practicing these tools might not feel natural at first, but build mental muscle. And Lara, as what you mentioned, you are going to also share some practical tips. And what are your thoughts on all of that?
Yeah, no, absolutely, Stanislavi. I mean, you've essentially covered what I always like for traders to do. Obviously, with the journaling, noticing where they feel that they're particularly rigid. Is it after a drawdown? Is it if mid-trade the market's moving in a different direction to the one that they expected? Just see if there's any particular patterns. But what you said about practicing cognitive flexibility, this idea of what else could be true in this moment? What else? And making sure that you write down your thought, but then coming up with the opposing idea, just to begin getting into that habit of beginning to be flexible and starting to practice that. So it's all like a muscle. It all just needs practice. It all just needs working on. But we can do that absolutely. And working one-on-one with either of your coaches would be absolutely fantastic. So I hope to see you on your session soon. Thank you for joining us, and we hope you enjoyed this session, and we will see you again very soon. Thank you.
See you soon. Thank you.
Bye.
Bye-bye.
The other payouts, how were they? Just
amazing. Oh man,
any problems?
No. What's the one last week? 12 minutes. 12 minutes. 12 minutes. One before that was like 32. You know, I'm like I said, what's gonna happen tonight? My payouts for Wednesday. I'm gonna click withdraw at 12:01, and I'm not going to sleep until it hits, and then I'm gonna go to sleep. So I'm literally up. But I got it 12 minutes last time. I was like, dang.
Absolutely. And other than the payouts, the general experience of Hola Prime so far,
man, amazing. Man, amazing.
All still good.
But number one, for sure. I just had a guy on Discord. Like, I don't know how he found me. I guess on your socials or something. He hit me up on Discord. He was like, "Hey, hi, bro. What's your experience with Hola Prime?" I said, "Great." He said, "Any downside?" I said, 0.
Hello, everyone, and welcome to another Traders Stories podcast. Here we are joined by one of our funded traders who you probably are familiar with, as we've already interviewed him once, Melvin from Texas, who's had some phenomenal success on our platform. Melvin, how are you doing? And so glad to see you again.
Amazing. Amazing.
Awesome. Melvin, man, you've had some good payouts. How many has it been now? It's over 8,000, right?
Over 8. So it's over 8 grand. I know with my payout tomorrow, we'll be at $8,250.
Nice.
Last month,
awesome.
I had a $6,000 month last month, so can't complain.
Yeah, you can't complain. That's really good. And your account size was 100K, right?
100K.
100K. So six grand a month, 6%. That's smashing it, man. And you're a scalper as well.
Hey, I'm a scalper, man. Like scalper all day. So I'm in and out, make my money real quick and chill the rest of the week, so I don't have to be stressed out from this market and everything.
That's the crazy thing, because just before we actually jumped on this call, you told me how, once you hit a certain amount, you kind of stop, you chill, you get your payout, and then you start again.
And then I start again. There's no point of being greedy in trading, man. I learned my lesson a long time ago, trying to chase these markets. The market is king. It's going to do what it wants to do. It's going to let you know, hey, I'm going to give you money today. I'm not going to give you money today. So if it wants to give me, last week, I got my payout on Wednesday. I made 2 grand. Literally in a couple hours after my payout, I made $1,000 the next day, and I'm done. Like, there's no point of me chasing another $400 or $500, because what's going to happen is the market is going to, like, you know what, we're going to get you today, no matter how sure you are on your bias or how sure you are on your charts and everything. It can turn around any minute. So I chilled. I haven't traded on my account since Wednesday night. I was like, I'm gonna get my payout. We're gonna do it again, So ain't no point in being greedy in this, man. I take what I can get. I got a wife, I got kids, I got a house. My daughter may be in here in a second, so y'all get to meet her if she's up for it. But there's no point of being greedy in this market, man. I take what I can get, and I get out, and I chill the rest of the week.
Absolutely. That's the way to do it, man. That's the way to do it. Don't overtrade. So, like, you're a scalper, but you must also be like a sniper as well. Do you know what I mean?
Man.
You wait for the right opportunity, and then
Man, I do. It's been one of my trades. I don't know how good y'all can look at the trades. It was one trade. As soon as I put my buy order in, I was up $300. I couldn't hit the close button fast enough.
I love those trades. The moment you get in, no drawdown, it just shoots off. Man. If only every trade could be like that. That would be ideal. But
yeah, man, I get in and get out. Like I told you, doing the ICT inter trading, the ICT approach with the fair value gaps and looking at the candles and just waiting on the momentum to go to one side, get in, I'm out. If you look at my trades from last week for this payout, I think only one of my trades were over $600.
Wow.
Everything went on 300, 400, 150. And a lot of people may I have some friends who is like, man, I hate the way you trade. It works for me.
Yeah.
You know what I'm saying? I'm not trying to hit a home run every day. I just want to get on. I just want to get on base. I just want to get on base.
You know what? It's funny you say that, because literally yesterday in the live session, me, Eamon, Coach Eamon, and Coach Michael, we had the exact same discussion. Most of our wins come from base hits. We're not looking for home runs. We're not trying to get that one trade that's going to pay for the whole month. Nah. It's just bit by bit, and we compared it to Floyd Mayweather. He never knocks anyone out, but he's such a technical, skilled boxer. He's undefeated. You know what I mean? Best in the world, because the goal is to win, right? And
that's it.
It doesn't have to be spectacular.
I just want to get on base, man. And I'm the only person in my trading group who trades like this. And, so all of them are long-term traders, and that just doesn't work for me. Especially with my work schedule and everything, that doesn't work for me. So, I mean, when they say, they hate the way I trade, they're not being like me. They're being funny because they can't trade like that, and I've tried, and it's just so hard to teach that type of strategy and everything that, because if you don't get in when I get in, you miss the move. So when you like the gap between the low of candle 1 and the high of candle 3, that's when I get in, then I'm out. But I'm not trying to hit a home run, man. I teach my son that all the time, not just about trading. I'm trying to teach him trading, but anything in life, just take your time. There's no point of rushing it. It's gonna be there. It's not going anywhere. Get on base a couple times. You know, one day you may hit a home run, but you're not. Don't try to hit a home run every day.
Yeah.
What's gonna happen is you're gonna get upset. You're gonna strike out, and then next thing you know, you're back to square one, and you're upset at yourself. And I've been doing this for a while now, and I've tried to hit home runs, and I struck out more times than I got on base. And I'm not doing that anymore. I'm not doing that anymore.
like even if statistically, if you were to back test it, right, and statistically, the P&L by the end of the month would be the same if you did just go for those home runs. The psychology of just losing, because you're going to lose a lot more if you're trying to hold for that huge profit.
A lot more. And, you know, with me being in the restaurant industry, I see P&Ls all the time. And, you know, it's losing in trading is very stressful, you know, especially since I'm the breadwinner of the family and everything. So, you know, I got to the point now in my life where I don't have to rely on the payouts, but the payouts, they make everything so much easier for my life. You know, and so in my head, I was telling my good friend Giovanni, who's actually bought an account from y'all. You know, he was like, "Man, I wish I had your, you know, your what's the word I'm looking for? I wish I had your like your mindset. I had your, you know, your what's the one I'm looking for?
Discipline.
Discipline. There we go.
Yeah.
He said, I wish I had your discipline because, like I sent him my screenshot. I was like, look, I'm done. Like I made 3,000. You know, my cut is 2,100. I'm done. He was like, see, I can't do that. He was like, I can't. I was like, well, to me, how I see it is this: $2,100 that pays my water bill, that pays half my mortgage, my water bill, my cable bill, my car note, my car insurance. So every time I place a trade and it's in positive, so if I see $400 floating up, that's my power bill, my gas bill. That's how I'm thinking it because I'm a family man. He doesn't have kids, so he doesn't think of it like that. He's thinking of it, you know, I can make more. I'm not like that. Give me my power bill and my gas bill money, and we'll do it again tomorrow.
Yeah, you know what? That's interesting. Actually, I quite like that. Yeah. Imagine your trading's paying for the everyday stuff rather than like imagining, oh, this is going to pay for my Bentley or Lamborghini.
And I'm a simple person with that. Yeah, that's how I think of it, though, you know. And I was telling him that. He was like, that makes sense. But he was like, it's easier for you to do that because you have kids, you know. But it works, you know. And that's how I don't see it as money. I see it as that's my bill. Like my payout tomorrow, that pays my mortgage. And guess what? I still work, so I get paid on Friday. I don't have to use my check.
Yeah.
We're taking the kids on a trip later this month. We're taking them to either Dallas for a weekend, just us and the kids, or my wife said something about Vegas. But either way, we're taking the kids somewhere, you know, and it's paid for by trading. You know, my man cave I'm in right now, if y'all would like to see it, I pay for all this with trading.
Yeah.
I paid my down payment on my house with trading. You know what I'm saying? And it has changed my life completely. You know, I'm not gonna sit here and say I'm a perfect trader or I'm the best because I'm not. I'll take losses. You know what I'm saying? It's just I've gotten to the point now of discipline and, you know, my mindset that, you know, this helps me on my everyday life. So instead of me seeing it as money, I see it as what bill is this gonna pay today? If I made $300 a day, guess what? That pays for my daughter's summer school for the next 2 weeks. That pays for my son. That pays for my son driving class next week. You know what I'm saying?
Yeah.
So that's how I look at the money I'm making with trading. I'm not at this point in my life. I'm not trying to get rich quick. I'm not trying to retire from my job right now. I'm only 34, but you know, eventually could it get there? Yes, but that's just the type of person and type of trader I am. I'm going for what's helping me right now. You know, building my savings up. You know, making sure my kids have everything that I never did when I was a kid, and my kids don't want for anything. You know, when I grew up, we didn't live in a house, you know, like this. You know, I didn't have my own space. I didn't have all the shoes and all the clothes and everything. My kids don't have to ask me for anything, and trading has helped me do that.
Wow. I mean, what more can you say? I mean, that's the right way to look at it. I mean, I think a level of maturity, you need to have a level of maturity to be a good, consistent trader. I think if you're chasing, like, don't get me wrong, like I don't want to crush people's dreams. Like if someone's dream is to become a millionaire from trading, absolutely, like it's great to have that dream.
Yeah, and it can happen, but it ain't gonna happen overnight.
That's exactly. It's gonna take years. Like
it's gonna take a long time.
And whatever you think you're gonna make, you know, divide that by 10 because that's probably the reality. You know, however quick you think it's going to take 10 times longer. Like that's just the reality of trading. But set your
I told you.
expectation. No, it's fine.
Yeah,
It's fine.
here's my daughter.
Oh,
Say hey.
hello. Lovely to meet you.
Say hey.
Hey.
All right, go get you.
But yeah.
It's right there, baby.
So you spoke about your man cave. You did it all up and everything with the money from trading. Do you mind showing us the man cave?
Of course, of course. So right here, you got the TV mounted up with the Xbox and everything.
Nice.
My daughter's section, because she thinks this is her room with all her babies and everything. He's on the couch. Her little Hello Kitty, the punching bag right here.
Of course, of course.
So I have a bar on this side. I won't show that. So I don't know if that's allowed.
It's all good. It's all good.
Yeah, okay. And then all my shoes that I have purchased from my payouts and just extra money that I've been making. So sneakers it down. So, a lot of Jordan 4s.
Wow.
A lot of Jordan 1s. So it's a lot of Travis Scotts.
They're not cheap as well. Like I don't know much about sneakers, but I know they're not cheap, man.
Yeah. My son's barber chair, right here. And then every time I walk in, I have these 3 things up here that I try to, live by. So it says execution, stop talking, put in the work, grind to perform repetitive tasks over and over in order to attain a goal, and then hustle, the only controllable pillar of success.
Words to live by. Very nice.
It's
coming on really nice. Is that the man cave done or
it's done. So this is the bar right here, the bar section right here. My daughter's, her stuff. But yeah, it's completely done. Finished it. It's been done for about a month and a half, 2 months now.
Okay, nice. Really good. Nah, but that's awesome. See, you gotta treat yourself. You gotta get yourself comfortable, because once you remove those stresses from life, like you said, you don't need the payouts to survive, but because you have a job, they help.
Yeah.
You trade better as well. It's like a snowball effect. Once that pressure gets released from you, you're not that eager, or you're not that, your emotions don't take control as hard when you are in a losing trade, or if you're not making the kind of money you wish you were making, or whatever it is. Like, everything is just a cherry on top. Everything's gravy. Once your bills are sorted, you can spend it on whatever you like. And fair play, the man cave looks good, man. I'm still gonna set up mine one day.
And then I forgot to show you the best part. So I'm from Alabama, but I live in Texas, right?
Right.
So roll Tide.
Okay, nice.
Yeah, so real big Alabama sports fan. But yeah, I paid for this from trading, and it's been great. The only thing left to do, I'm just gonna put like a little screen up over the garage door, so when I open it, keep insects from coming inside. But it's completely done. My wife did buy me an AC unit, like this portable AC unit that we're gonna get installed for Father's Day, and we're all set. So I literally spend I'm in here more than the actual house.
Yeah, I don't blame you, man.
Yeah.
The house is for the wife, and then you got your man cave. That's the whole point of it, right? The man cave.
Yeah.
That's where you chill.
Oh yeah. So pay for our down payment through trading. We got a new construction house, 4-bedroom, 2.5 bath, 2,200 square feet, hardwood floors except for upstairs. So it has literally changed my life. Watching myself from when I first started to now is I don't know who that person was back then. I don't know how I survived back then, to tell you the truth. But just looking back and seeing, the sacrifices I've made and the how good I've gotten, how happy my kids are, and it's great. Watching your kids not have a struggle. Look, she's chilling.
Yeah.
Not have a struggle, and then my son comes to me, hey, Dad, can I get this? Of course, in reason, yes. My daughter comes to me, hey, Dad, can I get this? Yes. I didn't have that same luxury, and I'm just trying to make sure that they're better off than I was when I was a kid.
Yeah, absolutely. That's a good place. Like it's a good way to look at it, because I think it will keep you more in check, because it means something. Like this is for your family. This is for your children's future. This isn't just for something silly, just a party or whatever. Not you can party all you want, that's fine, but it has like deeper meaning. The reason. So
Yeah, for sure. And that's why I look at it as what bill what bill just got paid with this money I made today. And literally my payout tomorrow is $2,083. That's my mortgage 2,100. My mortgage is paid tomorrow.
that's beautiful, man. That's
You,
really
you
good.
know,
That's really good to hear.
so I'm caught up. Like, every time anytime I get paid or a payout, I pay bills up. I'm literally up. I have credits on all my bills.
Yeah. That's
So
no better feeling than being debt free. You don't have to worry. Like that feeling in itself is worth so much, man.
Well, one day the Giovanni, one of my good friends who's also on the platform with y'all, once he passes, once he passed and everything, he's watched me from when we first started working together. And he was like, man, you've come a long way from back then, so it speaks volumes how, I put my kids first and everything. And that's one of the main reasons why I started trading in the first place was because of them.
Absolutely.
So,
No, that's really good. And hopefully your friend Giovanni, he passes and enjoys the same success that you have,
Oh yeah. So but it's great, man. So the man cave this is my sanctuary. This is where I come to. This is where I come in to chill. Play video. I play video games. Listen to music. I'll be on my computer looking at charts sometimes. But this is where I get away from everything to just reap the benefits of my success so far. So
yeah, absolutely. Now you've had quite a few payouts. I remember when we first interviewed you, you had your first payout. You were ecstatic. You had nothing but good things to say. The other payouts, how were they? Just as
amazing.
fast?
Oh
Any
man,
problems?
no. The what's the one last week? 12 minutes. 12 minutes. 12 minutes. And the one before that was like 32. I'm like I said, what's gonna happen tonight? My payouts for Wednesday. I'm gonna click withdraw at 12:01, and I'm not going to sleep until it hits, and then I'm gonna go to sleep. So I'm literally up. But I got it 12 minutes last time. I was like, dang.
12 minutes, to be fair, is quick even for us.
Man, I was like, that's fast. So the minute it hit my PayPal, I transferred it to my bank. I was like, all right, I'm going to sleep.
Nice.
Woke up, traded, made $2,000, and made another grand the next day. I was like, oh, I'm done. We gonna try this again next week. So I'm gonna take my money. We're gonna try again next week.
Absolutely, man. Keep doing it. Keep doing it. And over $8,000 in payments so far, so that's awesome. Definitely, I can see you. I mean, like we love to re-interview people who are as they progress. I feel like with you, we're gonna have quite a few interviews with you because you're just smashing it, man. You're like
well, like I said, I'm just trying to get on base. I'm just trying to get on base, man. I'm not trying to hit a home run. My payout last week was $1,000, $1,034. I'm cool with that.
Yeah, absolutely.
That's fine. Because what happened, I was up 2,200. I took a loss, and I was like, I could either go chase that loss or I can take my portion and try again next week. And I took my 1,000, tried again, and ended up getting and double that this payout. You know what I'm saying? I'm not greedy. I mean, if the market tried to take all of it, it took a little bit. I was like, you know what? That's just a sign for me not to trade no more. So let me just take my little $1,000 and call it a day, and then we'll do it again next week. And here we are. This is next week.
You really do have good discipline, man, because I'm telling you, 98% of traders would have chased that loss.
I'm not
100%. 100% people would have chased it. So you really do have really good discipline, man, to kind of stop right there, get your money, come back next week.
And come back next week. I mean, I'm not chasing that. I put that trade. I was like, let me see if I can get it up to, let me try to get another $1,000. The market said nope. End up taking that L. I was like, okay. So I was like, I'm done.
Absolutely. And other than the payouts, the general experience of Hola Prime so far,
man, amazing. Man, amazing.
All still good.
But number one, for sure. I just had a guy on Discord. Like, I don't know how he found me. I guess on your socials or something. He hit me up on Discord. He was like, "Hey, how's Hola Prime?" And I think I put "great" in all capital letters.
Lovely, perfect.
Yeah,
perfect.
he was like, "Hi, bro. What's your experience with Hola Prime?" I said, "Great." He said, He said any downside. I said 0.
The thing is, a lot of people, and I get it, people are going to be skeptical. Like, of course, there's so many prop firms that are, let's be honest, not the cleanest, right?
Yeah.
So people are going to be skeptical with it, but that's fair enough. Just give it a shot and give it a try, and we'll prove you wrong. If you're a skeptic, we'll prove you wrong. We can. That's our promise.
Man, y'all did. And so anytime anybody asks me, I'm like, yeah, Hola Prime is it. But yeah, I just like great 0, and I sent him my YouTube clip. He loved it. So hopefully y'all, I need to get me an affiliate code.
Yeah, man. Why have you signed up yet?
I need to get me an affiliate code.
Especially like your friend Giovanni signed up.
And then
a bit of extra money in your pocket there.
another friend of mine who trades prop firms. He's gonna sign up Friday. I just told him about the flash 50 sale. People, 50% off for the next 48 hours.
Yeah.
Look, see, I should be a spokesperson.
You should, man. don't do it too well, otherwise I'll lose my job, man.
Oh no. Sam has to keep his job. But yeah, so I told him about the flash 50 sale. So I told him about that. I was like, for the next 2 days. So make sure you grab your 100K account for $299, Pro or Prime $399. Just whichever one you choose. Whichever one fits you better. But yeah, flash 50 for the next 48 hours, guys. But yeah, it's been great, man. There's no, like, anytime I go on live chat, I like, yo, family. I always say family now because, we family now.
That's awesome, man. And we appreciate it, honestly, man. We really do. We, seeing like your genuine kind of like happiness, it makes us feel good as well. Do you know what I mean? Like, because we do have traders who are like very private, very quiet. They kind of just trade, make their money.
Yeah.
Don't really hear much from them. We try like talk to them. How's everything going? Yeah, all good. And like they just kind of want to, and that's fine.
Yeah.
Like some people just want to be in the background. That's absolutely fine. So when we get a trader, like yourself, who's happy to, just talk and kind of chat with us, like, we feel like we make a connection, and it's awesome, man. And we love to see that progress as well. Because
man, nothing bad. Yeah, I not have one bad bone in my body about y'all at all. Like, I don't even know. Y'all should have started years ago.
Yeah.
That's the only complaint. This should have been up when I was spending all my money with prop firms that wouldn't pay out, or said I did something wrong when I didn't because they didn't want to pay me out. Y'all should have did this years ago.
Well, I mean, technically we were like, but not as like a online prop firm. We were an actual trading floor, and we still are. Like an actual trading floor, but and then we opened up to the online prop firm as we are now, and that's where the name Hola Prime and everything came from. But originally, like we trading floor.
Okay.
We're still traders with us who are actually like in-house traders. So there was that element. I mean, it wasn't really a prop firm. I mean, it was just a trading floor, but like I guess you can kind of call it that, proprietary trading, like in a traditional sense. But we should have probably broke into it earlier. We should have made that move, but
Hey, but you're here now, so that's you're here now, so that all that matters. I see on Facebook that you're in New York a lot.
Yeah, I went to New York. That was because you probably might have seen it, but Carl Anthony Towns, the NBA player. Yeah, he's our like ambassador now.
Wife and I went to New York last year for our anniversary. We loved it. I went to a Knicks game when they played the Nets.
New York's an amazing place, man. Amazing place. But got to meet him. Really nice, humble guy. Awesome shot and advert. Like can't say enough good things about him, man.
That's cool. I gotta come to Texas
as well. I mean, you see basketball players on like the screen. You think,
oh no,
I know they're tall, but my God, like I was like,
he's like what, 6'11", 250? Yeah, like 6'11", 250. Yeah, big guy.
He could grab the basketball like one hand, and it was like I was like damn, man. He is huge, but but really awesome guy, and I love the trip in New York, man. New York is, if anyone's thinking about going to New York, man, absolutely, it's definitely a place you should visit once in your lifetime. I'd say, man, so much to see.
Yeah, my wife and I, we loved it. We went for our 10-year anniversary last year. We stayed in Times Square. Some of the best food I've ever had was in New York.
Oh, man, the food. Oh, Yeah, I can't get over the food, man. Like, I would say some of the best food I've ever had was in New York.
Yeah.
Absolutely.
Ricardo's Steakhouse. Wow.
Didn't go
Amazing.
there, but yeah, I can imagine, man. Like the food is amazing there, and like any cuisine in the world you want, you get it there.
Everything. And
Incredible.
then we did the Central Park tour.
Yes.
Huge. We had a great time, man. We had a great time.
Yeah.
So
Well, that's awesome, man. That's really awesome. I mean, that pretty much wraps it up. I mean, like, just wanted to talk, have a little catch up. Obviously, in the previous interview, if anyone wants to know more about Melvin, his strategy, you do explain it in the previous one a bit better. And we're probably going to do more. And you said next time you're happy to, get your
let me,
charts set up and
yeah,
everything.
yeah. I got to get comfortable speaking to people. Like it's just scalp. I mean, you're a scalper. It's hard to repeat that, because
Yeah.
if once I get in, I'm literally out in a couple minutes, and if you get in late, you could catch that reversal, and then you're out. I just don't like the reason why I don't like. I used to like I said, I had a Signal group and everything, and it went great when people made money, but as soon as they lost money, they're on your head about it, and I don't want that. I don't want that pressure on me. That's why,
Yeah.
if I lose money, if I lose my money, I'm cool.
Yeah, no, I totally get it, man. I totally get it. 100%.
Yeah,
But
if I lose my money, I'm cool. I lose somebody else's money. Now it feels like I owe them. Or, no matter how many wins you gave them in a row, all they care about is those losses.
yeah, no,
And that
absolutely.
goes
I
for
get it.
anything.
Yeah,
But,
no, but whenever you want, the offer's on the table. You can join one of our live sessions. You don't even have to trade live. I mean, if you just want to go through your charts,
yeah, I probably
show
gonna
the
do
kind of
something like
stuff you're
that.
looking at, that'll be awesome because I think the viewers would love to see it as well. Because we get a lot of swing traders, and that's understandable because it is generally speaking what people are most comfortable with. Scalpers are harder to find. Do you know what I mean? So getting a scalper to go live, I mean, that would be awesome, man. And I'm sure the viewers, they loved you as well the previous interview. So you got a fan base growing, man.
Hey man, that's great. That's great. I appreciate everything y'all have done. Customer service is top notch, especially in this prop industry. Y'all respond so fast and answer every single question, and just so you're you're putting the people before the product, and that's one thing that you don't see in the prop industry for real. You want your traders to win, opposed to these other ones. They want you to fail, but y'all actually want your traders to win. Y'all actually want to pay them out. Y'all actually want to see them happy. And, like I say, I talk about y'all so much.
Awesome, man.
So freaking much. I'm telling people who don't even trade, about people who don't even trade about, tell them about prop firms. If you're gonna sign up with a prop firm, this is how it works. You should only go to this prop firm. They have a 50% off sale, guys. Flash 50 next 48 hours. So I literally sent a message to my cousin's boyfriend last night about it. He wants to get into trading because he saw my interview and everything. So, man, it's been a great experience, and you're gonna see me again. Y'all gonna see
100%.
me. Y'all gonna see me again. I'm actually gonna go buy an account today because it's 50% off.
Oh yeah, there you go.
I'm gonna see if I can pass it and then merge it to get 200K. Then I can double up my payout. So we'll see how that works. But
Yep.
man, y'all been great. I appreciate everything y'all done for me and my family. Sticking to the word on the hour payouts. My longest payout's been 38 minutes. The shortest is 12. Literally just had a $6,000 month with y'all last month. With the payout tomorrow, I'm up 22,000. Try to at least tie my record, at least break my record this month. We'll see.
Yeah.
We'll see how the markets treat me. So, but
That's
yeah,
it.
man, it's been great. I'm gonna get so. My man cave is the product of this, and my house. I'll just show y'all the downstairs of it because
Yeah, please, please.
I don't want to walk upstairs.
No worries, no worries. Please, yeah.
I just don't like walking upstairs. But
Oh wow. Oh, it's beautiful, man.
So
Really nice. Open plan.
pizza. Yeah, we had pizza last night. We entertain a lot, so
Okay, very nice,
yeah,
very nice.
yeah. Man, I'll take y'all upstairs. It's not bad. We got my
Is it?
nephew here. Say what
Hello.
up, B. Say hey. Upstairs.
Ah, that's nice. Is that your trading setup there, or?
No, this is my son plays his video game.
Okay, I'm with you. I'm with you.
Yeah, guest bedroom, bathroom, my daughter's little area,
Beautiful.
and then her room.
Really nice, man. It's a big
You know,
house,
so-
isn't it? I know in Texas everything's bigger, but yeah, man. House
everything.
like that in the UK would hard to find, man. We all live in tiny little boxes.
Lofts,
Yeah. Gotta get myself to Texas, man.
Yeah, you have to come. It's great. A lot to do out here. You know, so and then
Absolutely.
every time I walk in, this is the reason I do it. My son, my
100%,
wife,
man.
and my daughter.
You got a beautiful family, man.
Good day and welcome to your financial market news for Wednesday, July 30th, 2025. Let's begin with the foreign exchange market. The US dollar remains firm, holding near a 2-month high as traders await today's Federal Reserve decision. The dollar index trades just below 99, supported by solid economic data and rising geopolitical tension. The euro is under pressure and on track for its first monthly loss this year, following weaker than expected Eurozone GDP figures. Markets reacted negatively to the new US-EU trade agreement that appears to favor American producers. Elsewhere in FX, the Indian rupee weakened after President Trump announced a 25% tariff on Indian imports set to begin August 1st. A powerful earthquake near Russia's Kamchatka Peninsula triggered tsunami alerts, pushing investors into safe haven currencies like the Japanese yen and Swiss franc. With central banks in the US, Canada, and Japan all issuing policy updates this week, traders are holding back on major positions. Now over to the futures and equity markets. The US stock index futures are slightly higher in early trade as investors brace for high-impact events later today. All eyes are on earnings from Microsoft and Meta, which are expected to provide further insight into the health of the tech sector. The Federal Reserve is widely expected to hold interest rates steady at 4.25% to 4.50%. However, the key focus will be on Chair Jerome Powell's press conference and any signals regarding potential rate cuts in September. Strong second quarter US GDP growth estimated around 3% has raised concerns about persistent inflation and delayed policy easing. Traders are closely watching for any shift in tone from the Fed that might impact future rate expectations. Now shifting to the cryptocurrency market, which saw broad-based weakness today. The total crypto market cap dropped below $4 trillion, down about 4 to 5% on the day. Bitcoin fell 0.9%, currently trading near $117,800. Ethereum dropped around 2%, while XRP and Solana both saw declines exceeding 2.5%. On-chain data shows a steep drop in new XRP wallet creation, signaling declining retail activity. Despite this, XRP perpetual futures volume on Kraken surged to $3.48 billion, overtaking Solana futures for the first time this month. This signals strong speculative interest even as overall momentum wanes. Meanwhile, crypto brokerages Kraken reported strong Q2 financials with $412 million in revenue and 19% year-over-year trading volume growth. Assets under custody reached $43.2 billion, reinforcing Kraken's growing role in the market. Several altcoins faced steep losses. A2Z plunged 25% on rebrand news, while Radix tumbled 40% following the death of its founder. At the same time, Solana and XRP full and micro futures contracts were launched on the Thinkorswim platform, expanding crypto derivatives access for retail traders. In regulatory developments, Pakistan's government announced plans to fast-track crypto integration across banking and trade sectors. The move is part of a broader initiative to modernize the country's financial infrastructure. In the US, the market is waiting a long-anticipated White House crypto policy report. While it's not expected to include a directive to buy Bitcoin for national reserves, it may provide a clearer regulatory framework for the industry. To wrap up, today is a pivotal moment for financial markets worldwide. From the Federal Reserve's decision to tech earnings to sweeping moves in crypto, traders are on high alert. Stay tuned for Chair Powell's comments as they may shape the market narrative heading into August. Up next, we have the Trader Spotlight segment with guest trader Moro. Hello, everybody. Welcome back. Moro, is it? Sorry, I'm probably mispronouncing your name. Is it Moro? Mauro? How do I say it? Oh. Just bear with us 2 seconds as some technical difficulties. Just to all the viewers, bear with us just 2 minutes as our guest trader has a little technical difficulty. Still can't hear you. And InvestiGenix is here waiting for our coaches. Yes, we will be back. Back to trading in exactly, well, we have FOMC coming up, so we'll be back to trading a little later. Yes, InvestiGenix, they're just sorting out, there seems to be a technical issue with his microphone. They'll just sort that out and then hopefully we get this going. So do bear with us. In the meantime, I will go through the chat, answer any questions. Sometimes these programs can be a little bit difficult to navigate at first, which is quite common, quite normal. So we do apologize. I think he's just going to try and rejoin.
Come, I will show you how Hola Prime is changing the future of prop trading.
Not like this.
By being on our toes so that you can experience prop trading as it should be, fair and transparent.
We are Hola Prime, the most transparent prop trading firm.
With traders from 175 plus countries and offices all across the globe.
We are the first company in the prop industry to publish daily price transparency report, so our traders can cross-verify their trades and they can trade with confidence and peace of mind.
Let me share the story. In the decentralized Forex market, traders often face pricing uncertainty, but not anymore. To ensure fair pricing every time, we introduced Price Transparency Report.
A daily tick-by-tick comparison with industry data.
We didn't stop here.
No hidden rules.
No unclear trading conditions.
Everything is stated up front,
including prohibited trading practices.
From supreme trading conditions to responsive customer support.
We operate with transparency, sharing every crucial detail with our traders.
That's why traders from 175 countries trust us.
No unfair breaches of accounts. Wherever possible, we send traders preemptive warnings because we hide nothing.
With us, you can scale your account up to $4 million.
And those profits?
We offer up to 95% of the profit splits.
That's 95%.
But what good are profits if you can't access them quickly?
That's why we process withdrawals within 1 hour.
Putting your earnings straight into your hands.
We calculate your withdrawable profits at the end of each trading day, ensuring you get your withdrawals as soon as you request it.
We know what failing a challenge feels like, but we won't leave you alone. After reviewing your account's trades, we'll create personalized videos to help you prepare for your next attempt. Our expert trading coaches and Prime Academy are always ready to help you learn and succeed.
I started as a junior analyst. With clear feedback and growth paths, I've moved into a leadership role.
When I joined here, I was just a graduate. Now, I'm an MBA and a senior manager.
My career has been transformed here, from an entry-level position to a department head.
While others are catching up, we are setting new standards in prop trading every day. Join us today and get funded with transparency.
Behind each face, there's a story. A story of courage, a story of battles fought too soon.
These little fighters take on challenges every day with courage beyond their years. Today, we brought a little bit of magic into their lives, a chance to laugh, to wonder, and to feel like kids again.
So we have arrived at Access Life, which is a very, very important charity. Their main aim is to help and support children with cancer and allow their parents to live with their children.
Hello?
Okay. Yay, it works.
How are you doing?
How are you?
Thanks, I'm
Excellent,
fine, I'm
excellent.
fine.
Is it, do I say your name as Mauro? How do I pronounce your name?
Yes, Mauro, like Mario.
Mauro.
Yes.
Mauro. Okay, perfect. Mauro, well, welcome to the show. We do apologize to the viewers. We did have a little technical difficulty, but it's all
I need
sorted out now.
to apologize.
No, don't be silly. It's all good. It's all good. So, Mauro, we've only got about 13 minutes left, so we'll just kind of go straight to it. How did you start trading? Because you're a trader with us. You're a funded trader, correct?
Yes.
What size account do you currently hold?
What?
What size account do you currently have with us?
I have two accounts. One is 50K and one is 10K.
Oh, very nice. So 60K in capital, beautiful. And how did you start trading?
I start from now is 7 years. When I was 18, I start to study financial market like technical and fundamental analysis. And then I started with my first live account with 500 euro, but I lost. And then I study more for to comprehend the market, the volatility, the news, and technical analyst.
Yes, very nice. So 7 years in Forex. How long did it take you before you started seeing results and it started working for you?
Yeah, it's not simple because every day we need to live with loss and win.
Yes.
So we need to balance and try to make low risk and high profit.
Yes, exactly. No, very good stuff. Could you, for the viewers, we have about 10 minutes left. Could we go through some strategies of yours and how you trade? That would be amazing to see.
Yes, I have. I have some strategy, and I use to more strategy to diversify my trading, such the EA, and and manual too, because today we have much computer and they do something for us, but it's not everything. We need to we need to know the market, the status. For example, we have the correlation. Wait a second.
No problem. If you want to just screen share on Zoom, and then we could see your charts as you explain it. That would be amazing.
Yes. Wait a second.
No problem.
Oh, how I can share here?
If you go on Zoom and just screen share on Zoom itself, and then the back end team can put your charts up.
Okay.
There we go. And
Tell
if the
me
back
if you
end
see.
can pull up Maro's charts. Yes, 1 second. We're just waiting for the back end to put it up for everyone. There we go. All right. We can see.
You can see? Okay. So first of all, we have trend line and support and resistance. And we have such one indicator too, so you can maybe see a confusion, maybe too much line in one place.
It does look very complicated.
First of all, I see from 5 minutes, and I place this yellow resistance or support to when the market reacts, or maybe there is a psychical value. Like I place maybe one here, one here, and this line in red is when the market react like here it touch many time this red line, like, and we have a confirmation by the trend line like this. He touched this like 3, 4 at this one maybe. We have a little inversion from here, so we start from higher point and like resistance here. He touched maybe 2, 3 time here in this one, and we have this resistance, for example, is in red.
Yeah, I see.
And then wait a second. If we go one daily for confirmation, we see
oh wow,
something is overtake my graphics, my graph.
Incredible.
Because here there is the war here in 23. It starts from here 1,800, and you never stop.
Yeah, gold
because,
just kept going.
Because the news event like war and macroeconomic events can be, in this case, is pumped. The gold is very much pumped because I see the platinum that is much rarer than gold, but the value is minus like an half, like 1,000 or 2,000 the platinum.
Yes.
Yeah. 1,300, but
Oh,
it's
yes,
much
yeah.
rare.
Yeah, it's really dropped.
I see,
which is strange.
Yeah. We have same graph, but because the gold is the mom of
yeah,
the mom.
Amazing.
And,
so you do a lot of like channels. I saw you had a nice channel there, a long-term channel. You do trend lines, support, resistance, depending on how many touches. I see fair value gaps as well. You're trading fair value gaps. You're trading a lot of stuff. It's really interesting. Is this multiple strategies that you'd use?
Yes, but because I diversificate. Some time ago, my manual, because I need to wait a point to entry. In this case, I can't go now. Maybe there is a news event, the NFP interest rate decision.
Yeah, we have
in 1
FOMC
hour.
today. Yes,
We will talk about. But if maybe it will be the same, if we build the same, maybe the market dollar go up, and gold will go down again.
Yes.
At this point, probably at this point. If he go up to this point, and he react from here, from this red line.
Will you sell the market if we go up to that point when we get to the red line?
Maybe yes. In this case, yes. But I need to confirm after. Maybe I don't go buy here, but I need to some green candle.
Yeah.
Like
awesome. And you use a lot of fundamentals as well, news and things in your decisions.
Yes, because technical market can be nothing with fundamental.
Yeah.
We are all rich if there is only the technical market.
Yes, absolutely. Well, it looks. And how long do you hold a trade normally? Is it a few days? Are you swing trader, long-term trader?
Normally depends of target point, because can be 1 hour, can be 5 minutes, can be 1 day. Normally I trade automatically, and can be 10 and 20 trade per day.
Wow, that's incredible. And you built this EA yourself? This is your own creation?
No. The something yes,
okay.
because is a little not a normal EA, because I don't know if many people have. I don't know this, but I built the strategy settings by myself. So
yes,
is maybe is unique. I don't know. I don't know.
Well, that's amazing. That's the dream. Have a EA trade for you. If it's working out for you, fair play to you. I would love to have an EA that works very nicely for me. But maybe settings. If you tune it correctly, I can see that working. That's incredible.
Yeah, it's working, but it can't work forever for me, because market change volatility and type of market too.
Yes, of course.
Which bank is doing like Federal Reserve or BCE?
Yeah, absolutely. Well, Mauro, we have unfortunately hit time, but thank you so much for coming on. We hope to have you back on, and we have a bit more time to talk about strategies and charts. But really, thank you so much for coming on and sharing today. It's been an absolute pleasure meeting you.
Me too.
Thank you,
Thanks
Mauro.
to
Thank you.
online,
And
thanks
to the viewers.
Thanks.
Thank you.
Thank you. Goodbye.
And up next to the viewers, we have Ask the Expert segment. So stay tuned. Hello, welcome back, Coach Troy. I hope you had a good little break.
I did. I had some pasta for lunch, which
jealous.
I know you can't have because you're on keto.
Oh, no. I'm so jealous.
I feel your pain. I did keto for about 6 months and decided that it was not sustainable for me.
No, definitely. I'm only 2 weeks in, and I'm the idea of pasta right now. Oh man, I'd sell my left arm for it. But it's fine. It's fine. Well, welcome to everyone. We have the Ask the Experts question or segment. So this, for people who are not aware, the back-end team, the Hola Prime team, have scoured the internet from Discord, Reddit, etc., to find some good trading questions that people have, and we're going to answer them. But if you have your own questions that you would like to ask in the chat, trading related, this is the perfect time to do it. So feel free to drop it in the chat, and we will get to it as well. All right, shall we kick it off? Let's have a look.
Absolutely.
We've got so many questions. All right, let's have a look. Okay. We got, is it ever okay to move? All right. Mind the Gap asks, and this is from Reddit, is it ever okay to move my stop loss further away from my entry to give the trade room? It's a tough one. I wouldn't recommend it just because it can breed bad habits. If you get used to kind of always moving your stop loss, you might start doing it when you really shouldn't be doing it. I can understand, for example, say you get in a trade, you set your stop loss, and you're looking at the order flow and you're realizing, actually, my stop loss might be a bit tight. Maybe I should give it a little bit more room. You decide to move it just a little bit further away. That's okay, I would say. But say it's going against you and you're about to get stopped out and you decide, okay, I'll move it another 10 points down, and then it goes against you and it about to get stopped out. I'll move it again a little bit. That is a no-no. You need to have, in any trading strategy, you need to have a hard stop somewhere. You've got to have an area, a price point where you say, look, if it gets to that, I have to be out the market because I'm wrong. End of story. There's no two ways about it. I need to get out in order to protect my capital. Even if you get stopped out to the tick and it goes in your favor, okay, that hurts and it sucks. But believe me, it's better that happens occasionally than you have one of these long trailing stop losses, essentially, and you end up losing, 2 weeks worth of profits in one trade. It's just not worth it. So stick to your stop loss, generally speaking, I would say.
Yeah, I would agree with that, with one exception. When you're setting up your stops, you should, I call it, look to the left. Look to the left of the chart. Obviously, you don't want your stop to be in front of support. So if you're long and it's coming down to support and your stop is in front of that support, that's a really bad place to put a support, because most likely it's going to come down and test support, maybe even go through support a little bit before it resumes moving to the upside. So there is an exception to the rule about moving your stop, and that would be to fit the market structure. Okay, by market structure, I mean that support, that underlying support area. If you put it in front of that support, I guarantee you're going to get stopped out, and then you're going to be mad because it's going to go 3 or 4 ticks underneath, and then it'll bounce and go where you thought it was going to go. And I think that happens whenever you use a trading platform that lets you have a fixed stop. Like I have a fixed stop of 20 ticks. So the market or the software doesn't know that there's support there. Okay, you're not doing anything. It just automatically puts your stop in at a minus 20. And that's the situation where I use a stop like that. So I have a maximum stop and a kind of a big target. And what I'll do then is, as soon as I get into the position, I look and see where's the right place for that stop. and I'll make an adjustment. What's interesting is that if you have a good entry, then you can actually probably move your stop up. So you want to think of this not as moving your stop, but think of, I need a better entry so that my stop is already appropriate. It's already below support because I'm getting in at a much better entry point. And I can move my stop to actually be less than that 20 ticks or 50 ticks or whatever you've got programmed into your OCO. So I think that it's really important that you don't use a standard stop like a 20 tick. You adjust it to fit the market structure with support or resistance above or below where your entry should be. Once you set it, so I get in the position, I set my stop. Once that stop is set, then it's absolutely hands off. If it comes down and takes me out, it comes down and takes me out. Because again, going back to what Coach Sam said, the worst thing you can do is it starts coming against you and you go, oh, I'm going to give it a little more room. That's the one day that it blows through support and keeps going and has no chance of looking back, and you end up with a fat loss. So take those smaller losses. We always say on here that I want to learn to love losses, right? It's so hard to do that. But if you cap that loss by not moving that stop, you have a chance of getting out of it. And we've seen tons of examples just this morning watching our new guy, Tony B. Shout out to Tony. He had some stops. He got stopped out, but he came right back, took another trade, and made his money. So you can't get worried about a small loss. It's easy to make that back. What you're worried about is having that colossal FU scenario, right, where you lose a giant and you have a giant loss and you have a big hole that you have dug for yourself, especially if you're in one of these $25,000 evaluation challenge accounts where you cannot take a large loss, or you're close to that, the margin, the trailing margin, right? You're so close to that now you have no room to make another trade. You almost have to go down to the micros if you weren't already on the micros, and dig yourself out becomes much more difficult because your usable margin becomes very, very, very small.
Yeah. Well said. Well said. Troy, we do have a question in the chat if you would like to answer that one. I don't know if you have the chat open, but I can read it out for you if needs be.
Yeah. Having lost confidence in myself after a bad trading weeks. Okay, how can I bounce back? So this is going to sound kind of stupid because it's not a short-term solution. It's a long-term solution. So whenever I get down on myself and I've had a bunch of losing trades, I pull back and do something that Michael Jordan used to talk about all the time. He says that you go back to basics. And what that means on a basketball court means that he used to say that he would dribble, okay, just dribbling the ball by himself for 2 solid hours in his practice. And I'm thinking, gee, after about 5 minutes, I'm tired of this, right? 2 hours of dribbling, because dribbling is a core skill. And so I would recommend dropping down to the micro contracts and start going through and saying, I'm going to take every setup that comes up and I'm going to give it I'm only going to risk 10 to make 10. And I just continue, and you're not making a lot of money. You're not losing a lot of money, but you start making 10 and you wait for the next setup. Then you make 10 ticks, wait to the next setup. You try to take away I'm going to manage this trade. No. I'm going to focus on the basics. And what are the basics? The setup, getting the entry right. As long as somebody else, in this case, trade management, you're going to lose 10 or you're going to win 10, becomes somebody else's problem. The computer does it for you. You don't have to focus on that. You can then just focus on that basic skill set of finding the setup, following your rules for the setup, entering, and that's it. Don't worry about trying to fix everything. Fix your trade management, fix your target, fix your loss. Don't worry about that. Let's focus on just the entry. A good entry defines whether the trade is a great trade or just an okay trade, right? We do, and Sam talks about this all the time. He'll say, "I missed it. I missed," and because the good entry was on that short that was at the top, and he got in. He missed it by just a few seconds, and maybe he got in 10 or 15 ticks late, which means that he's late. So that means the entry is already not in his favor. He could have had 10 or 15 ticks of profit at that exact same point and would have been feeling different about the trade at that point. So the entry becomes the most important focus for me when I start having a losing streak. I drop down. I want to do at least 3 to 5 winning trades in a row before I will go back up to the mini or the larger contract, and just focus on one piece of it. And the one piece that's the most important is the actual entry. Now, that being said, if you're a swing trader and you're going for 50 or 100 ticks, we all know that 10 ticks doesn't matter. So your entry doesn't mean as much when you're a swing trader or you're going for a much bigger profit target. But when you're like Sam and you're going for, 15 to 25 ticks, and you're 15 ticks late, that's a big deal, right? That is a huge deal. So you want to focus on that entry and focus on one aspect at a time, and then slowly over time add more to your decision matrix. So first it's, when do I get in? Okay, now I'm in. Now what? Okay, now I need to know where's my target? Oh, my target should be here. And so you then focus on those things and add it. Then you get the whole picture added back in. You've now done the 2 hours of dribbling, right? And you're back into it. Your mindset's back into it because you've had some small winners, and you realize that your setup is a good setup. And we know this inside our brains. We know that it's a good setup, but it's so hard after you have a couple of losses. So I try to go back to basics, drop down my leverage so I can't hurt myself, and focus just on the entry to begin with. I'll focus on other pieces later, but first things first, getting a good entry and recognizing the setup. I know, I'm sorry I went way too long on that. Sorry.
No, it's good. Very well said. And I completely agree. Like, if you have a losing streak and say you lost $1,000, just a random number, the worst thing you could do is try and make that back in one trade. Trying to make, okay, I'm going to hold till my trade goes $1,000 and I'm back, because you're going to, you might have made $200 in that trade, but you're so determined to hit that 1,000 because that's that big figure now in your mind that you need to achieve. You could have been up 200, you could have taken your profit. Now you would have only been down 800. Do that a few more times and you'll be okay. But instead, you get stopped out then at $200, and now you're down 1,200, and it just gets worse and worse. So try chip away at it, rather than trying to do it in one big trade, and definitely don't add positions. Like Troy said, go to the micros or something. Try keep your risk lower. Don't start thinking, okay, well, if I place 5 mini contracts, I only need a few ticks and then I'll be fine. You're very, very dangerous territory if you start playing that game. So, yeah. Let's have a look what other questions are out there. Okay. Discord question, Delta Dude. What a name. What's the best way to use cumulative delta during a trading session? So cumulative delta is actually a really, really good tool. It really is. I wouldn't say it necessarily gives you entries or anything like that. But what you can do is kind of understand the characteristics of the market and kind of see a more broader scale of, oops, I zoomed in accidentally. Yeah, more broader scale of, who's controlling the market. So for example, say the cumulative delta is plus 2,000 to the buyers, 2,000 contracts to the buyers. and we've hit a top and the market starts consolidating, and the cumulative delta when it starts consolidating was 2,000, and then 10 minutes later we're up at 3,000. That's an extra 1,000 contracts have been added to the buy side, right, in that range, but the market still hasn't broken up. Now that kind of can tell you already a little bit of, give you a little bit of insight as what's going on here, right? 1,000 contracts, the market should be pushing up. Why is it not pushing up? Is there absorption happening now? So you can kind of see it on the broader scale, right? You see the same thing on the footprint, but you're seeing it, on each individual price level. But with cumulative delta, you get to see how much absorption is happening in a broad sort of scale. So you can kind of already start figuring out that maybe this market might not push up anymore, and if it does, it's going to need a lot more volume coming in to push up. So maybe I'll be looking to short it, and if you start seeing good aggressive sellers coming in, join them. It might be worth, taking a stab at it, at least for a scalp. So I would say cumulative can help you seeing kind of like a broad scale of who is controlling the market. Obviously, if the volume starts dropping off as well at the end of a trend, you can kind of start figuring out, okay, maybe people are pulling their money out the market now, taking profits. So yeah, it's a very useful tool, especially to glance at every now and then. I wouldn't, stare at it 24/7 every second. It's not that useful, but it's well worth having a quick glance every 5 minutes or so, just check what the cumulative is and see how it's developing.
I would add to that I look at the cumulative delta for divergence. If price is moving up, by definition, people are buying because price is going up. So the cumulative delta should be going up with price movement going up. That would be normal because every time somebody buys, it creates a new contract. And so then the cumulative delta goes up by a +1, right? We know this. However, if you, just like you were saying, if we are at +2,000 and the market sort of goes sideways and the cumulative delta starts going down, that bothers me because that means people are taking profits and are moving out of the, out of the market. And if price doesn't go down, then that diverges because you should see the cumulative delta go down with price action going down. And when they diverge, that's when there's, something is wrong here. The smart money's getting out or the smart money's getting in. So sometimes you'll see the market coming down, but delta continues to go up, which means they're buying into the downward price action. And that almost always signals that a bottom is very close by and a V bottom at that. If you've got strong buying coming in, even when price action is going down, the cumulative delta starts going up. While price action is coming down, man, that's a great time to flip and go long or to cover your short. And same thing on the top side, right? If you're going up and suddenly the cumulative delta doesn't continue to move up with price action, that means that the big boys are selling into all that exhaustive pressure. They're selling off into the strong price action. And so that makes the cumulative delta start to turn over. And to me, when it diverges is when it's important.
Yes. Very, very well said. Great point as well about divergence. Troy, there's a question again, I would say, from InvestiGenix in the chat. And I'd actually love to know the answer to this one as well from your side. It's a really good question. He asks, if you could go back to your first day of trading, what's the one thing you'd tell yourself? And since you've been in the market for 30 years, I would love to know an answer to that one.
I would say that without volume, you're trading blind. And I wish I would have known in the very beginning that volume was such a big piece of projecting direction of the market up or down. And that if a market move happens without volume, you should be suspect of it. And if you see a down move and there's no volume, you should be very suspect. That means if it comes down on no volume, it's probably going to bounce the next day. If it goes up on no volume, it's probably going to go down the next day. So volume, and then volume, of course, is this giant, you know, the elephant in the room is volume. It tells us really everything that's going on. The cumulative delta is a picture of volume. It's just differentiating aggressive buying versus aggressive selling. Order flow, whether it's a footprint chart or just a plain, just having the volume histogram, order flow is the name of the game. And if I was to go back in time, I would say start with volume, learn volume, learn volume, learn volume, learn volume. Everything else will fall into place, because once you understand volume, what is volume really? It's the behavior of the market. It's the buying and selling, and the behavior of the market's what moves price. So volume, I would say volume is by far the number one, and it's the least talked about. We all talk about price action, and probably 80 to 90% of indicators and tools are based on price action. And we should throw those out of the way and focus on volume and volume alone, and you'll become a good trader, because you'll learn to anticipate the behavior, which is, of course, price action, and anticipate how that volume is working. This morning, as an example, Sam said over and over again, I saw sellers were trapped, so I wanted to short it. Or buyers were trapped, and I wanted to short it. And that's looking at behavior. The behavior was buying. There's a whole bunch of them, and it was at the top of the candle. So they're technically trapped up there, and the volume is telling you that. And if you're listening to that, you're going to hit the button really quick and make a real quick short, because what's happened is that there's an imbalance. The volumes have gotten messed up. There's too much buying, and when there's too much buying, the market will correct itself. It comes right back down. There's too much selling, it bounces and goes back up. So as traders, we're looking for imbalances in the market, and to me, the ones that are most available and easy to find are volume. And the other thing about volume that's crazy is that we can look at the super DOM and see the orders and all that stuff going on the price ladder, but we don't know, is that 500 contracts up there, is that a real order? I don't know. So there's some doubt as to whether it's a real order, but when it comes to order flow and volume, it's 100% real. There's no spoofing, there's no nothing. It's real. And so if I could go back to myself 25 years ago, I would have said, throw out all the indicators and focus on studying volume and therefore order flow.
You took the words out of my mouth, Troy. I would say the exact same thing. Volume, volume, volume. The amount of years I spent wasted. I wouldn't say wasted, because I still learn a lot of other stuff, but ultimately the amount of years I could have saved myself, let's just put it that way, learning. Look, stuff like candlestick patterns, okay, they're great. Like, I wouldn't say they're great, but one thing that irks me about candlesticks and candlestick patterns is that there's no actual significance about a candle closing. Like, if you take a 5-minute candle or 1 minute, there's no real significance of the 60-second mark, right? So the candle, imagine the candle closed 5 seconds earlier, it could look completely different. Does that mean, two different things would happen? Not necessarily. Like, what you should be looking at if you're going to do candlesticks and all that is how the candle develops. I would say is more important than how the candlestick closes. Higher time frames candles, like the 4-hour, how it closes has a bit more weight to it. But on the smaller scale, look how the candle is developing, right? Because a candle can close very bullish, like an engulfing candle or something. But the market can instantly reverse still. But that's just because it closed and that second happened to be up there, right? Like, what happened during the whole time that candle was forming? Did it go up and keep jumping down? Did it keep jumping down? Was there a clear sign of something it just couldn't break through? Only because it closed near the top doesn't necessarily mean it's going to just all of a sudden, start rallying up. So volume, however, you don't need to worry about any of that stuff, because volume will literally tell you, yeah, there is actually loads of orders there. You can't see that with a normal candlestick. You're completely blind to it. So you can only pick up on subtle clues that the market's telling you. And the only way you could do that is by staring at how the candle develops in real time if you're not going to use volume, which is obviously a lot more difficult. Why make it hard for yourself? Just use the volume to begin with. It's almost too easy then.
Well, the volume is the volume because it's happening in real time, whereas a 1 minute will look one way, a 5 minute will look another way, a 10 minute will look another way. So you get different pictures with the different time frames that is sometimes very confusing when the volume is what the volume is. There's no 1 minute volume versus 15-minute volume. You're looking at the flow. How is it flowing? Is there buyers trapped? Are they not trapped? Are they aggressive? And you can answer that question constantly all day long on no matter what time period you're looking at, right? Because the flow is the flow.
Yeah, absolutely. Well, Troy, we'll have to wrap it up there. We only got just under 2 minutes left. We'll wrap it up there. Up next, back to trading and FOMC. Oh my God, yeah, FOMC is happening in 2 minutes. So, yeah, we'll see you then. Let's see what happens. It should be an interesting one. I would say if you're in a trade, get the hell out right now. do not be in a trade.
Right.
While FOMC.
Absolutely.
Just as a reminder.
Absolutely.
All right. Back end. Oh, apologies for that, guys. Yeah, it took a little bit longer than expected. So FOMC did just come out. Back end, you have the wrong screen up. Could we remove the screen that's currently up? Perfect. Also, the P&Ls seem, well, my one seems to be wrong. No worries.
Oh, that's mine.
460, 40. Ah,
it's my screen.
Okay.
So what do we have? So FOMC came out and they did not change rates. So rates stayed at 4.5%. The forecast was 4.5%. The only other thing I saw that news-wise was that the Fed recent indicators suggest growth of economic activity moderated in the first half of 25. So they're a little bit concerned that things are slowing down. Fed governors Waller and Bowman dissented, preferring to lower the Fed funds rate by 0.25 percentage point. So that's the first time in a while that we have had not a unanimous decision by the Fed. In the past few Fed meetings, it's always been unanimous. So now we're starting to get a couple of guys that are starting to say, hey, maybe we need to lower the funds rate by 0.25 point. I'm sure that when Powell starts speaking at 2:30, the first thing he's going to say is data-driven. He's going to be talking about data-driven decisions over and over again in his justification for not lowering interest rates. And I think that we should also keep in mind that futures imply traders are now seeing only a 68% chance of the Fed lowering rates at least 25% in September. So still more than a 50% that people believe that will lower in September. And also the federal futures imply traders see a 65% chance of the Fed lowering rates at least another 25 basis points in December meeting. So that's kind of the red headlines that just came out. And you can see that initially we went up just a little bit and then we went down, and now we are right back at the mean, the exact price before the Fed announced. So market did a big ho-hum about the not raising or lowering rates. And I think that what we can't forget is that the Fed think like the Fed. What's the Fed thinking about? And they are worried that as tariffs start to be implemented, that prices will rise as that cost gets passed along to the consumer, and that will then seep into CPI and PPI, and that will then create at a minimum a bump in inflation, and a worst case is that it'll be a rising inflation. And the Fed's just not going to let that happen. You got to think about how the Fed thinks. What are they going to do? They are going to resist inflation at all costs. They're going to resist inflation. Doesn't matter whether the president makes pressure on the Fed. It does not matter. The Fed is going to resist inflation. That's how they're going to think. Now, but we did see a little chink in the armor. In the past few have been 100% unanimous decisions by the Fed. Today, they had two that dissented and said, we want to lower by 0.25 point. So that's the first sort of maybe topping out of the leaving it alone and maybe starting to move to a lowering interest rate cycle. We will have to wait and see, because they certainly did not lower rates this time. And that's all I had to say. Go.
Perfect.
Yeah. And
yeah.
It looks like there is now with the Fed Watch tool, there is a 68% chance of a September rate cut of 25 basis points, and a 65% chance of 25 basis points cut at the December meeting. So at least another 25. So Brazil, and then he's then imposing a universal 50% tariff on imports of semi-finished copper products. So copper just took like a little bit more than a 10% dive in less than 10 minutes here on the copper futures. Pretty interesting.
Yeah, and we will be playing Jerome Powell's speech. In about 15 minutes, so we will be watching it live. See if we can part any of his words. But all in all, I think the major thing was obviously the interest rates haven't been lowered. Okay, we'll be looking at if he's going to give any subtle clues if they will be lowered in the future. Who knows? But still affect the market a lot. So just we're not out the woods yet. We're still very much in the danger zone.
Yeah, definitely. Did you guys? Did anybody hear what I was talking about with the copper by chance, or did anybody hear that?
Yeah, we caught the tail end of it there.
I'll be honest. We caught like the end part. It was quite.
No, that makes sense. I was like, yeah,
doing it again.
Seems like we're having some technical difficulties. I got to hear Troy's beautiful voice easily, no problem. I heard Troy completely, so I think it's just a minor blip here.
Yeah.
Please repeat the copper. Jerome Powell.
It looks like there is the White House was saying that there will be an additional or a universal 50% tariff on imports of semi-finished copper products and copper-intensive derivative products. So copper plunged more than 10%. Actually, it plunged, I think, 20% now. Now that I'm looking again in the last 15 minutes. And then also Trump signed an executive order on an additional 40% tariff towards Brazil, which is bringing the total tariff amount to 50% for Brazil, which is a pretty big deal. So
what's the limit down on copper?
Yeah, good question. I was actually literally just thinking the same exact thing myself. I'm going to give it a look.
That's got to be 20%. It's got to be getting close to the limit down and them shutting down the trading in copper.
Mm-hmm.
I would think so.
Don't get stuck in a position.
Yeah, exactly. Sure. Man, I have nightmares about getting stuck in a limit down market.
Oh yeah.
It goes limit down multiple days in a row. Holy cow, that's painful.
Yeah, I know. I used to trade both physical and financial commodities, and I remember this one guy. It was during the summertime, and he was trading North American lumber. Okay, so lumber future contracts, and it was just like limit down, multiple days. And 2 out of like the 3 days that he could trade, it was limit down like within 4 seconds. He couldn't even, be a part of like the opening auction because there just weren't enough like buyers and sellers to match up together. It was just limit down immediately. So yeah, you can get really caught off sides, especially in illiquid markets.
Yeah. That's the truth, Tony. Fun fact about me, Tony. I used to trade some orange juice futures, so I quite well know the feeling of a limit down market. You want to talk about illiquid and quick limit downs or limit ups. It's very
expensive to
very
trade
interesting
orange juice. Yeah, because if you think about it, how many data subscriptions like we end up needing to have in order to trade futures, Forex, with the different exchanges. And I think the ICE, the Intercontinental Exchange, ICE subscription is like $150 a month. And that's like the lowest tier. So
that's right.
You better be printing money with that. You better be squeezing those oranges for all they can give you.
So true. It's so true.
Yep.
Let's see. Wow. So, I'm no
like...
need to show the charts yet because we're kind of still in like this no man's land. But after that 2 o'clock print, we went down and touched the 23,510 on the Nasdaq, which is that opening range high, bounced right off of there. And like they say, first move is always a wrong move. We went back up, as Troy was saying, to the previous FOMC release price. So, and now we're kind of just languishing, right? The market's going to do what it does until Fed Powell comes out, lays down the hammer.
Right. So we're not expecting huge amounts of things to happen, but right this minute, obviously, it's going to be a little spotty, but. Just, I'm in utter disgust by how this market is looking like.
Oh.
I mean, this is we have another like standard distribution kind of day at the moment. It is as range bound gets until the next 10 minutes here.
Yep.
The profile's a giant D, or you can say this is a P shape with a little bit on the bottom, but mostly I would say this is a D shape.
Yeah. 64.14 is point of control, and we're literally like right there, which is just hilarious. I'm excited for are we going to stream the speech, or are we just going to look at the reaction?
Yeah, we're going to stream it. Yeah. Hopefully it works. We've never tried streaming another stream on stream, so
first time for everything.
Yeah. Well, the good news is that Powell
for the chat.
The good news is that Powell is very punctual, unlike certain other people that have press releases at certain times. It might be half an hour later, right? Powell is very prompt, so it'll be right at 2:30.
Mm-hmm.
I know if he's late or decides to be late or gets hung up in the bathroom, the market will be tanking. Thinking that something's wrong. Let's see.
And Trump also had another headline. I think we'll have a very fair deal with China. And there was one other headline about recent indicators suggesting growth of economic activity moderating in the first half. So I can't remember if you said that, Troy. So that's kind of why on you're starting to see a little bit of that dissent that you mentioned between the governors.
Yeah, they said earlier that the Fed saw that there was some mitigating effects that were causing slowing, and I don't know that I slowing yet. The JOLTS job openings was less than expected. That's kind of one of the first things to start with the employment is you start seeing lessons. But we haven't seen that follow through with unemployment claims or, total number of employment yet.
Right.
That being said, I mean, we went, like I was telling Coach Sam earlier, that I had some pasta for lunch. Well, it was left over we went out to an Italian restaurant last night, and they had a new menu. You know what a new menu means in the U.S.? It means that they've upped their prices. So they now have a new menu. And it cost me $80. $80 before tip. So this was for 3 people. 3 people, it was about $104, I think it was for, and we eat at this restaurant about every couple of weeks or so, and it was just, it would have been $80 with tip. So I mean, they just raised their prices, at least on my one ticket, by $25. Crazy, just crazy.
Yeah.
So I mean, we're seeing inflation. I don't care what they say inflation's at 2 point whatever. I'm seeing inflation. Well, it's in my neighborhood. So if you're the Fed, you got to. This is really hard to offset the inflation potentials and potential that the labor market is starting to weaken.
Troy, I gotta say, the moment you mentioned pasta, Italian food, my mouth started salivating.
I'm
you
so
have
sorry.
no idea. Every cell in my body is craving just
carbs,
a bowl of pasta
carbs.
and pizza and let's be honest, when it comes to like carby food, the Italians do it the best. I mean, 100%. Like, there's not a single bad Italian dish. I am dying for a good meal.
It was ravioli with a whole bunch of cheese on top and a spicy. I like a little bit of pomodori sauce, so it's a little spicy. It's fantastic, fantastic.
And as soon as you mentioned this, Troy, we literally have a headline from Bank of America saying we still have an inflation problem even if Waller is right. So there are other people harmonizing with your sentiment here.
But I gotta say, $100 for 3 people in the meal, that's actually not bad. You pay, I would say that's the price for 2 people in the UK. So
yeah,
I'd be quite happy with actually $100. Yeah.
Yeah, but there's it's a ratio
I'm in
thing,
Tennessee,
like wages. Right. Yeah, exactly.
But I'm just saying
in
is that a month ago, my wife and I could have gotten an appetizer, full blown meal, maybe even some drinks and dessert for under $60, $30 a piece.
Oh wow!
And it's just gone. It's gone from that to almost 100, 80 to 100. So,
I think we're all going to move to Tennessee.
Boston, we don't even talk about Boston. Boston's going to be that same meal is probably what, $150, $200.
That's why I'm staying quiet. Yeah. Preaching to the choir here. Like, come on, I haven't paid for 2 people under $100 like in a long time. Long time.
Yeah.
Man.
Well, you're
Troy,
in
if I lived where you lived,
hillbilly
I
country.
would be like a sumo wrestler. I would be eating all the time. I'm only thin because my wallet won't allow me to in the UK. Oh man.
So yeah, whenever you visit Tennessee, Sam, you'll be eating like a king. That's for sure.
That's right. We eat good here.
I'm right. I remember when I went to Florida. I've never been to Tennessee, but I've been to Florida a couple of times. And the hotel, they had like obviously not all day breakfast, but they had like obviously breakfast buffet and everything. When I don't know what got into me, man, but genuinely, I'm not even joking. I cleared like 4.5 plates of food for breakfast. And it was just like a stack of like plates on my table. I don't know what it was. It was just one of those days where you can eat and eat and eat, and you never feel full. You're just like a human garbage disposal, basically. It's amazing.
There you go,
man.
Well, we're coming up 1 minute here on the speech starting.
Yes. All right, let's try get this going. All right. Oh, the back end are doing it. Beautiful.
Yeah.
Nice.
I love the super nice music before all hell breaks loose.
Yeah.
Yeah. Here we go. When he says good afternoon, it just tanks. Like in that meme.
Good afternoon. We're going to hell.
All right. Any seconds?
Every trader is just like this right now. We're all just like watching.
We need our beads, our beads. Rosemary beads, something like that.
Oh, right, yeah. Here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem.
Just tell me you're cutting in
To learn
September.
more about the likely course of the
Come
economy
on.
and the evolving balance of risks before adjusting our policy stance.
All
we see
right.
our current
More
policy
data.
stance as appropriate to guard
Data-driven.
against inflation risks.
NQ, it's at the second.
We're also attentive to risks on the employment
Yeah,
side
we're at the
of our
second.
mandate. In coming months, we
50%
will receive a
retracement
good
right
amount
now,
of
which
data
is going
that
to be
will help
support.
inform our assessment of the balance of risks.
So we'll
and
probably
the
go into the
appropriate setting of the federal funds
23,600s in
rate.
NQ.
At this meeting, the committee
likely.
continued its discussions as part of our 5-year review.
But it's
of
always
our
tough because
monetary
you're going to get
policy
long
framework.
during an interview.
We focused on potential
right,
revisions
I'll
to
stop
our
talking.
statement on longer-run goals and
No, no,
monetary
you're good.
policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Ooh, that was short.
There we go.
Thanks,
Wow.
Janelle. There's a lot of lean in the markets, and not to mention out of the administration for a
Interesting.
rate cut now in September. Is that
These questions are where we can really see some things happen, though.
realistic at this point?
So,
Yeah, this
as you
is
know,
usually
today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%.
Leave it where it's been,
as I
instantly,
mentioned,
boom.
even excluding
Look at that.
tariff effects. The labor market's solid. Historically low unemployment. Financial conditions are accommodative. And
Wow.
the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow up, by
Instantly
coming months,
back
does
up.
that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
There have been several deals that have been struck, and now we seem to have an idea of what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right, it's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely, effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Neil.
Interesting.
Hi, Mr. Chairman. Neil Irwin with Axios. This morning we got a GDP report in which final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future, for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable, which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because if it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course will be watching that carefully.
Yeah. Interesting.
Thank you. Colby Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, what you want from everybody and also from a dissenter is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think all around the table. In terms of, you asked about the June SEP, I wouldn't, that you're right, that's what it says, and that may well, I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, we haven't made any decisions about September. We'll be monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be, at some point, when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be how the way the economy reacts over time to, slightly looser policy.
Good answer.
Nick Timmeros, The Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. It's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
Wow. So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. We haven't reacted to new inflation, but I mean, I wouldn't insist upon that. But I don't think. I think the base case, as I said, a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation, because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, though. Efficiently, and that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
Michael McKee from
Bloomberg
Television Radio. The one big bill, leaving aside the adjectives, do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say when you think that, the biggest part of the bill was making permanent existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, what do you, well, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost to the government of keeping rates elevated for longer terms
they don't
of
like that.
interest rate charges?
Yeah, no, that's, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that, and it wouldn't be good if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Victoria.
Gold is down right now,
like
28
it.
ounce.
Hi.
Yes,
Victoria
check out the
Politico.
daily low.
When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work, and I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Boy, that was politically correct. Woo!
Yeah.
You didn't step in any
Thanks, Mr.
piles
Chairman.
there.
Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. And if you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy they use this data a lot too, so it's quite important for our economy and certainly for the Fed's work and other government agencies' work that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
Edward.
Yeah, Elmer,
Thank
Bitcoin
you, Mr.
down
Chairman.
to
Edward Lawrence from, Fox Business.
116,800.
How concerned are
Interesting.
you with the data that we're showing coming in, showing no significant
Very
upward
interesting.
trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
How concerned am I that
Good
they say that
question.
again?
The wait-and-see approach is
The
getting
wait-and-see approach, what do you mean by that?
for cutting rates. You're waiting to see if the tariffs will
I mean,
affect
data
inflation.
dependent.
So it's a wait-and-see approach.
Well, so
sort
that,
of
you know, that would, that's, where policy's restrictive. When we start cutting, it'll go toward neutral.
Okay, this delay, though, where you're saying there's a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving, it's not our policy stance, what may be giving, some companies will certainly be taking advantage of the fact of the tariffs and all of the discussion of how they're going to, you know, companies will raise prices when and as they can. And you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't. But what do you know? The price of dryers went up too, just like washing machines. So companies will often just they'll cross the street in a group, if you know what I mean. That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be on goods inflation. And you know, I'll say again, they may be less than people estimate, or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay some of this. Retailers will pay some of this. But you know, we're just going to have to see it through.
And just to follow, if I could, some additional tariffs have been in place since February, and things, you know, really haven't broken yet with the economy. So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that?
Well, so the housing is a special case, right? We don't set mortgage rates at the Fed, right? We set an overnight rate, and the rates that go into mortgages are longer term rates, like Treasury rates. It might be 30-year rates, it might be shorter than that, but it's not the overnight Fed's rate. It's not that we don't have any effect. We do have an effect, but we're not the main effect. There are other things though going on in the housing sector, and one of those is just there's kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with, but then that'll be the case even after things normalize. So I think the best thing that we can do for housing is to have 2% inflation and maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. I mean, we've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
Chris. Fair play.
Hi, Chair Powell.
Not
Thank
bad.
you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation back nearly to target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it could be any of those things, right? But you know, if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty good. So you know, that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? It'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next
He
meeting,
stops talking, I'm going
will
long.
it be dispositive of that? It's really hard to say. We don't make those decisions right now, so.
Oh dear.
Well, I guess just in terms of inflation, though, for example, like some people would point to if it remains
Proper
only in
sell-off.
goods and it doesn't bleed over to services, then
Crazy.
maybe that's evidence
is
that the
blowout.
tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down
I think
closer to 2?
We'll look at everything. It's.
Well, they're pounding it, man.
As I
They're
mentioned,
pounding
a
it.
pretty reasonable base case is that this will be a one-time price increase, and in the end, we'll make sure
This
that
is
that's
insane.
the case. We're just trying to do that efficiently. And efficiently means getting the timing right, so we don't again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and that's effectively what we're doing.
It's one hell of a tail candle.
Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target. Thank you.
So this goes back to the division of labor between the Fed and the Treasury, as you I'm sure know, and the Treasury only speaks to the dollar. It's not something that's been a topic of major discussion at all at the Fed. I won't say it doesn't come up. If the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the US economy? Thank you.
We're monitoring the situation. We do, of course, as you know, during the pandemic, we looked at a whole lot of new kinds of data. People are looking at big data sets that you can get from all sorts of places, and we do all of that. But we really need the government data. Really is the gold standard in data, and we need it to be, to be good and be able to rely on it. And we're not going to be able to substitute for that. But if we have to make do with what we have, but I certainly hope that we get what we need.
Jay O'Brien.
Hi, Mr. Chairman. Jay O'Brien, ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well, it should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us, and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks, and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
Maria Eloisa.
Interesting.
afternoon, Chair Powell. Maria Luisa Capurro from Bloomberg News. You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper income households. How do you see that evolving in the next few months, and how much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape, and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level, and delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same
Yields
thing,
dropping on longer-dated
so
bonds right now.
If you look at the banks,
well.
and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but
Are any of you guys
it's true,
trading
and
during
again,
this?
right in line with what we expected.
No.
The
No,
GDP
it's
data
tough.
that we got this week. So
I made
it's
2
still
trades, I
a
lost
little
one,
bit difficult to
made
interpret
one.
because you have these massive swings in net
It's
exports,
just wild.
which may also be affecting. Some of that can be can affect consumer spending as well. Look, it's one of the data points that we pay most careful attention to, and there's no question that it's slowed. And we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
And just to follow up on what my colleagues were asking about this sense, Governor Waller said that the labor market is on edge, and he was pointing to weaknesses on the private sector. I was wondering, you've said that the main number to look at is the unemployment number overall, but what was the discussion about the state of the private jobs market?
So I'm not going to talk about any individual's, any individual's comments. I wouldn't do that. But I think what we know is that private sector job creation, certainly in the last report we'll see on Friday, but had come down a bit. And if you take the QCEW adjustment seriously, it may be even low, maybe close to zero. But the unemployment rate was still low. So what that's telling you is that demand for workers is slowing, but so is the supply. So it's in balance. Oddly enough, you've got a very low unemployment rate, and it's kind of been there for a year, as job creation has moved down. But also we know that because of immigration policy, really, the flow into our labor force is just a great deal slower, and those two things have slowed more or less in tandem. If you look at things like I mentioned, quits. Look at wages. Wages are gradually cooling. Look at vacancies to unemployment. Those things have been pretty stable they haven't really moved a lot in a full year. So I think if you take the totality of the labor market data, you've got a solid labor market. But I think you have to see that there are downside risks. You don't see weakening in the labor market, but I think you've got downside risks in a world where unemployment's being held down because both demand and supply are declining. I think it's worth paying.
Oh, we lose him.
Nancy Marshall
Yeah,
Genser
looks
with
like
Marketplace.
there we go.
One more question on the lack of unanimity in today's decision, the 2 dissents. Was there talk during the meeting? I know you're not going to talk about exactly what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
Sure. So we have an economic go around where people talk about the economy, and then that's yesterday, and then today we have a monetary policy go around all the way around the table. Everyone gives their views. So the discussion around policy was. The majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. Two of our members felt that the time had come to cut, and that they, for the reasons that they're going to express, I won't tell you the reasons they'll issue some kind of a thing in the next day or so. So, but that's the story, and I would say, you know, well argued, very thoughtfully argued all around the table, good arguments, and you know, it's a situation where unusual situation. The economy is in you know, good shape, but it's an unusual situation where you have risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock, and it's probably not surprising that there would be differences and different perspectives on that, as well as different views of where the neutral rate is, so that different explain their positions very thoughtfully and clearly, and we absolutely had that today, all the way around the table. I would call it one of the better meetings I can recall from that standpoint.
And you've said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it. You know, I said that's why we think policy should be restrictive, is because, you know, inflation is above target. When we have risks to both goals, one of them is farther away from goal than the other, and that's inflation. Maximum employment's at goal, so you have to. That means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, more you know, a neutral stance, and that would be somewhat lower than where we are now. No one knows exactly where that is, so that's the framework I think I'd be taking, and. You know, we'll just have to see. We're going to be obviously looking at a lot of data in the next cycle. It is one of the cycles where we have 2 employment and 2 inflation reports, and we'll see where that takes us.
Jeff Cox.
Thank you, Mr. Chairman, for taking the question. Jeff Cox from CNBC.com. A metric that you like to cite a lot.
What do you think? Right when he gets off the stage, we rally.
That was down to 1.2% in second quarter,
possibly
1.9% in Q1, suggesting that there's some softening in underlying demand. I was wondering if you.
I think the sell-off was a bit extreme.
Some of the housing numbers, the weakness that you acknowledged at the top of your remarks, that the housing market is in fact weak, and the inflation numbers from GDP today came down to 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases, or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but you know, GDP is bumpy quarter to quarter, half to half, and often gets revised, you know, after the fact. The labor market data we still think is continue to think is the best data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages, you know, still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid. Inflation is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that, and again, trying to do the right thing in what is a challenging situation, because you're being pulled in 2 directions, and you have to decide which of those to go in. And actually, at some point, if they're sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not gonna say that. No,
Don't comment.
I just think we're going to need to see the data, and it can go in many different directions. The inflation data and the employment data, and we'll just
master at saying
based
nothing
on all of the data, and based on that balance of risk analysis that I mentioned.
Thank you.
There was a good bit of
Oh,
realism,
dude,
at
that's
least
funny.
in this meeting, though, I will say.
Thanks, Chair Powell. Greg Robb from MarketWatch. The Treasury Secretary has said recently that it would be confusing for the markets if you stayed on as a governor after your term as chair ends. And I was wondering if you had any update for us on a decision on that front.
Sorry, I do not have any update for you. Thanks very much, everyone.
That's
Big
a
boy.
big. Yeah.
All right. Easy last question for him. That was easy for him.
Yeah, I thought you'd go a bit more into that, but it's all good. All right, well, I don't know about you guys, but I was holding in a wee for so long. So I didn't want to hear it.
Classic.
God, Troy, you go first. I'll go next.
There was a lot. I will say, I think a big part of that was that sell-off was the fact that Powell wasn't necessarily, he generally speaking wasn't dovish. He was very even keel and more like realistic on like the thought of prices being passed on to consumers, et cetera, and stuff, which I think. And then also and there was a specific comment where he's like we're not in the our purpose isn't to like worry about growth. He said at one point it's focusing on employment and inflation, and that kind of to me was a relatively important statement. But I don't know if that was an overreaction or not. I mean, really, we've seen way larger moves on FOMC days. We only moved down in total there, 50 points. We've seen over 100 point days where it gets super crazy. So, but
I do think the sell-off was a bit extreme, because he didn't really say anything that groundbreaking, But so there was a bit of an extreme. But again, it's all algos, isn't it? They pick apart his words, and you can really see the battle going on. But crazy stuff.
I think
Troy, are you back?
Yeah.
All right. I'm so sorry, guys, but I really do need to.
Yeah, no worries.
No, take your time.
Go. I think the difference between normal meetings and this one was that he was a slightly bit more direct, I think, in the sense of he was actually saying, I think, what a lot of people are thinking, like, okay, rights or the rates are relatively restrictive right now, and the economy is doing well given this circumstance, and and we always know, he always says we're data dependent, all that. But the fact that he was willing to admit or bring to light, the possibilities with the tariffs and the effect on consumers, I think was the spooky part, where people actually heard him say it out loud. Everybody's saying that, but hearing him say that out loud is a little bit different than just your average Joe Schmo, making a comment regarding it. So,
sure.
Yeah.
I mean, I've been a huge fan of his because, in the past with Bernanke and Alan Greenspan before him, there was a lot of speculation as to, I don't know if you guys remember, you're too young. They had a briefcase they called the briefcase indicator. When Alan Greenspan would come in, if his briefcase looked like it was bulging, they would decide interest rates were going up, or if it was real narrow, interest rates were going down, because he didn't have to support, have the information to support his argument. And, and there was and Alan Greenspan was actually kind of a master at manipulation of the market and manipulation of the press. And that kind of went forward. Bernanke was a little bit less. And then Yellen was even a little bit less. Now you have Powell, and Powell has got to be the most transparent guy we've had in 50 years. And I know that seems crazy because he doesn't seem transparent, right? You're still thinking, oh, I don't know what he's going to do, right? But he's more transparent than all the way back in Greenspan. I was a huge Greenspan fan. I've read his books. The guy's brilliant. Did he do everything right? No. Did he do everything wrong? No. But you know what I'm saying is Powell, at least he's pretty upfront with you. He doesn't mix words. He's like, look, guys, here's where we're at. 1, 2, 3. And here's what I'm hoping to see or not hoping to see. And until I see it, nothing's going to happen. I'm not going to speculate. I'm not going to, right? I mean, he's pretty upfront. And, I love the fact that he always takes the high road when it comes to politics, fiscal policy, and President Trump, or even his own governors himself. He just said, I'm not going to comment on what they said. They can defend themselves, right? So, the guy at least is up, he's at least on the up and up. Yes, it frustrates me that he's waiting. Well, get on with it. If we're going to lower rates, let's do it. If we're not, let's not do it. Move on. Let's move on. Because as the market, we want to know what's happening so that we can go look for the next 6 to 12 to 18 months out. Because that's what the market does. We are forward looking, and this whole tariff, no tariff, inflation, no inflation, employment, no employment, right? It's driving the market crazy. Nobody knows what to do one way or the other. And I think we've just been climbing the wall of worry for the last few months. And we'll just have to wait and see. It's really, really frustrating. But you have to admit that the guy he certainly seems pretty upfront, and, he's not trying to screw with you like, some of the other Fed chairs in the past have, been very coy with the way they word things or don't word things. And remember, we have the dot plot now. We didn't used to have that, so they're trying to be more transparent. Now, whether or not, it's going to make the powers that be happy or not remains to be seen. And it may cost him his job in the end. But, I think that at least no matter what happens on the end of his career, he can say, I followed my mandate. No matter what anybody did or said, I followed my mandate. The Fed did what it was supposed to do. And, and that's all we can all do if whatever job. I followed the rules. I did the best I could. Yeah, so I like it.
Yeah. One of the hardest jobs, honestly.
Yeah.
Definitely.
No win.
Yeah, exactly. Exactly. There's no win to being the Fed chairman unless you are in a absolute just stagnant, relatively stagnant market, or like not even like just a grind. If you're like in a grindy bull market and you're the Fed chairman and things are just then maybe you're okay. But that's like never the case essentially. So there's always something that's going to happen that's a little wild, but. Yeah, no thanks for that job. No thank you. Let's see what news has popped up here. That's
man, they take out the lows, it gets ugly.
Yeah, I know. Really, it's like you just free fall from there. Like we got to start to consolidate right around here.
And also remember, like he really did emphasize the employment data being very important going forward. I think he's very focused on the employment data. So when we start seeing more of that in the next 2 months before the next meeting, we could see some big reactions on those days.
Well, that's because employment is the consumer. If employment starts to go down, consumer spending will start going down, consumer sentiment will start going down. It's sort of the leading edge of what's going to happen to the consumer is employment, right?
Yeah. Yep. All right, we've kind of retesting or getting close to retesting the lows on the day here. Let's see if
Let's see
there's
your
anything
failed
on the
H.
the small one, and now we're making a larger
The
one.
small
But
one. Yeah, that's right. That's
yeah,
right.
isn't that funny? An H within an H.
I know. I know. That's good.
I'm gonna look at the depth of market here and see if there's any bigger bids maybe piling up, and I don't really see anything. Nope, nothing.
Yeah, NQ, it seems like 23,
right.
what is it, 23,390 seems to be the level that we got to hold. If not, then we're going to probably break down a little bit. And then you take out the previous low, and it's like, oof. Yeah, where do we go from there?
Right.
Come on, buyers.
Excuse me.
When I'm looking at the depth of market in the NQ, not a ton going on aside from 23,357 and 23,350. There are some standing bids there that are, I mean, not crazy. I mean, it's like between 40 and 50 contracts each, but they've now been standing there for about 20 minutes. So ever since 3:05-ish p.m. Eastern time, those bids have been standing there. So that's where like the most liquidity is, I think, going in the
Looks like
negative
both both cumulative delta for the ES is negative, and so the Nasdaq is also negative. But Nasdaq's negative by 4,000 contracts versus only a negative of 2,000 contracts for the ES. Yep. So that's pretty significant because Nasdaq usually is a much smaller number, and today it's minus 4,000 versus only minus 2,300 on the ES. That's kind of an ominous. That's kind of scary.
It is indeed.
Let's see what gold is still going down. That's a little interesting. So bonds are getting bought up. Let's just check the ZN real quick. Bonds are kind of flattening out right now, but that's the 10-year. The 30-year is actually making a little bit of a retracement. So yields are let's see. So yep, yields are actually coming back down in the 30, and whoops, yields are going back down in the 30, and they're going up in the 10. So, well, they're kind of stagnant right now in the 10, but the move was down originally, which makes sense. Generally speaking, me and Troy actually talked about this a little while ago. I think it was like roughly the same conversation. In like the shorter term time frame, like in the shorter term, your like the rates being the yields being higher makes sense because they're looking to possibly cut later on. So yields being higher in the shorter term makes sense than being in the longer term.
Sure.
At the moment.
It always is tough on these types of days because everything gets so dislocated.
Yeah.
Elmer asking, do the coaches do long-term investing? Elmer, yeah, I have retirement portfolios myself. I am definitely a sock away, 10% or more if possible of your income into retirement portfolios regularly. Yeah, I mean, as far as picking, specific stocks for my retirement portfolios. Not too much, but I do have a couple that I just put a little bit of extra. I do put a little bit of extra weight on a couple of, blue chip stocks, but nothing crazy. But yeah, long-term investor for sure, as we all should be.
Yeah, why not? Exactly. It's not a bad thing.
No, it's not.
If you can diversify, being a day trader is all well and good, but it doesn't really take that much effort to kind of trade stocks and diversify. Have a nice little portfolio of different stocks and whatnot, and just let it ride, because it's not something you're going to be day trading. It's not something you're trying to make quick money
Scalp
on,
with.
so to speak. It's scalp, exactly.
Scalp with your retirement
so
account.
it's well worth doing it. It's well worth doing it occasionally.
Mutual funds and ETFs. I mean, pretty simple. Just
Sure. You got to be careful of the expense ratios, because some of these things, it's like, 10, 15 year performance, and some of them are like only up 2%. And it's like, are you kidding me? Especially like the bond ETFs. Oh my God, don't even get me started about these bond ETFs. Like these guys at JP Morgan printing money.
Right.
I probably have to preface anything I'm about to say with, I am not a financial advisor. You need to do your own research. This is not financial advice, right? But yeah, like just find a couple of stocks, obviously invest in, S&P 500. Sure, there's no doubt that over a certain period of time, it goes up and to the right, dividend paying stocks. I mean, there's some good dividend paying stocks out there in the oil and gas space, even with oil at like 60, $70. What you do with that dividend cash, it's up to you. But yeah, you should have a retirement account. Set and forget. Hit the buy button, forget about it.
Yeah.
But if you go into like stock specific names, then you got to follow the story. Go ahead.
I hate to interrupt, but we do have lull time right now. So back end is a little kind of break. It's a little fun. We're going to be reacting to some funny trading memes and stuff like that. So back end, roll the sting. Let's go into lull time.
Definitely need that. All that stress with Powell, I'm ready for the laugh.
All right, back end. Let's play lull time. They should do it any second. All right, so we have a video to react to, or videos, sorry, to react to for lull time. So we can hopefully, if the back end wants to put them up, we'll have a good laugh.
Yep.
Oh man.
What's up, baby? Did you miss me? Okay, how can you fully understand the strategy? Go watch another YouTube video? No! I'm not leaving. I'm not leaving.
I'm not fucking leaving! Yeah, after you blew all your accounts.
Oh no! Oh no! Oh my goodness!
Yeah.
Quite a few times.
50 times?
More.
100 times?
More.
200 times?
More.
500 times?
Probably.
But you always say 500.
Gambler. Stay consistent and profitable in trading. Great film, by the way. Great film.
Yeah.
Love it.
Yeah, death stare.
So dramatic.
Seriously, for some trading, it's just
How much I make a year? I mean, even if I told you, you wouldn't believe it. Do you know what would happen if I suddenly decided to stop going into work? A business big enough that it could be listed on the Nasdaq goes belly up. Disappears. It ceases to exist without me. No, you clearly don't know who you're talking to, so let me clue you in. I am not in danger, Skylar. I am the danger.
Remember the last time you used a public restroom?
Oh my god.
Who makes these?
Dimension.
What's wrong with you?
In my business, you don't trust anybody.
So my question is, what is wrong with you? Things you're saying are crazy.
Are you serving man? Or are you serving the one and only master?
Who?
Me. What can you give me? What can you do for me?
I think it's crazy. What is wrong with you?
Oh man. I get it.
Oh man. It's pretty cool though. I might start taking a picture every day. It's dedication, that is. Oh my god, how long does this go on for? What's See this guy properly grow up. I feel like I'm part of his
My
life.
goodness. Classic blaming the market makers. Also a great movie.
wanna know, I wanna know. Can we talk about me and you?
Reach a certain level of scale.
Our goal is to drive top line revenue.
Why are you running? Why are you running?
Oh dear. That's hilarious. A lot of Daryl in this.
Daryl and Sam.
It's not that hard, Scott. Tell him, Wash.
It's incredibly hard.
Hey, anything worth doing is. And we're going to teach you.
Wait a minute.
That's brilliant.
You're my bitch. So don't walk around here thinking you have free will, because you don't. I can crush you anytime I want. So settle in, because you are here for the long haul.
ICT. Oh my god. Don't get me started.
The thing I've ever heard in my life. That's not even trading related, this one. I don't know what that is. Oh.
Oh boy, it's gonna be bad.
Not gold. Never gold. He's just gonna tumble, isn't he?
Don't do it. Don't do it.
He's just gonna like full pelt it and just tumble.
Don't do it.
Oh. Oh no. No, we have to breach every single account.
Oh my god. Oh no. I think there should be sound on this one.
What's that? Unbrokenable.
Yeah, honestly, that's
Oh, yeah.
Never.
It's a great feeling, but why?
Somebody had to do it.
Somebody had to do it.
The entire world seems to be asking the same question. Where is Spider-Man?
Well, you know, I've got nothing to lose anymore, so I don't have anything to be afraid of. You don't have to do that, okay? You don't have to do that.
Habib, no, Habib already.